and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
it's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can...
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open. What a weekend it has been. I would say a weekend and a half with enough news flow for the entire
Be
week.
it global, be it domestic, it's all over the place.
And the kind of reversals that are happening with Trump. No tariff, 15% tariff, 10% tariff. I mean, it confuses everyone, I think.
Yeah,
In a matter of, I think, 42 hours, the tariff rates has been changing. 10, 18, 15, it's very volatile.
Yeah, so anything can happen. Plus, talking about reversals, that's what happened at the match last night as well, isn't it? I think the most exciting part was seeing the Google chief there, Sundar Pichai, enjoying cricket.
And he joined Shastri as one of the commentators as well for a while. So that was very interesting to see him.
Yeah, cricket fans are very superstitious, so I don't know if Sundar being there was good luck or not.
Bad.
Maybe watch the next match from afar.
Probably, that ways. But the expectation in terms of cricket also was that probably India will win. But the way it went, I think people lost interest by around 8:30,
But this is the
9:30.
first match of Super 8. It's okay. There are a lot of matches to play in a round robin format, so we still have hope.
Perfectly. So, okay, there's so much to unpack. I'm just going to get you up to speed on what has been happening because there's Trump, there's tariffs, and there's turbulence. That's the long and short of what we've seen so far. After the Supreme Court struck down on Friday night, India time, after the Supreme Court struck down the legality of the tariffs that the Trump administration had put in place, Trump announced a fresh round of tariffs at 10% and then increased it to 15% after that verdict. Now, Trump says the new tariffs are effective immediately, but a formal communication is not present either on the White House fact sheet, website, or anywhere. So what does immediately mean? The 15% tariffs have been imposed under Section 122 of the Trade Act 1974. Now, this particular act allows the president to impose tariffs for 150 days without congressional approval, but it will ultimately come. Treasury Secretary Scott Bessent has now said that these 15% tariffs will be layered on with Section 232 and Section 301. Very clearly, the attempt of the Trump administration is to bring back their tariffs to where they want it, despite what the Supreme Court has said, by using various other legal tools. Expect legal pushback to the new tariffs. The chief prosecutor who has fought the entire case in court, Neil Katyal, by the way, of Indian origin, his parents were immigrants, has also come out and said this soon after this 15% was announced, saying that this will see legal scrutiny as well. So what does it mean? What are the tariffs and how long will they last? Answer is nobody knows. However, look at the kind of reactions which have come in. On Friday close, US markets closed in the green after the Supreme Court struck down those tariffs. This is how the markets closed. The Dow was about 0.5% up, S&P 500, Nasdaq nearly 1% up. Now pull up futures because since then, a lot has changed, including Trump falling back on other tools to impose fresh tariffs. So, which is why you're seeing Dow futures now about 244 points down. Meanwhile, Treasury yields moved higher as tariffs were deemed unlawful. The 10-year is at 4.08%. Why is this? The belief is that lower tariffs could ease inflation and allow the Fed to cut rates. The Q4 GDP data that came in for the United States kind of got drowned in the middle of all of this, but it's important because it came in soft at 1.4% versus an expectation of 2.5%. And crude prices also spiked as US-Iran tensions are growing. That's also now happening as one side show that you need to keep an eye on. The Brent was at $71. I'm going to pull up Asian markets for you and just give you a sense of what's happening. They're a bit of a mixed bag. All of them opened in the green, but this tariff uncertainty is clearly weighing down. The Nikkei down 1%. Hang Seng is up in the green, but the Shanghai also down 1.5%. India implied is what I want to pull up for you. And though it seems like we will open with a gap up, whether we last there or not is the big question. One other element before we get to our big panel this morning is that the Indian delegation that had to go to Washington and sign the tariff agreement that we had with the United States has paused that visit. They are not going right now. Are there going to be fresh negotiations? So much uncertainty. Saurabh Mukherjee, Founder and Chief Investment Officer, Marcellus, joining us this morning to help us make sense of what's going on. Rahul Chadda, Founder and Chief Investment Officer, Shikara Investment Management, also joining in, as is Anup Vadwan, former Commerce and Trade Secretary. Welcome to all of you, and thank you so much for your time to us this morning on NDTV Profit. Saurabh, I'm going to start with you. I know the implied is showing a gap up opening. Net, what we've seen so far, is this positive India and Indian equity?
I would say on the margin, this is positive because remember 96 hours ago, we were at 50% and now we are at 15. So I can't see how that's going to harm us. Two things to be careful of. It does look relatively clear that Trump will use, I think, what they call 232, Section 232 investigations, which are already underway. I think he'll use that to say there are certain sectors that need special protection. I think those 232 investigations are underway, and my discussions with trade experts suggest that it's a matter of time before Trump uses 232 investigations to impose new tariffs. And by the way, those seem far more defensible from a legality perspective. And the second thing that the trade experts I consulted over the weekend are saying is he'll use something called Section 301 investigations as well, which allow him to target countries that the Americans believe are detrimental to US interests. Again, those are fairly defensible. So his determination over the weekend that these tariffs will go back on suggests that we need to be a little cautious about enjoying the relief rally a little too much. The other aspect is to give credit to Trump and to our trade negotiations. We had tried very hard to get some advantage vis-a-vis China. Right, America wanted to put China on the back foot. We were very keen as Indians to get better terms to export into America than the Chinese have. To what extent those calculations have been upset by the Supreme Court ruling, I don't fully understand, but my suspicion is that piece will need reworking both on the American and the Indian side, so that Indian exports into America enjoy an advantage over Chinese exports into the United States. But overall, as someone who's invested heavily in export-oriented manufacturing companies, I'm looking forward to the relief rally later today.
Okay, Saurabh, so a relief rally is what you're eyeing in today's session. How sustainable is that going to be is anyone's question. Rahul, good morning. Hiral this side. So my question coming to you is, I mean, you have expressed cautious yet, an opportunistic view in the past as well when it comes to US tariffs. Now, when you're talking about even a 15%, a lot of commentators are of the opinion that 15% is not something which is going to be beneficial for a country like India in spite of it being lower than the existing 18%. How are you looking at it? Because there's a constant back and forth happening on that front. In terms of India, how do you see it being placed?
I think, as was mentioned before, near term would be more of a relief rally. But beyond that, I think what markets are more worried about is the air disruption and the job creation in the formal sector. What we've seen in recent months is a momentum build up in the economy post this GST tax rationalization. It's going to be important to watch, does that momentum continue into the second quarter of this year? So again, it's going to be the economic recovery. What we are seeing in the Asian markets open is Korea do well, Taiwan do well. More importantly, China is kind of a bounce back because the biggest beneficiary of these tariffs being around 15 to 18% is going to be China, basically.
Right, that's the important view coming in. But Anup, good morning. Sharad here. The entire trade setup now, we are about to send our delegation there. That negotiation is also coming, it's getting delayed. We don't have the clarity of the dates where the negotiations will again start. So now where does India stand on the trade front?
See, the trade negotiations, I suppose, will resume at some point. But certainly the framework agreement, which presumed that our duties would come down to 18% from the 25% they had become after the Russia duties were removed, that premise is no longer true. Now the baseline tariff, which is the starting point for India, would be 15%. So certainly the framework agreement would need to be renegotiated, and I'm sure that will happen. And I think there have been some statements also from US authorities that wherever countries have entered into agreements with tariffs above this new tariff, this new common baseline tariff for everyone, then that will apply. You can't have a trade negotiation and a trade agreement where your duty ends up being higher than what everyone is generally facing. So certainly that framework agreement under which the further negotiation was to happen, that will get amended. And perhaps that is why the trip to the US has been postponed, because these things will, I guess, need to be worked out. So that is a given. It has to be amended.
Okay, I'm going to ask you three to just hold on for a second. We're cutting across to an important conference call this morning from IDFC First Bank. Please bear with us. This is an important story that we need to address. The IDFC First management is addressing concerns after a huge announcement over the weekend where 590 crore rupees is essentially a discrepancy from their accounts in Chandigarh, and these are Haryana government accounts. Listen in.
As far as the bank is concerned, I'd like to specifically share with you that the bank is now fundamentally in a strong position. So just to share with you that the operating profit of the bank is now crossed 2%, which was earlier 0.5%. So basically, on the core of the bank, the bank is on a very strong position, and therefore the graph is rising. We have already guided to you earlier that on the basis of the trajectory and the incremental unit economics, we expect this to further go upwards of about 3.5% in due course as the bank fully evolves based on the rates at which you borrow and the rate we lend and the margin we enjoy, which is upward of 5.8% or 5.7% last quarter, but this quarter we expect to have 5.8. So on the basis of that strong strength, we feel that this is an incident that will pass. But this incident will not. This incident will pass through the P&L as and when it comes, and we will take it out. But I can tell you, this incident will not pass through our memory because this is a very significant event for us, and we will really just scan every nook and corner of the bank for any such process gaps, if any, or any employee collusion, fraud, etc. And we will make necessary amendments to contain this. From here on, we have done a discussion with our employees last night, across the country, and people have come across and said that they are holding fort very well. They're comfortable with the situation. Every one of them is proud about the fact that they're working with the bank, and the bank is dealing with all matters so clearly, ethically, decisively, and transparently. And they are very proud of the service levels of the bank. They're proud of the technology to provide, proud of the products we provide to the customers, which are really customer first products, about the way we deal with our customers. So there is a strong degree of confidence in a cultural sense. There is a strong degree of confidence in the people. Our board has been taken through the full matter, and they have given certain guidances, but at the same time has full support. We have taken the regulator past the matter, and they have given us their inputs and guidance. We have spoken to a few media channels who talked to us yesterday. So we have done, we have been all of yesterday being involved in dealing with the situation. But I can broadly tell you that the bank is in full control, and transactions across the country will happen smoothly. And this is an isolated case. In the last 7 years, we put up over 1,000 branches, cumulatively maybe over 1,050 or 60, and we have really not seen any incident of this nature that has happened here. So, but this incident is a further opener for us. We will check one more time, implement necessary controls, and keep going. And I do feel that a quarter ahead, hopefully you will look through this incident. So once again, for people who have joined the call, thank you for joining, and feel free to ask the questions, please.
Okay, so the Q&A section is now beginning, and we will get you all updates on what V. Vaidyanathan is saying. It will be on the bottom band on the ticker as well, and we will get you important parts of this. This is an important story to watch. Saurabh Mukherjee is still with us. Saurabh, I'll come to you on IDFC first in a second, but there's so much to unpack this morning. I mean, that frankly for me was a shocker. They realized this only when Haryana government wanted to shift their accounts, that oops, there's less money. Can't get over it. But this is something clearly that the bank is looking at. But to just finish your point on, the impact of tariffs for India, we might open with a gap up. The concern is, and the thought is, this is not going to last long because we don't know what's happening next. And how significant, in your view, is the fact that we've postponed the finalization of our terms of agreement at the 18%?
Yeah. So I think I would split it into two parts. I would say, look, both for Indian companies exporting into America and for the American economy, the worst of Trump's tariffs are behind us, right? With the Supreme Court snub of this scale, I think the worst of Trump's tariffs are behind us. And therefore, the relief rally in the Indian manufactured goods exporters that we are expecting today, while it should be modest, I think this should be the beginning of a new chapter where with the US-India bilateral trade agreement hopefully signed at some stage over the next couple of months, we move towards a far more constructive trade regime with America. And hopefully this is the big win I'm sure the Indian negotiators will aim for. Hopefully we end up with an advantage vis-a-vis our trade rivals such as China, Bangladesh, Vietnam, right? So that's the India piece. From an American perspective, the worst of Trump's tariffs are behind them. Remember, as you flagged up, they've seen slower growth. They've seen inflationary pressures on the back of this. And I think from a US perspective as well, with a snub of this scale, with the midterms approaching, I think Trump will be far less aggressive with his tariffs, and that bodes well for the American economy and for investors like us and our clients in India who are heavy investors in the US economy. Right, over the last 4 years, as you might know, Tamanna, we've invested very proactively in European and American small and mid cap. We've made a lot of money on the back of that, and we hope to carry on profiting from what will be, I think, a more constructive trade regime that the US government will put together. So there will be plenty of noise in the coming weeks as well, plenty of stuff for journalists and investors like us to fret over. But I think the worst of the tariff episode, which started at 2nd April last year, the storm has passed, and gradually I think things will settle down over the next 6 months.
Okay. So, Saurabh, you're saying the storm will settle down over the next 6 months. So, currently, if you are an investor or advising someone who wants to look at the markets, because valuations have somewhere come off in terms of India as compared to where we are. We're still expensive. Would you say it's still time to avoid your export-oriented sectors, which are US-facing, because of this little bit of uncertainty which still prevails? And this is the best time to look at domestic-oriented sectors? And if so, which are the ones where you think the valuations have now started to become reasonable?
I would say the reverse. I think this is the time to load up on export-oriented sectors. I think the coming of AI does mean a setback for the Indian IT services sector. It's a big sector. IT services is a big creator of jobs. It delivers $300 billion of forex. The gradual maturity, call it decline of the IT services sector will lead to a rebalancing of the Indian economy. I think it will lead to a weaker rupee. Rupee weakness, I think, will sustain because IT services was such a big forex generator. The combination of a weaker rupee and these free trade agreements give us a really big chance of becoming a substantial exporter of manufactured products into the Western world, into Europe and America. And I think over the next 5 years, the Indian economy will pivot towards manufactured exports. Many of these manufacturers who are $500 billion market cap today, I think 10 years hence will have $10 billion, $15 billion market cap. And we at Marcellus are spending a lot of time figuring out how much to load up on them. I would be very cautious of loading up on domestic consumption. I think it's been juiced up by the sugar rush of the tax cuts and the rate cuts last year. I don't think that's sustainable. I think domestic consumption will weaken again. And I think India will gradually become a manufactured export-centric economy, much like the Southeast Asian countries have become over the last generation or so.
Saurabh, good morning. Sharad here. We're speaking about IDFC First Bank. Over the weekend, there was an adverse announcement coming in of almost a 590 crore worth of fraud. And we just heard the con call also where the bank has stated that they would be getting in a KPMG as a forensic audit as well. Your initial views on that and what does it mean?
I think, look, there's plenty to discuss there. I'm sure Vaidyanathan ji is addressing many of those concerns on the conference call you flagged today. I think the RBI also should be saying something. Credit to IDFC for doing the call first thing on Monday morning. But I think the RBI also needs to step up and say what exactly is happening here. Because as a depositor in the Indian banking system, both as a CIO of Marcellus, as the depositor in the Indian banking system, as someone who's got personal money in the Indian banking system, if a state government's money can go missing, then what assurance do I have that my money is safe? I'm a little perplexed by what's happening here. I don't fully understand how the employees colluded to defraud the Haryana government, no less, right? So if a state government can be defrauded for hundreds of crores, what protections do we as small depositors have in the banking system? I wish the central bank was doing the same, doing a similar call on Monday morning.
Okay, Saurabh, that's an interesting thing because, if the state government can be susceptible to something like this, absolutely true. What happens to, a layman or someone who is depositing their money with these banks as well? But yeah, that's something which the RBI should get cognizant of as well. But thank you so much for joining in. Always a pleasure to speak to you. It was very interesting because this is not something which is new, right, Tamanna and Sharad, where there are these fraudulent events that take place with banks, and it's usually with the employees who have been involved. So I think what Saurabh is also trying to say is that something when it comes to employees with banks, with the central bank, they need to come in and take a call as to what needs to be done so that all of this can be contained to some extent.
No, I would argue that this is new in the sense of the scale
and actually, look at
target.
the profit. The profit is of a quarterly is 500 crore for IDFC First Bank. And look at the fraud which is happening. That's 590
crores. It's more than the quarterly profits, exactly what Sharad is saying. So.
Yeah, no, but so how they found out is also scary, right? This is when the Haryana government came and said, I want to shut this account and I want to transfer it somewhere else. That's when they go back and see that there's a discrepancy in how much Haryana government thinks it has.
And the date was 18th.
And how much they have.
Yeah.
I mean, that is mind-boggling. I don't know if it's just for employees. I think this is going to go deeper.
It is going to go deeper. And you've seen this in the past with the PNB also, you know, when you spoke, I mean, with the past corporate events that have happened.
But it was never a state government.
Yeah, it was, it was corporates and the banks who were hand in hand with the employees, and now it's the state government who's facing the crunch. But let's see where this goes. And I think this will probably help you look at a lot of other factors in terms of banks as well, and the kind of compliance that they will put in place from here on. I'm sure RBI will come in on this one.
New guardrails might come.
Okay, the recap for the day.
And in terms of the recap as well, it's going to be interesting because the week itself was absolutely interesting. We've seen a good rebound that did come in on Friday's session. After a sharp sell-off is where we've seen that recovery. In fact, we've closed above the 25,500 mark on Nifty 50, but the weakness in IT has continued. So that's going to be a factor we should be watching out for. Your broader markets ended on a pretty mixed note. Stocks like Hindalco, NTPC, they gained the most, and your Thermax, Apar Industries, they were the ones who actually saw some smart moves in the broader markets. Newgen actually led the fall in Nifty small cap. It was down nearly 11% in trade. And for the week, if you go to see, in spite of those ups and downs, that seesaw rides that we saw in the markets, we managed to end in the green, touching a weekly high of 25,800. So watch out for those levels also pretty closely in trade today. L&T, HDFC Life, two top gainers for the week. And your broader markets also underperformed the benchmarks last week. Godfrey Phillip was the top gainer, the kind of gains that did come in 18% on the back of the cigarette price hikes. First Cry, Ola continued to drool under pressure over the week on the back of weak numbers. Commentary, both were down nearly 14% for the week. Sectors, again, a pretty mixed note is what we've seen. IT for the week, third consecutive week in a row where we've ended in the negative. PSU banks, 5% gains, and 3 consecutive weeks where the PSU banking index has been trading in the positive. So watch out for these two sectors also pretty closely. Again, IT, PSU banks in focus, Sharad.
Exactly, but the export-facing companies, they are going to be having at least a positive sentiment initial part of the day. And to look at the entire perspective, you can see the silver prices also going up. The safe haven demand, that's also going up. The technical setup for the market is remaining strong, especially for Nifty. The gap up opening is expected to come in for the US tariff developments which have been coming in, but the best data for the day for me is the FI short covering. That's at a 4-month low. FIs are remaining sellers in the cash market for the second straight day. But remember, the sectoral rotation is at play as the interest in the cement space has not picked up yet. Capital goods, the medium-term setup looks good. Export-oriented stocks, as we discussed, might see a positive momentum in the initial trade. So that is something we should be watching out for.
Okay, some of the factors that I'm looking at, I'm starting with the CLSA note on the Q3 earnings, because remember, at the back of all of this, the core fundamentals of how companies are valued is how they perform. And the Q3 results were largely in line as per CLSA. 44% of covered stocks beat estimates, while 46% were missed. Revenue growth hit an 11-quarter high of 10% year-on-year, excluding Tata Motors. Domestic names outperformed international peers for the third straight quarter. Urban consumption has played comfortably, outperforming rural peers across all metrics. Nifty FY27, FY28 EPS estimates were cut by 0.1 to 0.4%. That's 0.1 for FY27 and 0.4% for FY28. Top earning upgrades include PB Fintech, BPCL, Honasa, and Indian Oil. Rating upgrades outnumbered downgrades by more than 2 to 1. So at the core of it, that should be heartening. As far as markets are concerned, strong recovery is seen for the Nifty and Bank Nifty in the last session. Nifty reclaimed its 20 DMA and smart bounce was seen near 25,400 levels. Cues suggest a positive opening for Nifty on US tariff development. You're seeing that on the implied open, and key support ranges at 25,200 to 25,450. Nifty key resistance range at 25,800 to 26,000. The bank Nifty is touching an all-time high, may be impacted due to adverse news in the banking sector. What you're seeing with, we've been talking about IDFC Bank, but I'll tell you in a second, AU Small Finance Bank is also in the mix of this. The Nifty Bank's all-time high level, remember, is at 61,765. FII shorts are at 4-month lows at 75%, but weaker rupee remains a concern. Just one more point is, I just want to look at the implied for a second. Yes, we will possibly open with a gap up, but can this sustain becomes a big question mark right now because that uncertainty about what's going to happen with tariffs does continue. But let me go across to Puneet for the F&O setup this morning.
Well, thank you for that. So the big news flow coming in on the implied open, led by global factors of what's happened on Saturday in terms of the action by the US Supreme Court. So you could see a lot of shorts being covered in the system. Very important that tomorrow is also the expiry for the Nifty 50. So whatever positions were taken, keeping that in mind, and there has been the risk of taking positions over the weekend, could see some covering. So you're going to be seeing Nifty 50 back at probably the 25,700 level, given what we are seeing at the implied open. But there have been a lack of support levels between 25,500 and 25,900. So it continues to be a very important start, and how much of that can sustain in the names, because we've seen some run up in the export names. Could this be a second leg? Will be something to watch out for. In terms of the Nifty Bank, that also continues to be back above the 61,100 level, around 700 to 800 points away from the highs, but continues to be, could be one of the key indirect beneficiaries of that, given the low weightage of IDFC and AU Small Finance Bank in the Nifty Bank space. But continue to monitor this key aspect as the reading news flow for today. In terms of the foreign investors, they did sell in the cash market, but you all didn't mention the shorts at 75%, and the index long subsequently is at 25%. Is the highest that it has been in the last, especially in the last 2 months, that we've seen from a low of almost 6 to 8% at the start of January. We've seen a consistent build up on this number. And finally, in terms of what we've consistently seen, that a lot of stocks will be in focus, but largely expected to have a strong open in terms of the implied, a very key level of where we can continue to maintain those going forward.
Okay, top stocks on our watch list this morning. No brainer, IDFC First Bank is up there, as is AU Small Finance Bank. Both on the back of news are a thumbs down this morning, and you might see some pain coming in. Here's what's happened. The bank identifies fraudulent activities at its Chandigarh branch and suspends 4 officials pending investigation. A mismatch was found between actual account balances and balances provided to certain account holders. Those certain account holders are the Haryana government. The aggregate amount under reconciliation is around 590 crore rupees. Meanwhile, the Haryana government has urged closure and transfer of these government-linked accounts to another bank. The bank will appoint an independent external agency to conduct a forensic unit. They've also appointed KPMG as auditor after the Haryana government action, and they will be conducting an independent forensic audit in that Chandigarh branch. Meanwhile, AU Small Finance Bank is also one of the banks that Haryana government is saying they're going to de-impanel. They have conducted an internal review post that action. They're saying accounts were opened after completion of KYC. Haryana government now has cut deposits to 538 crore from 735 crore. There is no indication of any financial impact, is what AU Small Finance Bank is saying. No indication of fraudulent activity either. Certain employees have been placed off duty. They're engaging with Haryana government over de-empowerment. I just want to check, Sharad, is there any clarity of what is the problem with AU Small Finance Bank? Because IDFC First Bank is pretty
clear about their view, but AU
that
Small
there was
Finance
590
yes.
crores off.
But they haven't given any number, but they have given a clarification that we'll start our due diligence process as well. So we might expect some kind of a number from there also.
But what is not clear is the reason for the Haryana government to de-empanel them in the first place.
Yes, this has not been known yet.
Yeah, so more clarity on that. I mean, we welcome both IDFC First and AU Small Finance Bank. Please come on NDTV Profit and explain to your investors what is going on. That would be the best way forward. Anyway, HEG is the next one I'm talking about this morning, and unfortunately that's a thumbs down as well. Specific news is not great. Overall sentiment might be fine, but a lot of negative news also coming in. Now HEG, again a company that has been fairly hot. Just pull up its 1 month and its 6 month charts if we can. Their promoters Nivedan Churiwal and Sudha Churiwal has received show cause notices for alleged violation of trading norms. They reportedly traded without necessary clearance and disclosures. Promoters have been advised to immediately sell their stake. So expect some weakness in HEG. The third one as well, unfortunately on my watch list this morning, is a thumbs down, and that is UPL. Now the company has approved a scheme of arrangement to create a listed crop protection platform. It's essentially a demerger. UPL Global Sustainable Agri Solutions is the new entity. So UPL Global is what will list, which will have all their crop sciences businesses all together, including the domestic and the global businesses. Here's what Novama is saying. They've downgraded the stock to a hold with a revised target price of 816 rupees per share. They're saying that unresolved debt overhang stays. So even though they are demerging, the fact is that the total entity's debt is where it's at, and that has been the concern for the street. That has not been addressed. Now, while the split simplifies the structure, it does not reduce total debt. Key risks that they see are cyclical demand, volatile raw material prices, and structural risk posed by increased usage of GM crops, that's genetically modified crops. So those are my first three. I don't know if you guys have something positive.
And with UPL also, the interesting bit is the management is very confident that this will be positive, but none of the brokerages or the street is positive about this entire structural move that's happening, you know.
But I'll just say, Ajay Joshi, the chemical expert, on the weekend he spoke about, now the company becomes a direct competitor to BSF. So this is what internationally most of the agri players or the chemical players are doing. But net stock, there is no fundamental change. The debt concerns is the biggest.
And they continue. So it's going to be interesting to watch out for this one. I do have a thumbs up. We have a Vikram Solar. Now, what they've gone and done is signed a 2,000 crore pact where they've secured 2 gigawatt high efficiency cells from Jupiter. This would actually enhance Vikram Solar's domestic supply chain for critical ALMM compliant components. And these cells are of the TOPCon and Monoperc technologies. Now, why this matters is because this pact is crucial for company as it secures a large volume of advanced ALMM compliant solar cells, and it directly strengthens their domestic supply chain for critical components and reduces reliance on potentially volatile international sourcing. Plus, the anchor shares lock-in opens up as well, and the stock is down nearly 42% since listing. So watch out for this one. Apart from that, Interarch and Quality Power, both of them have actually more than doubled from their IPO price. And for both of these counters, for Interarch Building Products, their 1.5-year share lock-in opens up. So 20% of the total outstanding shares get unlocked. And Quality Power, it's the 1-year lock-in where 54% of the total outstanding shares will get unlocked. So watch out for both these counters. And Narayan Hridayalaya, again a thumbs up because they've acquired a 3.3-acre land in Bangalore to establish a global capacity center. And this is situated in Electronic City. This will facilitate future technological initiatives specifically for establishing a global capacity center, and a dedicated software development center is what they will set up.
Viral, I have some positive stocks also I have kept because Tamanna had a lot of negatives, you had a mixed one.
Yes.
But to put in perspective, Titan I've taken, and it's a very interesting note from Morgan Stanley. You must be wondering, you know, a lot of ETFs, the gold is taking a lot of interest. But nevertheless, Morgan Stanley has stated that these concerns are misplaced. Why? Because consumers' love for gold still continues. Now, they believe Titan has all the levers in place when it comes to delivering a strong customer acquisition, gaining market share, and also a growth momentum. Remember, their market share is 8% as of now. 2 years ago, it was 6%. Also, the Indian industrials, Jefferies is very positive on it. The December quarter order flow that went up 14% on a year-on-year basis, and growth was led by L&T, BHEL, and BEL. And they are very bullish when it comes to the power equipment and the defense space as well. ABB, we also saw good move coming in. Overall orders were 52% up on a year-on-year basis, but of course the margins were a drag. The top picks includes HAL, BL, KEI Industry, L&T, and Hitachi and Siemens Energy, and most of these stocks are technically doing well. This is a very interesting take, the third one. There's an update coming in from Claude. They have launched a security product that's triggered almost a $15 billion cybersecurity sell-off globally. But for the Indian players, like Quick Heal, Saskentech, Explio Solutions, this is sentimentally negative. But remember, most of these Indian cybersecurity listed players are end user oriented, so impact may not be much as compared to what globally it was there.
Okay, so cybersecurity stocks like Quick Heal, Sasken also, that will be in focus. But one stock that we're talking about is a UPL, and on the back of that reshaping that's happening in terms of structure, what it would actually mean for the company, for the investors. My colleague Varsha joins in to tell us more and decode and simplify the structure for us. Varsha, good morning. What do you have for us?
Well, restructuring which is exactly happening in UPL, wherein they're going to carve out their crop protection business and that business will get listed. So two crop protection companies will be merged, and the merged company will be listed as UPL Global. UPL Limited that will remain the holding company, and the transaction will be completed in next 12 to 15 minutes. Now, why they are doing is this to simplify the business, to simplify the structure, to get better valuations for each of their business, and to improve focus and efficiencies. What goes where? The UPL Global, if you see, will contain the entire global crop protection business, and shareholders will get shares in it directly. Onto the holding company, which is the old company, the current one, they'll keep the formulations, R&D and Advanta business. And onto the debt situation. So this is one of the negative points overall in the restructure, because restructuring does not solve the leverage problem which UPL already has. So overall, this debt issue remains a key concern for the restructuring as well.
All right. Thank you, Varsha, so much for that. In fact, let's get in Jay Shroff, Chairman and Group CEO of UPL, and Toshan Tamhane, Group Chief Operating Officer. Let me begin with you, Jay. What will this actually restructuring look like, and what is that strategic rationale behind getting this kind of a restructuring done?
So basically, UPL over the last 50 years has built a very strong platforms. So we have a very strong manufacturing platform, which is called Superform. We have Advanta, the seed business, which is one of the most valuable seed companies in the world. And we have the crop protection business, as you rightly said, is the second largest pure play crop protection business in the world. So we feel that it's the right time to unlock shareholder value in each of these platforms. And this is part of that reorganizing. As you know, we have already filed the DHRP for Advanta with SEBI and waiting for approval. This will be the second part of unlocking value, where the UPL shareholders, UPL Limited shareholders, will get mirror image shareholding partially in the crop protection business. And it will be automatically listed. And then we have Superform, where we could also raise capital and list it, and that is under discussions.
Okay, so Jay, tell me one thing. You're talking about a pure play positioning over here. If being a pure play positioning, entity will improve UPL Global's valuation, if so, how will that be as compared to the previous integrated structure?
So when you have a pure play structure, the decision making for the management team becomes a lot more, and we can be a lot more agile. As you know, the global markets, and we operate in 140 countries. Agility is key to continue to be able to be a leader and gain market share. And we believe that each of these platforms, when they are independently listed, while they are part of the group, will have the ability to make quicker decisions, and therefore continue to grow faster than the rest of the industry.
How we have looked at it is, you have operating performance leading to financial performance, leading to valuation. And we believe that each of these pure plays, the kind of focus that one can have, the kind of capital allocation, unlocks lots of avenues for growth on the operating side and the synergies, which leads to superior financial performance, which hopefully will reflect in the valuations from an investor and board's standpoint.
Okay, so thanks, Toshan, for that. In fact, Jay, if you're talking about manufacturing synergies as well, post the demerger, what are the kind of manufacturing synergies that will exist for UPL, which is the first part, the original business, which will specifically focus on specialty chemicals? And what are the kind of long-term supply agreements between the manufacturing heavy, which will be UPL 1, and the sales focused, which will be UPL Global?
Yeah. So as Superform, we operate as a crop protection. We manufacture crop protection for the UPL Limited, but we have a very strong specialty chemical platform also, where we cater to pharma industry, we cater to paint industry, oil field industry, flame retardants, textile industry, batteries, and those areas. So we have a very strong customer base across, and with the strong manufacturing capabilities and the core competence around so many different chemistries, where we have a very, very strong strength. Now, we think that the ability for us to ride the growth in the Indian GDP, as the Indian GDP grows, the need for specialty chemicals for pharma, for other sectors, for so many sectors, will really help us to continue to grow that and leverage on that manufacturing platform, which we had built originally for just the crop protection business.
I was saying, Jay, I think continuing is the front end and back end. I think we believe the synergies, and that's where I think Hiral, you alluded to very correctly, the supply agreement, make sure that Superform is extremely cost competitive and a very reliable supplier to UPL Global crop protection at the front end. We have seen now in this industry that if your source, the supply is not reliable and is not cost effective, the chances of it affecting your bottom line adversely, which has happened interestingly to many of our peers, we wanted to make sure that with this restructuring, we avoid that. On the same time, we are making sure that the front end will buy from Superform as well as is free to buy elsewhere also, if Superform is either not able to provide or not the most cost competitive, which is not the case. But the crux really is this linkage is what we wanted to maintain, because that's what will make our crop protection entity continue to be a leading position across the markets in the world.
Okay. The other aspect that everyone's worried about is what happens to the debt, because we are talking about $3.8 billion, which has been reported. How will that structure work?
I think if you look at it, all the three entities, the Advanta business is cash generating and is actually, there is no debt in Advanta. Even if you look at the India crop protection business, SAS this year, is actually, there is no debt there. So the net debt is actually negative. So it has also generated cash. All the debt is for in the crop protection entity, which will stay there. So we are not transferring debt anywhere, but the net debt will actually be much lesser, because what you're combining is an entity which has debt with an entity which is net debt negative, which has the cash. So the overall net debt position for this business will be lesser. But if you look at also over the next 12 to 18 months, we will continue to deleverage. As Jay mentioned earlier, the Advanta DRHP is an offer for sale, where UPL will actually be generating cash from the purpose of deleveraging. Over the next 12 to 18 months, we may do corporate action in our specialty chemicals business, which is again very exciting, as well as the internal cash flow generation. All of these three, we believe, will ensure that the net debt position is going to be much better, far in the lesser sub 2, where by the time the listing actually happens.
Is indicating. Very lastly, how about the valuation ratios? What is that final share entitlement ratio for the existing shareholders, and how would this actually account for the remainder 9% minority stake that has been held by, say, TPG, Brookfield in the India business?
I think it's a great question. I think what's happening is that as a part of the reorganization, the 9.09% stake actually merges back into UPL Limited, post which, as a part of the 1:1 vertical demerger, all the shareholders of that entity get shares in UPL Global. And the last step is the merger of the international crop protection business. So the 9.09 stake of TPG plus ADIA plus Brookfield gets subsumed in step 1. There is also TPG and ADIA, not Brookfield, in the international crop protection business, which, as a part of the third step of the merger, gets subsumed for UPL in UPL Global Agri Solutions. So at the end of it, you have a 1:1 demerger. So shareholders of UPL Limited, in addition to their shareholding in UPL Limited today, get additional shares in UPL Crop Protection in the new entity, which I think is a phenomenal addition to and should hopefully help the shareholders of UPL Limited to get value accretion from the crop protection play.
Okay, value accretion from the crop protection play. How much will it be? We'll see once the markets open as well, because the market's not really reading the restructuring well so far. But thank you so much for joining in, Jay and Toshan. Always a pleasure to speak to both of you. We'll quickly slip into a short break. Lots more lined up on the other side. We'll get to trading calls and strategies. And implied open, as of now at least, is giving you a good positive indication. Please stay tuned.
Some moments in life are lifelong. Some memories are lifelong. Blessings are meant to be lifelong. Trust is also placed lifelong.
Heart lifelong, love lifelong, bond lifelong, memories lifelong.
True love is lifelong, isn't it?
Love lifelong, bond lifelong.
We respect our loved ones lifelong too, don't we? Some relationships stay shining lifelong. Just like Tata Power Solar Roof. Best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, welcome back. You're watching India Market Open. I'm going to pull up the implied for you, and a gap up is what is expected. It's a relief rally that could come in because of the fact that 18% tariffs as of now on India from the United States are off the table. You are at the upper end 15%. That also will be subject to negotiation and legal scrutiny. So net, that's a positive from the Indian perspective. But will the uncertainty allow this rally to last is the question. Kush Bora and Parag Thakkar in the studios. Does it feel like a Monday or is it feeling like a continuation of last week?
What Monday? What weekend? Kahan aaya, kahan gaya? It was a whirlwind of a weekend, wasn't it?
Yeah, no, absolutely. I think Trump has kept us all on our toes.
Yes, so that continues. The saga continues.
And I think that will never stop, right?
This saga
we'll be on the
continues.
toes only.
Yeah, this is one of those long binge watching serials. So one episode moves into the other. Having said that, what is your thought on the point that I just made, Kush? That can this gap up actually last or will it be sold into?
पहले मुझे ये बताओ 15% क्यों किया टैरिफ?
No, he wants to go back to 18.
No, I know. I'm saying that the blanket 10% was understandable.
I think under that section 212, the upper limit is 15. If you realize that his press conference, Trump's press conference, was barely 2 hours after the Supreme Court verdict came out. So I think they just wanted to quickly react and show that we're still in charge. So the first thing that came to mind. Then some lawyers must have gone back and said, "Chalo, theek se dekh देख लेते हैं.
Maximum कितना कर सकते हैं.
And then realize that okay, I have 15%, and now Scott Bessent is saying I will layer it with other things.
But anything below 18%, we'll take it.
Yeah, shoot first, ask questions later, right? Yeah,
That's how
that's
they
pretty
react.
much how it's been. So, no, but to your question very pointedly, will this gap up sustain? A little unlikely. See, if you see the last week, we've had this tug of war between the IT and the banking sector, largely led by the PSU banks, and net we closed positive only just, right? 20 DMA conquered, PCR neutral, you've got these few things going for it. But assuming that this gap up comes, you will still not cross Thursday's high from where we fell off. You will be fairly close to that 25,800, 26,000 resistance zone that I've been mentioning for some time. Again, you know, at the risk of sounding like a broken record, let me reiterate. From a medium-term perspective, I'm very positive on the markets. I see a new highs coming in the next few months. That's the kind of positivity I have. But from a here and now perspective, this is a buy on dips market. If you have a long position, use these gap ups, use these big moves to book profits partially, if not fully, and then re-enter at lower levels. This market is giving you those opportunities. Even more interesting is the bank nifty. Definitely the stronger of the two, but 4 weeks of gains, this has clocked. It's at the upper end of the Bollinger Band, so the range is expanding. But if you look at the constituents, SBI, HDFC and ICICI, all three of them have their own set of problems. Like I've mentioned, SBI massively overheated, HDFC, ICICI not doing much. If by chance, because of this IDFC news, the others are not able to offset, the drop, it's actually a good thing for the bank nifty to cool off, correct a little, and then for you to enter, afresh, the risk-reward ratio will be favorable. So I remain very constructive on the markets, but at the same time, any profits that you get should be booked, like I said, partially if not fully, and buy on dips is the texture of the market right now for Nifty and Bank Nifty both.
And Parag bhai, talking about FIs, this is a very interesting data. We have been talking about FI selling. The FI shorts are at 75%. That's a 4-month low. We haven't seen that in a while. Now, does that mean that we are getting attractive as an emerging market? Can we say that? Because Q3 upgrades have also come in.
Yeah, I completely agree with that. That for FIIs, it makes sense to cover the shorts. First of all, the tariff overall is reducing, right? So that way, we are not at we are not in a complete opposition versus US policies. So that way, and plus rupee was at 91. So again, an attractive entry point. So I would say that definitely it makes sense. And earnings, as you rightly said, Q3 earnings, most of the companies have reported good earnings. And next year it is expected that Nifty earnings will grow at least 15%.
But if you see in terms of Q3 as well, your earnings growth, if you talk about profitability, it's way higher in terms of your small caps.
Yeah.
And in pecking order, it comes to mid caps, and last is your large caps. Is that what the FIs will follow according to you?
So in my view, next year, the 35% of the Nifty, which is banks, they will grow earnings at between 13 to 16%, which was not the case this year.
Correct.
Because this year repo rates were getting cut, so margins were getting cut. Now margins will normalize over here and then start going up as the deposit reprices starts. So from, I would say, Q1 or Q2, you will see 15% earning growth in large cap banks, which is 35% of the Nifty.
That's pretty
interesting. Quickly picks.
Yeah, Nifty Bank Nifty तो ठीक चल ही रहा है, stocks में पीछे नहीं रहेंगे. Friday I gave a lot of updates on stocks hitting the T1, T2. Similar is the case right now. Lumax Auto, Torrent Power, Cummins, these stocks went and hit the target too. Also, just to discuss, what the weekly picks that we give on Monday have done in the last 4 weeks. Kirloskar Engine Oil given, last week. T1 hit, Bank of India, T1 hit, APL Apollo and Karur Vysya given the previous 2 weeks, all have gone and hit the T2. Point being that yes, there is a lot of positive traction in the market, and hence my confidence in this in the market, even if the index is consolidating. For today, 3 stocks: Max Financial, Union Bank and Bayer Crop Science. Max Financial is the weekly pick. Very interesting traction on this one. If you see the week on week performance, that's also been positive. 4 weeks of gains. Volumes still going up. So you could buy and hold this positionally. 1935, 2020. These are your targets. 1770 is where you keep that stop loss. Union Bank is something that we discussed 2 days ago for the first target of 193. That's been hit. Now you can buy or hold for 197 and 200 levels. 189 is your stop loss. And Bayer Crop Sciences, just so that my picks don't become extremely financial heavy, there's a variety in this. Bayer Crop Sciences had a good recovery on Friday. Buy and hold for targets of 49.50 and 50.75. Stop loss at 4,700.
Will you buy UPL today? Oh my God.
You know, this one, okay, so from
Sometimes you just answer in sound effects.
Yeah, I mean, everyone knows the response now.
I'll tell you why. This is something like Biocon. Okay, I like to draw these parallels. It's had a good run from a recent perspective, but फिर ऊपर आके ना सस्टेन नहीं करता, दे देता है, तो अगर गैप मिलता है ना, तो इन सब में ना प्रॉफिट बुक करके नीचे बैठ
नहीं, गैप अप नहीं होने वाला है आज, उल्टा होने वाला है।
उल्टे होने वाले तो और भी अच्छा, छोड़ ही दो completely. So not on my list of buying.
Okay, we'll come back to UPL, but let's turn the spotlight back to IDFC First Bank and in that sense to AU Small Finance Bank as well. The Haryana government has de-empaneled the lender after a fraud was detected in government-linked accounts. Recovery efforts are underway. The bank has already engaged law enforcement agencies. This is what the MD and CEO V. Vaidyanathan said in a conference call with analysts this morning.
In terms of financial impact, the discrepancy currently found is about 490 crores. We have additionally, where we have received, I would say, certain reconciliation requirements. So then through the reconciliation, we observed that there is a discrepancy of 490 crores. We have additionally estimated rupees 100 crores. That's how it comes to a 590 crores of impact, which we have put out in the press release. We have put out this number as we could best assess at this point of time, but we feel that the number is broadly appropriate to the situation, current situation. We don't anticipate this to broadly move from here on to a great extent. It could be a small, as we sort of go through the process, maybe these numbers could slightly change.
Aditya Shah, founder of Hercules Advisors, joining in this morning for more on this story. Aditya, I think what's befuddling is the fact that this happened through forged checks. Someone came and pretended to be beneficiaries of the Haryana government accounts, possibly collusion with employees internally. V. Vaidyanathan says it wasn't senior people. And just 590 crores, 490 plus maybe 100 crores is just gone. And nobody knows about it.
So good morning. Before we start, we need to make this very clear. All scheduled commercial banks in India are regulated by the RBI and including IDFC First Bank, your deposits there are completely safe. So the summary of the con call that V. Vaidyanathan just held was galti se mistake ho gaya. So it is very clear that fraud checks were used and to some extent the employees of IDFC First Bank as well as the Haryana government, all of them were involved in the fraud and the shareholders end up losing, from the call I gather, the liability can be as high as 590 crores. So completely unacceptable what has happened at IDFC First Bank. Systems and processes need to get redefined. However, IDFC First Bank is a strong bank. Their quarterly profit is at about 500 crores. So they will be able to absorb this. But the bank says that this is restricted to one branch. But the forensic audit will go on and the entire bank will get audited, and then we will know if there are any other cockroaches in the cupboard. So from my extent, from my perspective, completely unacceptable what has happened. The bank must introspect, bank must redefine its system and processes to move forward. But the stock will have a sharp impact. 500 crores of losses will be booked in this quarter or the next quarter, and this loss accrues to the shareholders. So V. Vaidyanathan has a lot to answer as to what really happened.
Aditya, good morning. Sharad here. You mentioned about the losses getting booked in this quarter. If that happens, you see these deposits going to other banks also. That's actually a very serious commentary coming in. Your view on that?
The bank has clarified that PSU entities, the central government and the state government have about 10% of deposits. We've already seen the Haryana government say that they will blacklist IDFC First Bank. So from my perspective, I don't expect a meaningful growth in deposits for IDFC First Bank. In fact, there will be a negative sentiment for IDFC First Bank. And rightly so, they cannot say that just some employees colluded and the problem is really over. People will have their apprehensions about parking money here in the shorter term. So shorter term deposit growth will be hit. Consequently, the loan growth could also slow down, and meaningfully we will see an impact on the stock today and during this week as well. So shorter term, things don't look good for the IDFC First Bank stock. Shorter term, Vaidyanathan will have to combat. And one of the more important point on the call was Vaidyanathan did say that if we are responsible for the fraud. We will take up the entire liability on our book, which somewhere says that 590 crores of loss is coming to the balance sheet of IDFC First Bank. So not really great. It doesn't also give me confidence that he is saying that this is a one-off incident and it won't happen again. Assurances don't work in a real market. They will have to change their systems and processes so that these frauds don't happen again.
Aditya, a very candid take on this one. And even if Vaidyanathan is talking about taking the hit on the books, in the end, it is going to impact, what investors are looking at. It is going to impact depositors' money as well. With this, you have a AU Small Finance Bank also, which is therein on the back of the Haryana government action. Any take on that front? Because they have yet not come out and said anything.
So as I said, Vaidyanathan does say that multiple parties are involved in this. We don't really understand as to how AU Small Finance Bank is also involved. If AU is also involved and AU also suffers some kind of a loss, mind you, AU trades at a very obnoxious type of valuation, and if AU is also involved, this could be a bigger negative for AU Small Finance Bank given the type of valuation that that bank really trades at. So from my perspective, both IDFC and AU negative for them. They will see a government as well as a PSB as well as some bit of private deposit outflow as well in the shorter term, and this could lead to some bit of growth slowdown for both of these banks, and the stock prices will adjust to this new reality during this week.
Okay. So, other parties who would be involved as well, that's something we will need clarity on. But thank you, Aditya, so much for joining in. Always a pleasure to speak to you and get your views. So clearly there will be a further impact that we could see from here on. And as Aditya was mentioning, Sharad, a 500 crore impact in terms of this quarter. I don't know if that's going to be a possibility.
That means the entire PAT gets wiped
exactly,
off.
because we're talking about 500 crores, which is the quarterly PAT that IDFC first sits on, and you're talking of a number of 590 crores here.
What do you think? The deposits might be going to other peers now? That's
so
what the
basically,
street is fearing?
government business definitely will go away from IDFC.
More than just Haryana.
Yeah, more than just Haryana. That I think is a clear collateral damage. So they'll have to regain a lot of confidence now, and that will take 3 to 6 months in my view.
I think the one point that Aditya Shah also made, and we should also reiterate as a public platform for depositors in IDFC First, if you have an account there, please don't panic and think that something's wrong with your money.
No, I don't think so.
It's nothing like that. That is an important factor. We're looking at it from a stockholder's point of view. And yes, you opening 10% down, expected AU Small Finance Bank opening 10% down, expected. This is the pre-open session because it's a big, huge hole. Now, just on the question of credibility and then the new systems which will have to come in, that compliance will also cost.
Yeah, sure. So basically, whatever recovery people were envisaging in IDFC First Bank because of MFI stress going down for the bank, that people will have to rethink about that, because again 3 to 6 months will go into building up the confidence, and of course internally also, if there is something wrong, they'll have to address it, right? Because this is just a one-day event, so they'll also have to reassess the entire thing, that how this can happen.
Okay, let's look at a few other factors this morning. Your implied open showing a gap up, and you are going to see a positive kind of start to the morning because of what has happened in the last 48 hours with tariffs. Tariffs have been deemed unlawful by the US Supreme Court, and after that the Trump administration has come and increased tariffs first to 10% and then to 15%, but as things stand is lesser than 18% that India would have had to pay. That conversation will start, and you're seeing that in some of the stocks which are export oriented and export facing. That's why Keytex Garment, a textile export company, up about 7% this morning. We should look at a BLW Sona as well. Some of those kind of companies will also be doing well. Auto Ank Exports will also be doing well. So you will see this kind of an impact. However, one of the other big stories this morning is AU Small Finance Bank and IDFC First. The fact that 590 crore rupees belonging to the Haryana government goes missing from IDFC First Bank's Chandigarh accounts is something that the company has come in and explained, and is saying that they will look into, but the fact is that's a hit that will work out on its balance sheet. AU Small Finance Bank has also been now de-impaneled by the Haryana government. They're going to move out all of their accounts. That's why you're seeing AU Small Finance Bank also in that hit. I want to just take a look at UPL very quickly and come to you, Parag Bhai, on UPL. Now, on paper, that demerger sounds like a good idea. But the net debt is going to be a problem. Do you see UPL as a positive development or not?
No, so I would say that, as management said, that ultimate intention is to create value for shareholders and to reduce debt. So if the debt is reducing, as they said, due to OFS of Advanta, when the Advanta IPO comes, and some corporate action, as they hinted, in the specialty chemical business, if they really reduce debt to say 1.5 times net debt to EBITDA, then it will be viewed as a positive thing. But right now, I think as of now, there is no clear-cut indication that the debt is going to reduce just due to this arrangement.
Yeah, they've said also that in the next 12 to 18 months,
So as the debt reduces, the stock will get re-rated.
Okay, so as of now, it should not be someone, I mean, you should not be nibbling at a UPL at this current juncture.
But if it falls, say, below 720, 710, definitely worth a look.
All right. But
because the intention is there to reduce debt.
Right. Just let's pull out the rupee, a very strong opening coming in from rupee. We had mentioned earlier also that there would be a gap up opening, and rupee showing a good strength.
Wow.
That's a good move coming in. But joining us is Amar Dev Singh, SVP Research at Angel One. Good morning, Amar. A good opening coming in for the markets. How are you viewing that, and what will be important sector to watch out for?
Yeah, very good morning, and thank you for having me on the show. So I would say it's definitely a lot to do with the tariffs, and the Supreme Court judgment is also somewhat restrained the hands of Donald Trump. So we'll have to see how it goes forward. Definitely positive for companies from India exporting, as you rightly said, on the textiles or the automobiles, auto ancillary parts and all that. But overall, these sectors are likely to perform well, and as far as the broader markets are concerned, there still we are seeing consolidation, because if I look at Nifty, more or less, it's in a range. So 25,300, 400 on the downside, 25,000, 26,200, 300. So that's a range that Nifty is trading in, trying to form a base. But it will be stock specific action, and more or less we've seen some very good action in the PSU banking space, and that continues to remain strong. Even the metal space, I would say the likes of Tata Steel, that's also still very positive. Any pullback. Looking at some of the pharmaceutical stocks also, they show good potential in terms of Torrent Pharma. So I would say that these sectors could be looked at in terms of textiles, in terms of automobiles, in terms of pharma, and in terms of NBFCs. So these are some, and banking, PSU banks in particular.
Okay, so any specific take on an IDFC first and AU Small Finance Bank?
Yeah, so see, IDFC first definitely did witness a significant rally from almost 50, 55 levels to currently around 83. But yes, as the news also comes in, that would have some impact. And upside, see this stock, if you look at this stock, it really hasn't been able to break out of the 90, 100 band. So somewhere or the other upside, because if you go back in time in September of 23, it had made a high of 100, and from there it had corrected by almost 50%. Again, it's around 83. So it's more or consolidation, but I would say we should wait out. On the downside, yes, the stock is very strongly supported on the 75, 75 and 77, 78 levels, where there could be fresh longs being created, but not at the current levels.
But there's a very important individual because of whom there was so much of, we were in the weekend. But the first thing is Neil Katyal. This is the person. He's the legal.
I think all of us were wondering you were going to say Donald Trump.
No, it was him actually.
But this Donald Trump versus Neil Katyal is turning out to be a very interesting combination.
Very interesting.
Also because he's the son of an immigrant, and when he spoke, of course, an Indian immigrant, and when he spoke about the whole outcome, he talked about, I want to thank my father who's an immigrant, and went into that whole thing. Now, who's Neil Katyal? He is the prosecutor who's actually fought this case and has done a lot of commentary after Trump has increased the tariffs from 10 to 15% as well. Parag Thakur, I want to come to you on that uncertainty bit of it. And this is I would say debate that even Neeraj and I were having on Saturday on whether the worst is behind us or another leg of uncertainty has begun. What is your view? Just to put it out there, my take is that another leg of uncertainty has begun.
Yeah. So my view is also that. I will not take it for granted that worst is behind, and because anything can happen in this world. Immediately 15%, 10%, and then 15%. So the intention is very clear, right? That he wants to impose tariffs. Now, for 150 days, at least this 15% is going to remain. But after that, what again he'll do, the other sections which he can use.
This 15% is also subject to legal
challenges.
Yeah.
So that's what I'm saying. It is a completely evolving situation, and we will not know for sure that what is going to happen finally. We are just hoping that 18% remains the worst case scenario. That's what I told immediately after this thing also on Phoner. That worst case scenario, India is imposed at 18% tariff. That is the worst case scenario.
In a sense, 18% was better than for us than 15%. And I'll tell you why. 18% is still relatively better than China and Bangladesh. If we are all 15%, then
your competitive advantage goes away.
We lose that advantage. Plus, 18% was negotiated with us also giving 0% on certain items. It was a very graded, granular kind of deal. 15% is now blanket. And we've not signed that 18% yet. So
no, I think that's so basically I'll be very surprised if market takes it very, very positively.
Okay, you might have a positive start, but will you maintain it is the question, and it seems maybe we won't. The rupee is open stronger though.
That is a good news. So rupee, US 10-year and crude oil, these three are behaving very nicely. That is a good news in my view. And US 10-year at 4.07 even after this, the fear of $175 billion refund still stays, right? For US.
The fear stays, but I don't think so there will be any impact, because when you talk about that deficit over there, when you're talking about the inflation, that inflation is also inbound and outbound, right? So they're going to put all the pressure on the outbound part of it.
Because US GDP growth also came down. So I'm saying US 10-year if it remains here, if crude oil doesn't shoot up, then we should be okay.
Crude oil is another thing.
Because US-Iran thing is also going
up in the air. What are on charts? Export-facing stocks that you would look at, a KPR mill firing today. So it's a BLS International. I saw some activity on a BLS International also for a bit. What is the kind of move there, or would you look at some of the metals once again? A Hind Zinc, a Hind Copper also showing excitement this morning.
So, irrespective of this news right now, I think metals is one space where I have been positive. Especially the declines have been taken as an opportunity to go long, and that view is still intact for me. Something like a Tata Steel, a Hindalco, that remains positive from a trading perspective. As far as the export-oriented ones go, look at a KPR mill or a Welspun. The rally or the uptick that came after the announcement of the deal, it just fizzled out. So these stocks might just get a fresh lease of life, but again, will it be sustainable? I have my doubts. One, because like you guys just discussed, the uncertainty still prevails. Also, if you see, people are wanting to exit and get out of these stocks at the very first bounce, right? So I wouldn't really be too constructive on these names. Yet again, you would see a similar pattern where if there is a gap up opening, there could be selling pressure coming in, and they might just perhaps consolidate with a negative bias. So metals is still the play to go with.
Metals is still the play to go, and your export-oriented companies, watch out for how they close in today's session. But we're slightly late, but let's go on to a brokerage call for the day. Investec has initiated a buy on Acutaas Chemicals. Varsha joins in with what the rationale is. Varsha, over to you.
Well, everyone is actually bullish when it comes to Acutaas Chemicals, and we have seen the earnings playing out well for the company in the last few quarters, and Investec is also bullish considering the growth prospect the company has. And the investors, according to Investec, the strong growth will continue, mainly driven by a Darrow, which is one of the product that Acutaas has, which treat advanced prostate cancer. Now, the base business and the specialty business will also continue to grow, will have a steady growth according to Investec. But Darrow has a long growth runway, but the company is also diversifying into the other products also, so that it is not dependent on a single product. Now, they are chasing multiple opportunities across business for long-term growth. The company is expanding into electrolytes, semiconductors, chemicals, and of course the new CDMO molecules, which will drive the next leg of growth, especially in FY28, because company is expecting a huge growth when it comes to FY28, and they've also raised their guidance for FY26 and FY27 as well. Investec is also forecasting very strong growth numbers in the next medium term. So they are expecting sales CAGR of around 28%, EBITDA CAGR of around 42%, and PAT CAGR of around 43%. So overall, considering the growth prospect that the company has and the increased management guidance has led to, have an initiate coverage by Investec on Acuitas.
Okay, Acuitas in focus, not showing too much action in the pre-open session, but keep an eye on that. Investec has initiated a buy on the stock. All right, what is hurting this morning? Well, all the stocks that were on our watch list, actually the first 3 on my watch list, all with a thumbs down, are the top 3 losers on the Nifty 500 before we start for trade. IDFC first, UPL, AU Small Finance Bank. LTM, Emphasis, also not doing too great. Another tough day maybe for IT?
Yeah, maybe because Jeffries has downgraded. So I think might be a bad day. So my stand continues. So apart from IT, I also like FMCG. For example, now I have started buying ITC because I think at this price it offers 4.5% dividend yield. And the worst of the taxation is behind. And this time the government has increased tax to such a level that for next 2-3 years, I think there will be no further increase in the taxes. And if you see, the EPS is around 16.5. So trading at below 20 times, around 20 times, and entire money, 90% they'll pay you out as dividend. Plus they have taken price hikes. I think ITC, there is nothing to lose.
So play the FMCG pack. That's the
because there's
safest
so
right
much
now.
of uncertainty. There's so much of. So I'm holding ITC, Dabur, Marico, HUL.
Basically, your India growth story is what you're very strong on.
Yeah, no, I'm saying that this is a safe place to be in right now in this very, very I would say over noisy environment. So FMCG plus the bottom up trigger is this that after.
Wait, the countdown has begun to the Monday morning trade. How big is the gap up? Are we now agreeing that this is going to be net positive for the Indian markets, and will it sustain? You've opened above 100 points, but it is sliding. You're not seeing signs of that gap up sustaining on the Nifty. Those are the first takes. And look at the sharp drop on the Nifty. Nearly 120 points was the first tick, and then you're sliding pretty quickly. Still in the positive though, a little under 0.5% up on the Nifty 50. Let's take a look at what the broader markets are doing. That sheen kind of disappearing when it comes to the broader markets as well. The mid cap now slightly in the red. The small cap though is 0.5% up, which is why you're seeing the advance and decline looking okay. I want to quickly look at the bank Nifty. I want to quickly look at the Nifty IT. 2 important sectors to look at. Jeffries says the pain, AI highlighted in PAIN, is not over for IT stocks. That's why 0.25% down. And you'll see maybe specific stocks sliding faster. Bank Nifty will be dragged down by bad news and fraud in one bank at least. We don't know what's happening with AU Small Finance Bank in their Chandigarh accounts. And that is why the bank Nifty is seeing a little bit of pain. I want to pull up the Nifty heat map. We'll give you a sense of what's happening with the top 50 stocks this morning as we start. Well, on the losing side, Cipla, ONGC because the up and down on crude prices is keeping everything uncertain, especially with what's happening with US, Iran. Are they going to see some kind of a solution? Are they not? Is still unclear, which is why ONGC, one of your top losers. So is Asian Paints and Indigo as oil prices spike. On the winning side, Axis Bank, HDFC Bank. Is IDFC first loss? Axis Bank and HDFC Bank's gain, because remember, Haryana government is going to move all of its accounts. Where are they going to go if they're going to a private bank, and other states may follow? Shriram Finance also doing okay. Max Health, Reliance Industries doing okay this morning, as is Adani Ports. Important news flow on Adani Ports over the weekend, which is why you're seeing that stock up in the green. Wipro and Dr. Reddy's. Dr. Reddy's also has permissions for new drugs, and that's what's working for them. All in all, not a bad start to the morning, but not the kind of pop that was expected. The Nifty implied was showing maybe 140 points up. That has not lasted. That's very clear. You're still about 100 points up. Quickly, Nifty contributors before Hiral comes in and talks about the broader markets. Just let's look at what's pulling up the markets this morning. It's the private banks. The trio of HDFC, Axis, ICICI Bank, supported by Reliance, that is keeping the markets in the green. On the losing side, an Infosys, Cipla, Eternal, and of course an ONGC pulling down the markets, but at least a sentiment positive right now. 25,700 is something that the Nifty seems comfortable above, Hiral.
And what's interesting over here is, the names which are keeping Nifty afloat, they are very strong right now. If they continue to hold on during the day, anyone's guess that we might just stay at current levels and flat with those 0.5% gains. But I think broader markets, as you were pointing out, might be a concern in today's session with the kind of breadth that you're pointing towards. If you see in terms of Nifty mid-cap, again, that's exactly what Tamanna was also mentioning, 21,900, very flat in terms of where the mid-cap goes. And if you have to look at the small-cap index as well, pull up that one on the screens, 0.5% up move continues there. Sustainability is going to be the key because it's mainly short covering that's happening in the markets right now as we speak by the FIs as well, and that's what your FI long short ratio is pointing towards. Individual stocks, IDFC First Bank and AU Small Finance Bank. Pull up those ones on the back of the fraud and the de-empanelment that has happened for government business in Haryana. Both those counters down around 10% and 5.5% in trade. Adani Ports we already mentioned. You have Vikram Solar and Prestige Estates as well that have signed a pact. Vikram Solar trading under pressure. Probably it's the anchor lock-in which is impacting a Vikram Solar and not the 2,000 crore pact that we've spoken about, and a Prestige which is up nearly 1% on another MOU that they've signed. Mutual funds have gone ahead and increased stake in Aster DM. So look at that one on the screens. And Syngene by mutual fund have gone and reduced stake, but both of them slightly in the positive terrain. UPL, another one on the back of the restructuring, mixed views coming in there, and that stock is down 7%. Clearly, brokerages are of the opinion that this is not a major positive when it comes to restructuring because the debt overhang continues to remain. Narayan Rudala as well, on the back of the land acquisition, is in focus, 1.5% up move. Cohance has had a block deal where you have a promoter who has been selling, and that is probably what, in fact, today also there was a block deal, 6% up move on a Cohance. Quality Power, Interaj Building, both of them are seeing anchor lock-ins open up today, trading in the positive, and a RailTel which is in focus on the back of an order win, 2.5% up move coming in on that one. So very interesting names, Tamanna, but I think the key over here is going to be for how long is the breadth going to sustain, because your mid-caps are absolutely flat.
Mid-caps are flat, IT is negative, banks are not doing great, but all your textile companies definitely are. Trident, 7% up now. And this is completely a textile-facing company, an export-facing company. Right now, frankly, the heart goes out to exporters because one day you have 50% tariffs, then you have 25, then you have 18, then you have 10, then you have 15. I mean, how do you even plan your business going forward? For today, for this point, it's good news for them, about 1% up right now. Cohance Life Sciences, like you said, because of that block deal, is doing okay. Wellspun is the other one that's looking good today. As is PCBL. It's actually the losers, news-wise, were dominating, and there you have IDFC First and UPL in focus. Tata Investments also losing some of its steam. But I want to look at the IT pack a little closely, and this is what Jeffries has been saying about IT companies when they actually come out and say that the pain is not over. Let's pull up the internals of the Nifty IT if we can, because what Jeffries is saying that they believe that AI may structurally change IT, its business mix towards consulting while shrinking managed services. But are there any companies the brokerage house is betting on? In fact, we'll go across to Jasmeet in just a bit. Okay, let's go across to Jasmeet for more details.
Well, Tamanna, very good morning and thank you for that. As rightly said, Jeffries Dote mentions that the pain is not over yet and they see the overall structural change coming from the IT on the back of the AI. They see the overall business mix to shrink from managed services and move to consulting and implementation going ahead. Further, they also see Coforge, Agility and IKS remain the top pick and they expect only these three stocks to grow faster compared to the other pack. Well, they have downgraded the entire IT pack on the back of the similar AI fears. They also have given the case scenario where the best case would be the same growth maintained by IT companies what's seen in the last decade, and the worst case could be a 3% lower growth. Now, looking at the downgrade, the key changes they have made in the stocks, firstly, on the Infosys, they have downgraded to hold and have cut the target price to 1290 from 1880. While they also downgraded HCL Tech, downgraded Emphasis, while they downgraded TCS as well to underperform from earlier hold and have cut the target price to rupees 4,300 from earlier 6,175. Now, if you look at the overall pack, they still see the fear of AI coming ahead for the IT firms. So, wait and watch of how does the IT pivot towards the AI services. That will something lead to a re-rating again going ahead.
Okay. So, which is why IT is looking a little dull today. But like we said, it's the home textile companies which are shining. Parag Thakkar, this is particularly good for them.
Yeah, this is good for them because, as you rightly said, this 15% is not as good for India because now we are all at par with other exporters also. But in home textiles, we have a very high market share. So in home textiles, we actually don't compete with Bangladesh of the world or others of the world.
So that's well spun, tried.
So for them, at least the world is set if the tariff is not further increased. So that way, that is positive for some of these companies, some stationery exporters. Who are niche, who are only exporters to the US for that. But for those who are competing with China, Bangladesh, Vietnam of the world, now relatively we are at par with them.
Okay, and I think with textiles, there is some bit of positive momentum that has continued what I'm seeing in auto ancillaries as well. I think, any quick view, Parag Bhai, on that?
So that we need to check on that section 232, what is going to happen, and that we need to again have a check. Some of the products which are taxed at say 25%, now they will come to 15%, and so that can be a benefit in that particular segment also.
Okay, so some buying interest coming in slightly in terms of auto-ang. Kush, any initial opening stocks that you're getting?
Yes, just a quick word on the index. I think this is a good, this is a good move. Rather than opening gap up 200 points higher and then sliding, opening about 80 points, 100 points, up, and then gaining from there, this is sign of strength. So I think my wish of buy on dips may or may not be granted. That doesn't seem like it'll be granted today at least. But yeah, if you have any positions, continue to hold them with trailing stop losses. As far as stocks go, Max Financial and Union Bank, the two stocks that we discussed, are doing well at the high point of the day. I know it's been just 9-10 minutes since market open, but the fact that they opened positive and still gaining strength, I think we should stick with stocks which have strength. So Max Financial and Union Bank continue as buy calls.
Okay, thank you so much, Kush, Parag and Amar for speaking with us today. We're continuing the big conversations this morning on India Market Open. Nitin Bhasin, Head of Institutional Equities at Ambit, joining us this morning. Nitin, a very good morning to you. What do you think are the sort of trepidation or the concerns as far as tariffs go? All things considered, this is good news for any nation that is facing tariffs, including India.
Yeah. So, I've maintained for the last 1 year or so that the tariff imposition by the US government or Mr. Trump, is one of the most confusing moves. We'll keep on seeing new things every now and then. I think the trepidations are, now next what? So I personally think that this is going to remain for a while. This is a tussle, and nobody can say that we are covered for a while. So we are as a house, we are not saying that this is the end of it. This will keep on increasing. I think this actually raises the concerns for Indian companies that they should actually go back and do inward looking on it, that this gives an opportunity for them to say, okay, let's look at better products, let's look at better alliances, go and form more global alliances with other countries or other partners. So it's a wake-up call for all of us in India that, we can't just depend upon one country where it appears that, and that country is hell-bent on actually changing all commercial relationships with all countries in the world. So hence, I would say that the real trepidation should be, we can't just look US, we'll have to build business models, alliances, and cost capabilities and product capabilities for different markets in the world, and put our eggs in multiple baskets.
Nitin, one would say that's exactly the effort, right? With all the free trade agreements that India has gone ahead and signed. But this will take time to transition. The size of the US market makes it one that we cannot ignore or get away with or get away from, at least in the short term. For now, in terms of how equities are responding, is it the sense that the worst is over in terms of tariffs, or are we looking at a new leg of uncertainty?
I would belong in the latter camp, that there will be more uncertainty, as if not. Then we got our US deal also signed. I was not very particularly impressed by despite what deal we got versus the deal what the Americans got over here. Perhaps we investing $500 billion of buying goods worth $500 billion from the US, and no major relief on the relative duty rates to the ASEAN countries. So I wouldn't say that it was a it was a good sentimental thing, but I don't think so it was impacting our Indian economy that materially. I think what we need to think about is, can we actually build businesses where FDI comes in from all over the world, and perhaps we can offer people much faster clearances in putting up projects in India. I think beyond the FTA, there's much more that the government can do in terms of increasing the confidence of the global capital allocators, because global equity markets are going to go through a lot more change as bigger listings of AI companies happen, bigger defense companies in Europe and other parts of the world happen. I don't think so that the FPI will be short of opportunities to participate in other markets, either because of AI listings, defense listings, or manufacturing listings of large sizes in many other parts of the developed and near developed world.
Okay. Nitin, good morning. Hiral on this side. You're talking about the kind of impact we'll see overall. There is some bit of cautiousness. But from a strategy perspective, what are you asking investors to do? Because your outlook in terms of India was slightly negative when it comes to the corporate earnings growth. You found expensive valuations as well as an additional pressure. Where do you stand now? Because Q3 earnings somewhere have been better than what the street was estimating, specifically for broader markets as compared to large caps. Any interest that you see coming back, taking the way valuations have come off slightly? Yes, they're not, I wouldn't say they're cheap, but have come off slightly.
I think one of the things that in my last 1 week of trip in Europe, meeting global investors, it clearly is that people are still very cautious when it comes to India, because the trends are not very certain. And just giving you an example of where the consumption trends came out from the recent earnings quarters also. Consumer durables, pretty much not holding up at all, whereas consumer discretionary doing very well when it comes to, let's say, luxury versus value doing much better. Going to hospitality or retail in the real estate, luxury doing slightly much better than the value. So I think in trends in India, I don't think that we have a one common trend in consumption right now. There were pockets of some surprises of earnings. I think BFSI, especially in the small cap, held up really well. I think consumer discretionary held up really well. But our backward-looking numbers don't see that the earnings trajectory of this year's earnings has changed. We were at about 6-7% Nifty 50 growth. And I think today also we are at 6-7% Nifty 50 growth. In FY27, yes, the whole consensus expects it to grow at about 15%. But most of it, 50% of the incremental growth is supposed to come from banks. Even the consensus earnings suggest that it is banks what everybody is banking upon, or perhaps another 15% of the incremental growth coming from metals industry. So I'm yet not seeing very certain signs in the earnings estimates of the market participants or the recent earnings gone by for changing the trajectory of the earnings. So that's one. Number two, yes, we were cautious on the market last year, and we still remain that it's a very sideways market. It's a stock pickers market. Top 10 stocks will relatively do or lose less or do much better. All the companies more than about 3-4% of weight. We know that the IT stocks have taken a beating, and mid cap and small cap, perhaps we are still about 6 to 9 months away. Some of my colleagues will say even more, but I would say we're at least about 6 to 9 months away. In the broader small cap valuations, perhaps they need more correction before we become very constructive over there. Without saying that, also saying that the small cap BFSI, whether it is MFIs, whether it is regional banks, they look to be a good space because the credit growth, their loan deposit ratios, and the credit cost cycle appear favorable for them.
Okay, so 6 to 9 months away for that cycle to turn valuations to become reasonable when it comes to broader markets. Thank you, Nitin, so much for joining in. Always a pleasure to speak to you as well. But moving on, BEML, that's another stock to focus on. They've reported a revenue-led quarter. Profitability has been impacted by that one-off metro provision, which weighed on the margins as well. Before we get in the management, Shantanu Roy, Chairman and Managing Director of BEML, Puneet joins us to tell us more in terms of what has worked and what is that overall picture looking like. Puneet, over to you.
Well, thank you for that. Multiple key updates coming in for VML this quarter. As you rightly mentioned, revenue grew 23%, but EBITDA plunged by 94% on a YY basis, led by the one-time provision of 80 to 85 crores. Specifically, they mentioned it for Metro, which is under construction. The other expenses also is up 78% in this particular quarter at 255 crores. Although the order book has been maintained at almost 3.9 times its revenue at over 16,000 crores, there has been, Q3 order inflows of almost 1,000 crores. Now, the company has mentioned that they're expected to reach 20,000 crores by the end of this year itself. So, one question will be of where the incremental order flows will come from, given that, Q4 is generally a strong one in terms of order inflow. The other aspect will be of a new capex that the company has, incurred of almost 1,500 crores, approved on 7th Feb. Now, they specifically said this will be a greenfield rail manufacturing facility coming in Madhya Pradesh. So, the timelines of that and the phases where the investment will come. And finally, in terms of outlook, what the company sees in terms of revenue growth for FY27 will be the some key aspects to watch out for.
Okay. So thank you for that setup, Puneet, because lots that has happened there as well. And it'll be interesting to have that conversation with Shantanu Roy, Chairman and Managing Director at BEML, who joins in. Shantanu, good morning and welcome to the show. Always a pleasure to speak to you on NDTV Profit. My first question coming to you is, strong revenue growth, 23-24% is what you're looking at, but a loss that has come in this time around, and this is on the back of cost pressures as well as project-specific provisions that you have made as well. If you could help us understand, is this going to be a one-off, and are the coming quarters absolutely intact where the bounce back will come in, or are you expecting some bit of continuity from here on?
Hi, good morning, and thanks for having me with you. As I had mentioned earlier also, this is a one-off event, and we had to make a provision for a long pending challenge that we had regarding one metro project, which is around 80-85 crores, and it's a one-off thing. If we, remove this particular line item, then we have done much better. We have done pretty well in terms of the EBITDA also, as compared to the same quarter in the last financial year. And, there has been a jump in the year-on-year revenue by almost 24%. If you look at the consolidated sales turnover, that is a top line, there is a growth of, there is an increase of around 8 to 9% as compared to last year's number during this time, that is after the third quarter.
Okay, so Shantanu, with this specific project that you're talking about as well, where your provision has been made, what is the status when it comes to resolving this underlying issue to actually prevent any further provisioning that could be on the cards?
In this, there will not be any further provisioning because whatever we had to do, we have done in this particular quarter itself. And we have brought forward very specifically in this quarter itself. So it will not, it stops here. So there will not be any further provisioning for this particular project. That is, I'm quite sure about it. As far as, this particular project is concerned, another good thing is that with this, we will be able to move forward and complete the project. The execution starts sometime 12 months from now. And we intend to complete this within a period of 12 months from the time we start executing. That is approximately 24 months from today.
Got that. Now, my other question coming to you is in terms of the margin drop, Shantanu. It's a major downtick that has come in on a year-on-year basis. I know raw material costs are rising, so that is one of the major concerns which is not in anyone's hand. But what is the plan to restore margins back to that 13 to 14% kind of a range, which was your previous guidance as well?
As I said, the margin drop is only because of this one-time provisioning. And this will be able to, wipe out by our top-line numbers in the fourth quarter. And with the projects that we currently have in hand, the kind of product mix that we have in hand, definitely the margins will be restored to at least what was there in the last financial year. as far as raw material is concerned, you see raw material cost is rising, that there is no doubt about it. But what we have done is we have rationalized our design and trying to uh, optimize the design so that, even a 1% drop in the material cost has a huge positive impact on the
Got it.
EBITDA, on margins.
Okay.
And
What?
number two, exports. So we expect some revenue from the exports in the last quarter, and that will add to the margin.
Okay. And what about your order book and execution? What's the visibility that you have? Because 20 to 22,000 odd crores is what you're looking at in terms of what you would be approaching. And secondly, Vande Bharat and metro delays that are happening as well. If you have to add all of this to the defense sector growth and your export revenue target that you're talking about right now, a culmination of all of this, what will it mean for your fourth quarter of FY26 and getting into FY27?
No, you want, your question is specifically on the top line or on the order book?
Mainly on the order book, because in terms of the order book, we're looking at a 22,000 crore number, right? Plus, to add to that, there are some delays happening on Vande Bharat, metro delays. So, a culmination of all of that, what does that look like?
So let us look at the order book. The order book of roughly 16,200, 16,300 crore that we currently have. It is made up of 68% from the rail and metro, 25% from defense, and around 7% from mining. Now, if you look at the order inflow this year, 50% has come from rail and metro, and roughly 25% each from defense and from mining, the mining vertical. In the coming 1 month or so, we are further looking at the orders mainly coming from the rail and metro, almost 80%, and the balance will come from defense and from mining construction. Now we have emerged, L1 in one of the international tenders. It's a sizable order for mining. We are just waiting for the details, and we expect that once the contract, we expect to sign the contract also as and when it happens. Number two, we are trying for a order for the metro rolling stock from Africa, and it depends on the financial closure. As soon as the financial closure happens, we'll be having that order. So in defense, we expect some 1 or 2 good orders to come to be finalized in the last month of the financial year. So with this, I'm pretty confident that the order book will be robust. As far as the execution delays are concerned, these execution delays are not delays per se. If you look at the metro execution, Bangalore Metro, every metro project is like a new project, and we have to deliver the first proto, and then we get the bulk clearance. So the Bangalore Metro first proto has been supplied. It has undergone all the tests. Now it is undergoing oscillation trials as I talk to you. But in the meantime, we have already supplied 2 more train sets. Another 5 to 6 more train sets we are trying to complete by March. We are trying to complete the last train set for Mumbai Metro. That is the 63rd train set of the existing order by March. Vande Bharat Sleeper, 2 trains have already been put into commercial operation. We are left with another order for another 8 train sets, which we intend to complete by the first quarter of the next financial year. So execution is well on track. It is picking up. And whatever were the supply chain challenges, we are resolving it step by step. In defense, I would say the supply chain challenges have been taken care, have been mitigated to the extent of around 80%. So banking on these, riding on these improvements in the supply chain, in the industry partner onboarding that we have done, our execution, our top line is also picking up.
Okay, so in line with the order book, the execution is going to pick up from here on. That's the word coming in. Thank you, Shantanu, so much for joining in. Always a pleasure. Margins will be back on track, and that 6-7% kind of range is what the management has indicated. But moving on, this is an interesting time where your, sales, your Chaitri Navratri comes in the month of March. Now, because of this, there's a potential probability of a tractor sales jump that could be happening as well. And this could be meaningful in the March quarter itself. What would this actually mean? My colleague Puneet first joins us to set this up for us as to what is in store when it comes to tractor sales with Chaitri Navratri falling in the month of March. Puneet, over to you.
Well, thank you for that. It's definitely a big fillip on an already very strong year for tractors in FY26. Now, the key aspect that, CRISIL has estimated a 22 to 24% growth for tractors in this year, and it will get it to a highest number of almost 1.17 million units sold in a financial year, and it will be the highest and all set to be that now. Now, apart from the growth momentum that has happened for tractors post the GST rate cuts, as you rightly mentioned, the Chaitri Navratri coming in the month of March this time, compared to being split last year, is one of the biggest aspects. Now, last year it was between 30th March 2025 going into till April 7th, and hence a lot of that positive impact came into Q1 of FY26. This time around, though, this also, of course, a lot of sales were split between those two quarters, but this time around, the Chaitri Navratri dates have come in between 19th March to 27th March, which is a very auspicious period to purchase vehicles, and especially tractors in the rural areas. So, hence, you could see another additional fillip to already which we've seen with the GST rate cuts in this particular quarter. The other aspect of the sales growth as well, almost 21% growth for FY26 in the first 10 months, is the additional kicker as well, what has already happened with the GST rate cuts. But there are just these two challenges before I toss it back to you. One, of course, that the H2 of FY26 will be a very strong base. So a lot of analysts estimating that there could be cuts in H2 of FY27 or a very flat year essentially. And the second challenge being TREM 5 emission norms which are coming in as well. That could be an impact potentially if it does happen in FY27. So while the picture is very rosy and expected to be in FY26, watch out for these two factors in FY27 as well.
Okay. Hemal Thakkar, thank you for that, Puneet. Hemal Thakkar, Director, CRISIL Intelligence with us this morning. Ashwin Patil, Head of Fundamental Research, LKP Securities, also joining in, and he tracks the sector. Hemal, let me start with what is CRISIL's take? Why are you projecting an increased tractor purchase in Q4? And have we seen previous data pair out this trend?
Okay. So, hi, thank you for having me. If you actually see, the year has been very, very good. After 2019, we've seen consecutive good monsoons, from an overall rainfall perspective, which augurs very well for tractors. 2019 was the only year where we have seen almost a 16% deviation from long period average. Otherwise, the rainfall has been very, very good or close to normal. So the water table levels are good, reservoir levels are at about 65% even after, the Rabi season almost through. So it puts us in a very good position from a futuristic perspective. And as mentioned by you earlier, this year Chaitra Navratri is also going to be completely in Q4, that is in the month of March from 19 to 27, in comparison to it being split into two parts in March and April. So the lower base of last year will also help us grow significantly in the Q4. And hence we are expecting this year Q4 to grow by about 34 to 35% as compared to last year, which would put us on a very, very strong wicket.
Okay. I want to actually take that theory to Ashwin Patil. How do you look at tractor sales in Q4, Ashwin, and what do you think are the companies that will benefit the most?
See, if you have heard the con call of Mahindra and Mahindra after the Q3 results, they had given they have said that the industry will grow somewhere near 24%. So 24%, and if this Chaitra Navratri is falling in the month of March, that is Q4 itself, it will be a further bump up for the tractor sales, I guess, for the full year. So maybe like 26-27% kind of growth can be expected for full year FY26. So, we have seen a very good monsoon this year with the Rabi sowing very strong and Kharif output going good. So I think the rural sales should see a lot of celebration in this Q4. But going forward in the year of FY27, I would say that the higher base of the second half primarily of FY26 may see some sort of sluggishness in the sales growth in second half. Also, we can say that the Met department is somewhat skeptical about upcoming El Nino impact in the second half of monsoon. So that may have some sort of negative impact, and also the TREM regulations, which you pointed out earlier. I think all these will be culminating into a slightly flattish to a lower single digit kind of growth on a positive note, I would say, in FY27.
But FY26, that is going to be the Q4 especially is going to be even much better than the previous 3 quarters, I would say.
Okay, Hemal, considering that tractor sales have already been quite strong, do you think that much latent demand exists in Q4? And I know that's an auspicious period, but like I asked you, historically, what is the proportion of sales that take place in this auspicious period?
So generally, our sense is about 25,000 units get sold, during the Chaitra Navaratri period as of last year, as per estimates. This year, we are expecting this to be about 40,000. So from that perspective, if you see, there is going to be a huge jump as compared to last year. And as you rightly said, what is also very important is if you look at the tractor sales from 2017 to 2019, they were on a record high at that point of time. So the replacement demand is also very, very strong. But because of increase in prices that we have seen in the last couple of years, we've seen that a lot of people have been postponing this replacement, which are now culminating after GST cut has happened. So that is also something which is fueling demand. So Chaitra Navratri, we are expecting sales of closer to 40,000 for this fiscal as compared to about 25,000 last year, which will fuel demand in Q4.
Okay, so what would be Ashwin, stock specific? You talked about M&M, you talked about Escorts. What would be the top gainer from a possible Q4 flush?
Definitely. So the market leader, which is M&M, would be the biggest beneficiary of this. Secondly, followed by Escorts Kubota, and third is VST Tillers, which is a small company manufacturing smaller tractors and tillers. In the specifically, it's a regional player. So I would say that all these players will be getting a strong benefit out of this Q4 extravaganza, I would say.
Okay, thank you so much, Hemal and Ashwin, for joining us on this quick conversation. So you've heard it first here that, look out for tractors in Q4 coming in. That's our assessment. Quick market check before we get to our next conversation. I am pleased to report that markets have recovered well. Pull up the Nifty, close to the high point of the day, 170 points up. Clearly, the market's a little more confident about favorable terms of trade with the United States after what the Supreme Court has done. Yes, the Trump administration has hit back and tried to add more tariffs under different sections, but that has not really deterred the street. Just take you through what is running in the markets right now. What are the stocks that are flying? Adani Ports, almost 3% up, but that is also, of course, because of huge announcements that were made over the weekend. Axis Bank, HDFC Life, SBI Life. So you have a mix of some financials and two Adani Group stocks over there. Adani Enterprise is also about 2% up. Kotak Mahindra Bank, HDFC Bank. Now, the reason you might be seeing large private banks doing well is because there could be an assessment that the losses that IDFC First and AU Small Finance Bank could be facing due to the Haryana government deciding to move their accounts out of these two banks will be a gain for larger private banks. Just go back to the IDFC First script and those that stock really having a tough morning. 18% down right now, has already hit two circuits and then going lower down at this point as well. No reprieve in sight. But in this leg of the conversation, we're trying to understand what is going to be the economic impact of a tariff pullback. Garima Kapoor, economist and senior vice president at Elara Capital, joining in at this point. Garima, very good morning to you. How are you really seeing the impact on exporters? One day there's a 50%, then there's a 25%, then there's a 10%, then there's a 15% in the middle. There was a hope of an 18%. I mean, are you going to see all of this uncertainty actually impact the export number?
Hi, morning. I think this uncertainty is going to reign, particularly because the provisions under which the Trump administration has currently imposed 15% tariff are only applicable for 150 days, post which they have to go back for congressional approval, which looks quite unlikely. Moreover, as the Trump administration tries to understand the implications of the outcome of SCOTUS ruling, they're trying to look at different provisions under which different tariffs can still be imposed, and there are provisions in 338, etc., that can still be utilized. In the interim, when it comes to exporters, remember, India was celebrating a relative gain because an 18% deal that was likely to get signed at 18% rate was supposed to be better than some of our peers. Now, after yesterday and over the ruling of weekend, what that does is that almost everybody is at the same platform rate of 15%, irrespective of where you started off with in terms of negotiation. So the relative gain and relative losses are now nearly wiped off, number one. And number two, we are still trying to grapple with the fact that whether the trade deal will get signed at 18% or 15%, or we might negotiate even better than that. So you would see some bit of an uncertainty both from the importers' standpoint of view in terms of US as well as exporters across the world, including that of India.
Okay, Ajay Sahai also joining in. He's Director General and CEO of FEO, that's the Federation of Importers and Exporters. Mr. Sahai, we were just talking about what is your viewpoint on the latest round of tariffs. We spoke last on Saturday when we were at 10%. It's now become 15%. Are you still finding it as positive as you did on Saturday?
In fact, point is that whether it's 10% or 15%, it's the competition is even out. And probably that will be a good thing for the markets also, and is responding positively. We expect that 15% will provide certainty. And since India will be competing equally in terms of other countries, we will be able to get some more orders also. It's a good development. Let us see how the India BTS span out in times to come, because I personally feel that BTA will provide much more opportunity for Indian exporters. So in short, definitely it's a very good development.
Okay, what are the kind of conversations you're having, Mr. Sahai, with exporters? What are your exporters saying? What are the conversations they're having with clients over the last couple of days?
So in fact, this is a wait and watch situation, because importers are also assessing the situation, and they are looking into the development which is happening on day-to-day basis. So as of now, it's a wait and watch. But the good thing is that since a lot of importers are looking into refunds of the taxes to flow, that will also help the Indian exporter, because they have an understanding with the US importers that since they have shared the benefit of the duties, whenever the refunds happen, they will also be getting their own share in that.
Mr. Sahai, a quick view in terms of the way, all of these companies are trying to do business with the US, because there's a constant back and forth. There's a constant change when it comes to tariffs as well. So planning in terms of capex, planning in terms of, forecasts as to what that year could look like is becoming really difficult. In that kind of a scenario, is US as a market companies are looking to ignore now?
I don't think US is a market which you can afford to ignore, but at the same time, companies are looking into another market, particularly in the sector where we have leveraged out to the US beyond a point. And that's why diversification is happening in some of the sectors like marine. We have been successful in doing the diversification. We have moved to the European Union, we have moved to China, and that's a process. But I think one has to look into that US is such a large market that any industry would not be able to ignore the market, but at the same time, people would not like to keep all eggs into the market, into one basket, and therefore this diversification trend will continue, come what may.
Okay, Garima, coming to you as well, we're talking about the way an impact could come in as an economy, but let's be specific. When you talk about the impact in terms of the Indian rupee, we've seen strength in today's session. What would that mean in terms of the currency and its impact in terms of when you talk about the fiscal deficit as well?
When it comes to the currency, clearly the rupee's brunt was largely being faced. One, because of two uncertainties. One, that India-US deal was not in the sight even as we signed other deals. And second, the funding of the current account was becoming challenged because of the net FDI number remaining low and FPI's remaining continuous outflow. Now, this 15% uniform tariff for now at least clears one thing, that the executive power of the US to basically be little ad hoc and abrupt in nature against a particular country has receded, including the threat relating to, let's say, 25% penal tariff that we were facing because of Russian imports, which were also under the emergency provision. So from that point of view, the headwinds on the rupee that you could now face excessively high tariffs is behind us. So relative gain may not accrue immediately, but relative disadvantage or loss that we were being put across before we agreed to a deal is also not on the horizon. So that's why rupee probably is taking a respite. In any case, if you culminate the possibility of signing a deal with US sometime in the quarter now, along with EU coming into effect next year, and with UK likely coming into effect from April, May this year, we're looking at a completely expanded horizon for India's exports and a possibility of a shrinking of a current account deficit a year and a half from now. With FPIs looking India at a favorable market, I think rupee should actually see much more respite, and we're looking at ending the current next financial year probably at a handle below 90 sometime by March 2027.
That's an interesting take coming in there. But thank you, Garima. Thank you, Ajay Sahai, so much for joining in. It's always a pleasure to speak to both of you and to assess the kind of impact that you're talking about in terms of US tariffs and the back and forth. But we'll quickly slip into a short break. On the other side, we'll speak to the Citi team in terms of decoding how Q3 has been and what you could be looking forward to in terms of Q4 and if there is an earnings re-rating that could be on the anvil. Please stay tuned for that exclusive conversation only on NDTV Profit.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Where's Tamanna?
I think it was, and you know, this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. Welcome to this very special show where we spend time with the top City team looking at the quarter gone by. And as always, we have the top minds of their research team with us in our studios. Welcome, gentlemen. We have, of course, Surendra Goyal, Head India Research at Citi, Kunal Shah, Director India Banks Financials, who's with us today, Arvind Sharma, Director India Auto and Transportation, and Saurabh Handa, Head India Oil and Gas and Telecom. Welcome to all of you, and thank you so much for joining us. You know, Surinder, before we started the conversation, I was telling you that usually at this time, and I'm sure the quarterly conversation we always have, focuses a lot on performance of individual companies. And yes, we will do that. But this time round, it seems as if a lot of external factors have taken over in the way companies are assessing. Is that something you find happening as well when you're looking at companies, not just from their performance, but how they could be impacted by global headwinds one way or the other?
So, see, that always happens. Like you are, as analysts, as investors, people are focused on earnings. But at the same time, they also care about the sustainability of those earnings. Okay, and that is where I think your question comes into play. And today we are in a situation where there is a fair bit of uncertainty on quite a few things. Firstly, the tariff situation. It's been a bit fluid, lot of changes, and that does impact different companies in different ways. Secondly, you have artificial intelligence as a big topic. It impacts different businesses in different ways, so people are kind of looking at that as well. Is it a tailwind, headwind, doesn't impact the sector, and so on. So I think there are a lot of these factors at play, and which is why investors are focused on sustainability of earnings in addition to what companies have already reported.
So then let's come to that core question. I think it's now widely understood and accepted that earnings in Q3 have been better than expectations. That's something that you have noted as well. I think for the BSE 500, 12% above what the baseline is. Was that an impact of a lower base, or are you seeing tangible shifts in corporate performance?
So, see, when you talk about base, like the way we look at earnings, we're talking about versus expectations. So ideally, the base should have been factored into expectations because when analysts prepare the forecast, they know what last year's base is. So the numbers have been slightly better as far as versus expectation performance is also concerned. And what we are seeing is that there are a few sectors where things are gradually improving, right? Be it, say, on the banking side or on pockets of consumption, pockets of industrials, we are seeing improvements. And that is what is really driving some of this outperformance that we have seen this quarter. And we expect that to kind of continue. So if you think about earnings growth for any broad-based index, a BSE 100 or Nifty, it was mid-single digit in FY25. This year should end up being closer to high single digit. And then next year, the expectation is we go into low double digit. So that is what is already built in because it's some improvement in certain parts of the market are visible and there are drivers, so which is why we expect that to sustain.
So let's get a little granular. Kunal, I'm going to come to you on what you're expecting from financials. Of course, it's a great day to talk about financials with IDFC Bank and a small finance bank in focus. But what for you is really standing out as far as financials are concerned?
So the most important aspect is on growth. And if we look at it, say 12 months back, no one expected that we could end closer to like 13-14% kind of a credit growth for this year. So when we look at it, the latest fortnightly credit numbers that's showing a decent traction on the credit growth. And asset quality has also been quite stable. So when we look at the credit cost across the board. There has been the improvement be it in terms of the unsecured loans, delinquency buckets, and the overall credit cost has been sustained at a lower levels. Margins is something wherein the trends have been quite divergent across the board, but again with the repo rate cycle almost being in the ending phase, to that extent now the pressure on margins post the fourth quarter would also be quite low. So maybe if you really look at it, one particular aspect would be on the growth, further supported by maybe contained credit cost, as well as now margin volatility coming to an end.
What are some of the winners? I mean, Axis, for example, again, there was another set of provisioning which, you know, the street was wondering what's happening. HDFC Bank, and I'm talking about the big ones because people look at the large bellwethers, so to speak, in that space. HDFC Bank, I think, was a mixed bag, maybe in that sense. Where do you think the winners lie? And if I broaden the question to the BFSI bucket, are private banks looking stronger or NBFCs after this quarter?
So private banks, when you look at it, Axis past couple of quarters on the core performance side, be it with respect to the overall loan growth as well as the credit cost trajectory on the core side, that has been better than expected. On the other hand, HDFC, as you mentioned, I would clearly believe like it was a decent earnings this quarter. It was not a mixed bag, but it has outperformed. So
okay, let me rephrase that. I think versus an ICICI Bank, because they usually are looked at together. So maybe ICICI Bank shown a little brighter, if I had to rephrase.
But like HDFC was the one wherein you actually saw 9 basis points of margin expansion. It was flat for ICICI and Kotak this quarter. It was lower for Axis this quarter. So HDFC is outperforming on margin trajectory. Their credit cost was also contained. And when we look at it in terms of the growth, it is closer to the industry average, which they have guided for this fiscal. Now, the apprehension on the street is, will HDFC be able to deliver outperformance on the credit growth, given that their LDRs are already closer to 98, 99 odd %. And our belief is the traction on deposits in the fourth quarter will give a lot of confidence to the street that they might be able to outperform. And governor in the press conference has clearly highlighted that LDR is not the ratio to look at. In fact, they are more looking at LCR and NSF. And to that extent, I would say that LDR will not constrain the overall loan growth, and HDFC can outperform the street expectations on the loan growth side.
Okay, and the point about NBFCs?
And NBFCs, I would say stocks are already expensive. The growth is already priced into the valuations. The rate cut cycle benefit, which was more there for NBFCs, that coming to an end. So there are limited plays available on the NBFC, which we prefer at this point in time. And our preference would be more for private banks compared to NBFCs.
Okay, and I assume HDFC Bank is topping that list.
Yeah.
Okay, all right. Arvind, let me come to you. And I think if I were to look at one sector which saw a lot of headwinds because of what's happening globally, that way financials more secure, right? Domestic play. It would be autos as well. Any clear winners there?
So when we look at the demand perspective, I'll start from domestic fronts. The companies which are more exposed to domestic demand, they have been clearly winners in terms of volumes. We get a monthly set of volumes. In fact, retail volumes are even more frequent. So domestic-oriented companies have been doing quite well when you look at the volumes across passenger vehicles and two-wheelers. And you know, in our preference order, we do like passenger vehicles which are more exposed to the domestic sector. In terms of the global headwinds, as you highlighted, some of the exporters, especially on the auto parts segment, you know, they have been more exposed to it. So when you had an increase in the duties or when there were geopolitical issues, some of those exporters were impacted. And now again, we are in a bit of an uncertainty. But if we do have a decline in a cut in the tariffs, those exporters will benefit. Most of them are part makers. As far as the OEMs go, the two-wheeler names which were exporting to countries in Africa, LATAM, ASEAN, they have been doing quite well. So there, thankfully, the tariff uncertainty hasn't been there. There are, of course, other uncertainties regarding regulations or geopolitics. But at least the tariff part, they have been better off compared to the part makers which were exporting to the US or Europe.
How are you looking at Tata Motors PV? It seems to be two companies in one. You know, in the sense of just wondering how you assess that company, because there's one part which is really ailing, which is Jaguar Land Rover business, and then you look at the domestic play, they're doing fine. Is that something that you think needs to be looked at in a more granular fashion?
Absolutely. I mean, these are two very different companies, two geographies rolled into one company. The domestic part is doing very well for Tata Motors. Some of their new models have done exceptionally well. They have had very good customer response. In the EV segment especially, you know, some of the models where the brand name remains the same, but you got an EV powertrain as well, they have been well accepted. So the domestic business is doing very well. The concerns are more on Jaguar Land Rover, which has got a much wider geographical expanse, you know, across US, Europe, UK, obviously, Asia and China. There we are a little cautious. There are different headwinds, and because you are selling to so many geographies, each geography would have its own share of regulations, competition, economics, taxation. So I think there is a bit of caution.
Plus bad luck this quarter with cyber attacks and this, that and the other.
Yes, I think this was well known. You know, it started last quarter. They had already guided to the impact this quarter in terms of the units. So to that extent, when we started the quarter, built in the expectations, we were penciling that in. Going ahead, I think there's one more transition that's happening. You know, Jaguar would be all electric. Even Land Rover, lots of models would be turned into electric. How does JLR perform in a more electrified world, especially on their own model portfolio? I think that's again a bit of uncertainty that lies ahead. But for Tata Motors per se, the Indian operations, they are doing quite well.
No, but then that's fine. How do you assess the company then versus its peers? Its sum of all parts then becomes less favorable versus, say, an M&M if you're looking at an EV play, or a Maruti even, or Hyundai even. Hyundai, lots of upgrades this quarter.
Absolutely. So our preference order is Maruti, Mahindra and Hyundai in that order. So naturally we like the Indian peers more. We have a sell rating on Tata Motors.
Okay. And in the two-wheelers, just to round that off?
Absolutely. Two-wheelers, we like Eicher Motors a lot. It's a very differentiated company. Is not bogged down by competition. You know, they have clearly shown that.
No impact of Harley.
Yes, I mean, we had two marquee launches, global launches happening within a space of 2 weeks of each other a couple of years back. And Eicher Motors still is almost dominates that segment. So Eicher Motors is a company which we really like. We are a little cautious on the other two-wheeler names. We have a buy on Hero, but we are otherwise cautious because there is so much competition, and the differentiating factors in two-wheelers are not there, are not as much as PVs. You know, in passenger vehicles, you can differentiate on ergonomics, HVAC, noise, vibration, harshness, the design of the car. In two-wheelers, it's a little difficult to differentiate, so we are more cautious on the two-wheeler names.
Are you tracking Ola, Ather at that space at all?
So we cover Ola. We have a sell rating on Ola.
Yeah. Sorry, I'm just following up on this because this has been so much on top of mind. Any cause of concern? There was one one research firm, which put out a take saying we don't know if this is going to be a going concern.
I think we'll not comment on that, but the broader electrification in two-wheelers has been very sluggish. You know, we are at around 6.1, 6.2% electrification, same as we were an year back. And of course, expectations were very high. So to that extent, electrification has been sluggish. For Ola specifically, they have been losing a lot of market share. You know, there were various reasons, product, service, perception, lots of reasons, but they've been losing market share. So we are cautious on Ola because of broader sluggishness in industry electrification and Ola's loss of market share.
Yeah. You know, this is such an exciting set of people to talk to viewers, and I think we can speak to each of you maybe for 20 minutes to go because there's so much happening in each of your sectors. But we will try and give an overview to the best of our ability. Saurabh Handa, you know, again, oil and gas and telecom, two very different pieces. I'll start with oil and gas. All things considered, and with what is happening with crude, is there growth potential? Yes, your take on what the quarter went by and the performance there, but is there potential for more turbulence?
Okay, so in terms of the oil markets, there's clearly a fair bit of geopolitical uncertainty. And if you've seen the recent move in oil prices, they're up almost $10, I would say, in the recent last few weeks. A large part of that is because of the situation in Iran. Now, at least our house view is that there is a fair element of that risk premium already, which is embedded into the oil price now. Our broad range of oil prices is somewhere around $62 if there was to be no sort of geopolitical risk, to around $75.
Just the width of that range tells
exactly.
us
So
answer. You're talking about $13.
Yeah, so we are pretty much at the top end of that range right now.
Yeah.
I mean, $72 overnight. It's down a bit. The point I was trying to make is I think we're sort of at the higher end of that band, so to speak, because if you look at the fundamentals of global oil markets, it's still a reasonably well-supplied market. There is spare capacity in the system. The fact is that barring some sort of severe disruption, we do not believe there's going to be a major impact on oil supplies. So in that situation, excluding the risk premium that is embedded, we believe there could be downside to oil prices, or at best it stays range bound. In that sort of a situation, it still, in our view, favors the downstream companies over the upstream names. In fact, if you see the relative price action, the OMCs have corrected recently. The upstream stocks have actually moved higher. And we believe the reverse can happen now if we are at the higher end of that range. So we have a preference now for the OMCs.
And what's the pecking order there?
So in the OMCs, we like, so we have buy ratings on all three. Our preferred pick there is BPCL, then HPCL and IOCL. So BPCL is a bit more of a balanced play. And therefore our preference is for that at this stage.
And your take on this Venezuelan oil business? Obviously, it's what has happened now. It's all become very tangled geopolitically, right? With some Russian crude coming off, Venezuelan coming in. Which are the Indian players that can really be ahead in the race if we need to start now getting in Venezuelan oil? And net, is it a positive for us?
Okay, so in terms of, so Venezuelan crude tends to be of fairly poor quality. It's a heavy crude. So the refineries that can process it have to be extremely complex. So Reliance is one that can process Venezuelan crude. And media reports have been suggesting that they are looking at procuring some barrels there. I think the way to look at it, however, is that ultimately, as long as that oil is available in the market, and earlier Venezuelan crude, say, was being bought by China, and India was buying more Russian crude, and if there is a little bit of that replacement happening where India is reducing its Russian imports, but managing to get some Venezuelan crudes, and China is actually making up the slack from India as far as Russian imports is considered. Ultimately, this is just redirection of oil flows globally. So it does not really lead to too much of an impact in terms of availability of that crude. Yes, it could impact your freights. There could be a little bit of that risk premium which starts coming in. But as long as there's no supply disruption, the impact is only on differentials. So if you are a complex refinery which has the ability to process discounted crudes, then you are better off. So Reliance could be one. Even the OMCs apparently are looking at procuring some Venezuelan crude, but the quantum is going to be much lower. I mean, Venezuelan exports are less than 1 million barrels per day. Russian exports are more than 3 million barrels per day. So there's a big difference in terms of the volume itself.
Yeah, I think it's a work in progress, and that's something the Indian oil chief also told me when I spoke with him last, that yes, we can do it, but we need to figure out how. I'm tempted to quickly squeeze in a question on Vodafone before we move on to the others. There seems to be a change of heart in the way the street is looking at this stock because the promoter seems to be coming in. Have you had a change of heart when you're looking at Vodafone?
So, so we did have a change of heart, so to speak, some time back. So where we had gone to an overweight, like a buy rating on the stock. We, however, do believe that there is certainly an element of high risk associated with it, given the high leverage that is there on their books. But yes, there seems to be a clear improvement in their situation. Probably an indirect beneficiary of Vodafone's improving situation and the fact that the Supreme Court has sort of backed them, the government has provided some relief. We would believe the TowerCo like Indus Towers is a clear beneficiary out there. So we have that as a stock which we have fairly high conviction on. which we have been pushing. And I think the concerns, or the existential concerns on Vodafone Idea, I think are clearly now behind us. Clearly, they are now looking to raise some funding from banks. That should happen sooner rather than later, following the clarity from the government on the whole AGR thing. In their strategy review, they do have a fairly ambitious and aggressive capex plan over the next 3 years. So all of that, I think, should help lead to some sort of stability in their operations. Obviously, a lot will depend on execution, which is why at this stage we believe it's better to look at, say, indirect beneficiaries.
Like Indus Tower. That seems to be the consensus. So then let me come back to it and let's broaden it out. We've got some great inputs, on sectors and specifics. One, looking forward to what we may see in Q4 and for the FY, in light of everything that's happened with tariffs. If I look at it from investor point of view, everything that you would have wanted has pretty much happened. You've now got the trade deal in place. Rupee is beginning to recover, perhaps. Do you think that we're set for a positive momentum from here on, even with what has happened in the last 48 hours?
Sure. So if you think about what resulted in the big underperformance of India in the last 18 months, there were a few factors. Firstly, earnings slowdown.
Yeah.
Last couple of years, like FY25 was mid-single digit earnings growth. This year, now we are getting to high single digits. So earnings definitely slowed down. And prior to that, for 4 years, the growth was 18-20%. So versus expectations in FY25, there was clearly a negative surprise. So that was the first tipping point where you saw foreign money starting to outflow, the market starting to underperform. Then secondly, the whole tariff situation where India, the perception initially was India would be a big beneficiary relatively, and India ended up with high tariffs. Okay. And third has been the AI trade. It's been like the single biggest trade in the global markets in the last whole of last year, this year. And companies which have, countries which have companies which are more exposed to that have generally done well. Right, in the US, you could look at Mag 7, you could look at Korea and Taiwan in Asia and so on. You will see markets that have done well. So today, when you think about some of these factors, right, first thing I would say is from an earnings perspective, we already discussed earnings are looking slightly better, right? Mid-single digit, high single digit, going to low double digit. That's point one.
Are Indian IT companies going to survive AI?
I'll come to that. Maybe I'll answer that later. The second thing is from a trade perspective. We have more clarity, at least compared to where we were, that India is not a relative negative from that perspective. Okay. And third is we have seen the foreign flows kind of starting to stabilize a little bit. So all of those things are in favor. What is still unknown is the AI trade, because that is what has been taking a lot of money. On your question on IT services, I think I wouldn't really frame the debate like that. Are Indian companies going to survive or not survive? For us who have been negative on the sector for a fairly long time, it has been around multiple issues. I think the question is around growth rate. Okay.
Let me add the perspective of valuations.
Yeah.
They will survive, but are they worth what they're trading at without the AI heft?
No, absolutely. So the reason we have been negative on IT for the last 3-4 years, like even today, I don't have a single buy rated IT stock. And the reason we have been negative is there are a bunch of things which are not good for the sector, right? AI has been a concern only in the last, say, 12 to 18 months. But prior to that also, you have had issues. It's an intensely competitive industry, lot of players, and the underlying growth has been slow. So that issue is also there. Margin pressures are always there because it's so competitive. And the starting point valuations were much higher. Now they have obviously moderated. But overall, if you see at best a mid-single digit growth, okay, then how much should you pay for it? I think that is what the question boils down to. And you can see that globally, if you look at the US, some of the IT services companies are trading at significantly lower multiples, while in India, the domestic liquidity still keeps them more supported. So I think that is the single biggest question which people are trying to answer. What is the right multiple? Like for us, we have been negative for years, and at least for now, we are still cautious because we think that the earnings outlook is fairly tough. And within that, valuations are not cheap enough.
When you are applying a potential AI filter, We had this whole summit, a lot of things that have been announced, data centers and all of the ancillary around it. When you're applying a potential AI filter to, say, the BSE 500, are you seeing enough things or enough opportunities pop up?
So there will be two kinds of opportunities which will pop up. The first kind of opportunity is essentially the data centers will require a lot of companies to participate. And there are a set of companies which have done well, which continue to do well. In our view, they'll continue to do well, which are plays on that theme. Some of them are in the industrial sector, obviously. So that is one part. The second is companies which can leverage AI. Okay, and I think that will be a bigger trend in India. I think we'll see a lot of companies leverage AI to generate a lot of productivity and improvement in growth, etc. So we are starting to see the financial companies start using AI more aggressively. Again, a medium-term play, but I think you'll see a lot of those opportunities visible in the next couple of years.
Yeah, you know, my guesstimate is after what's happened with IDFC first, you're going to see a huge AI play to avoid frauds in the future. Quick take on that, Kunal?
So, interestingly, when you look at it, it was not a digital thing, but it was more of a traditional
good old fraud.
Yeah,
Forge,
so maybe
forge
it was
check.
like the check issuances and not really the digital one which happened. And there was a connivance of external parties along with the employees of the banks also involved into it. But yeah, so this had the impact. We are already seeing that in the stock price of both the banks which are involved. And the directive which has been issued by Haryana government, that's very clear in terms of preferring PSU banks with respect to opening up with of all the new accounts. And if you are not opening an account with PSU banks, there has to be a specific reason as to why you are not doing that. Okay, so for all the new accounts, Haryana government has directed that it has to be with the nationalized banks going forward. Even though Haryana government as such, as a proportion of overall government deposits, that's closer to 2.7%. And as a proportion of overall banking deposits, that's hardly 0.2%. So it doesn't impact much in terms of the quantitative term, but we need to see in terms of whether there is a potential contingent impact with respect to other state government
Will others
doing,
follow?
yeah.
No, my point is that maybe this is where there's a clear case for AI to come in and help
prevent
frauds like this potentially in the future, because the human imperative to commit fraud is not going to go away anytime soon. Well, we'll wrap it there. We're right out of time, but thank you so much, gentlemen, for coming into our studios as always, helping us review the quarter gone by and also a lot of commentary on what's happening right now. Thank you. It's been an absolute pleasure.
Thank you. Thank you.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru. Whoa.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Javeri. It's good to be back. It's been a while. And with regards to where the markets stand, of course, slightly, on the positive note today, of course, on the back of the development that has happened over the weekend with regards to the tariff, rates coming in. The Nifty 50 is up around 0.5 odd percent. The Bank Nifty also in the green, up by about 0.15 odd percent. But overall, if you take a look at the Nifty 50 constituents and of course the counters that are doing well in trade, you have Adani Ports leading that chart, up 2.7%, followed by something like an Axis Bank, up 2%, HDFC Life, SBI Life, as well as Tata Consumer and Eicher Motors, as well as Adani Enterprises and Nestle are doing fairly well. All of these counters up by about percent each. So there's more green on that heat map as we speak as compared to the red. But on the flip side, Wipro continues to be under pressure, down by about 2 odd percent, followed by ONGC, which is also down 2% today. Infosys, Tech Mahindra are the other two IT names which are down by about 1% each, and you have Eternal as well as Trent, which is also seeing some pressure in trade today. So that's with regards to where the Nifty 50 stands. Let's try to pull up the sectoral heat map and see as to how sectors are looking like in trade today, and how Nifty PSU Bank continues to lead that pack, up 1.6%, followed by Nifty Auto, which is also up almost 1%. But on the flip side, IT continues to be under pressure, down by about 1.5%, and you have your media, which is also down by about 0.4 odd percent. Quickly, let's try to pull up the advanced decline ratio, because that will paint a picture as to how the broader end of spectrum is looking like. If we can try to pull up the advanced decline ratio, you have around 1242 odd, you have 1321 odd advances versus that of decline. But interestingly, Puneet, the chart is narrowing by the hour, and we're seeing some pressure in terms of where the broader end of spectrum is concerned. But overall, what are the broader end of spectrum? What is the broader end of spectrum looking like?
Well, very interesting, because the broader markets, the advances are declining, but we are actually building up in terms of gains on the benchmark. So that's a consistent trend that we are seeing, and a divergent trend actually in that sense, to be honest, because we're seeing the gains largely about 80 points at the start of the trading session for the Nifty 50, and then build on from that. And finally, just if you can pull up the BSE 500 to talk about the individual movers before we take all your stock related queries for today. CI Automotive post earnings have been consistently in the green, and today as well, that's visible on the screen. Trident, a beneficiary of what we are seeing over the weekend in terms of the US Supreme Court striking down the tariffs as well. So the exporters are up today. And essentially the casualty, the accident of the day, IDFC First, down almost 15% now as we speak, and continues to be one of the key stocks that we are focusing today as well. But let me welcome in Avinash Gorashakkar. He's the founder and head of research at Avinash Mentor on the fundamental side to solve all your stock related queries. We also have Gaurav Sharma, associate VP and head of research at Globe Capital. Gentlemen, both of you, thanks so much for joining in today. Let me first go across and take the first caller for today itself from Vijayawada. This is Bindu dialing in for a stock query. Bindu, very good morning. Welcome to Ask Profit. What's your query?
Very good morning. So I hold 1,000 shares of Vishal Mega Mart at 121. Hello.
Yeah, Bindu, I can hear you. Go ahead.
Yeah. I want to know about the medium-term outlook of the stock.
Medium-term outlook.
Should I hold
okay.
or should I keep a stop loss and exit?
Got it, Bindu. But let me actually go across to Avinash now very quickly. Avinash, Bindu's holding Vishal Mega Mart at at 120 odd levels. What would you recommend her to do? Because seen some correction this particular stock, but any view of what she should do?
Yeah. Good morning, Puneet. I think as far as the investor is concerned, I think she can continue to hold. See, I think Vishal Mega Mart had come at a price around, I think if I'm not wrong, around 83, 85 rupees. And has been delivering very strong numbers quarter on quarter. In fact, in the retail segment, it is one of those players which operates largely in the tier 3, tier 4 markets, and where basically pricing is very, competitive. They managed to, hold on to a very strong customer base, show strong volume growth, and decent kind of margins kind of in this business. So I would say that the fourth quarter typically is supposed to be a very large quarter for Vishal Mega Mart. So you should expect a decent performance. Even in the third quarter, numbers have been decent. So my sense is, the investor has purchased at around 121. Now the price is around 116 odd. There's nothing to worry, but I think in this kind of market, it may take a little bit time before the market sees the potential of this company. So keep a time frame of at least 6 to 12 months. I think a decent risk reward can be expected. The company is doing well. The management bandwidth is also good. So I would say that within the retail space, I think the investor here should hold on and keep a time frame of 6 to 12 months.
On Vishal Mega Mart is the view coming in from Avinash. In fact, they're also adding a lot of stores as we speak, and we'll have to wait as to how the implementation of these stores take place. But moving on to the next question, Satyan is writing us and asking about Morpen Labs. He's holding at the rate of 60, if I'm not wrong, and today it has jumped. Of course, this is on the back of the news flow coming in. It has gotten 825 crore CDMO mandate from global pharma major, and that is why we're seeing the jump in the counter of that 13.5% as we speak. He wants to know as to what he should do next. Should he average? What is the best strategy to adopt? Gaurav, I'll take this up with you. What are the charts indicating for Morpen Labs?
Hi Mahima, morning. Thanks for having me today. So yes, a good smart up move of 13-14% has already been seen on back of stellar volumes. This is a welcome move, reversal, a clear-cut reversal sign is visible. I see the stock heading towards 48 odd levels in the immediate near term. Once these levels are taken out, the stock will head towards 52 and higher levels. Therefore, he should hold on to his position, and if he's having some spare cash, even he can consider adding it as well.
The view, Gaurav, and welcome to the show. We have, the next question that's coming in from Satish Jain from Bengaluru. Now, he is unfortunately holding shares of IDFC First, and definitely one which is under pressure today. He's asking firstly why it has opened 15% down. Now, we've been discussing on the show, Satish, that there was a fraud reported of almost 590 crores in Haryana, and hence the stock's down and out today. There was a con call as well in the morning. And, Mahima, you listened to the con call, but a couple of key takeaways before we take the question.
I think the key takeaways were that, they have taken the ownership of this first thing, and they've said that they'll figure out as to how the forensic report comes out, and they will then accordingly decide as to how the treatment of that 590 crore, which has been identified as the financial impact right now, will be treated going forward. But it'll take 4 to 5 weeks as to, for the forensic report to come out to exactly determine as to what is the financial dent for the company. So that's, the overall summary and key takeaways from the con call. But yes, I'll take this up with Avinash quickly. I think it's important for him to kind of address this. Avinash, how should investors who have, patiently been invested in something like an IDFC First Bank read into this?
No, I think Mahima, the management has clarified that this is a kind of a fraud which happened at the Chandigarh branch. And I think, whatever it may be, the bank is taken responsibility for this. And I think you could possibly see that dent being provisioned in Q4 numbers. It's definitely a sizable number, and that's the reason the stock is down by almost 15-16%. But I think, once this event has happened, I think the markets would now look at what kind of growth prospects the bank is likely to do over the next, say, 2 to 3 quarters. In the short term, the stock has corrected now quite significantly. I think a 15% or 16% drop is now already factoring in that kind of damage. So I don't think, you're going to see a further damage. My suggestion is, rather than selling in panic, probably wait for some more time here. I think the Q4 numbers would be out. You would get to know the management commentary. And I think in the longer term, yes, this would be neutralized, but in the short term, some pain will continue. So my suggestion is, don't sell in panic, continue to hold and wait for the Q4 numbers. I think hopefully this should not be a continuation going forward.
In fact, the management did indicate at the end of the call saying that they're expecting a strong Q4 coming in as well. So that's the view with regards to where IDFC First Bank stands. We've got our next caller. Shridhi is calling us from Hyderabad. Shridhi, hi, a very good morning to you. How can we help you today?
Yeah, hi Mahima. Firstly, kudos to the team. I love both of you, Mahima and Puneet.
Thank you so much.
Yeah, and so I have firstly, so my query is specific to Inox Wind, but I have a broader query where, there are managements who are mentioning that they are going for capex and client acquisitions. Their YOY numbers are also looking good, but the stocks are continuously falling. I have like 3 to 4 in my portfolio. For example, there was Sky Gold, there is Zaggle Prepaid, and now Inox Wind. My question. So my whole point is this. I mean, I'm constantly averaging out just because I can see that they are talking client acquisitions or capex, but the stock price is actually going a 180. So I just want to understand why does that happen in general, and if Inox Wind in this particular case.
Got it. Got your question, Shridhi, and thank you so much for those compliments. It really made our day. I'll take this up with Avinash then. Avinash, what's the view like on Inox Wind? As he mentioned, he's been averaging out. The company has been doing capex. The stock price is not picking up. What is your view here?
No, I think my guess is that, I think capex is being done by the company. I think markets are expecting a decent kind of revenue kind of, generation, from the capex. And I think, the fact of the matter remains that wind power, long term is definitely a very good structural story. But somehow the numbers have not been coming, and that's the reason the markets are disappointed. So I think, we probably will like to wait for the Q4 numbers. The company is backed by a very solid business group. They understand this business very well, and the order book is also quite good. So once the execution gets reflected in numbers, possibly in Q4, I think you could see a good bounce back. So I think, rather than selling in panic, I would suggest continue to hold. But yes, I think longer term, yes, the business continues to be promising because wind energy is one source of energy which the government is also promoting. So I would say continue to hold, but I think Q4 will be very critical to know whether the bounce back comes or not.
Got the view of Avinash, but the next question is on IEX now. Gaurav, this one's coming your way. Our viewer, Ghana, and I'm hoping I'm pronouncing his name correctly, is holding roughly 1,000 shares at 152. He's asking a short-term view on this counter. What would you recommend?
Yeah, Puneet, IEX stock is reeling under pressure from quite some time now. After that news came in of that fraud thing, this is under pressure, and all recent attempts of recovery faded out. As of now, too, there are no meaningful signs of any decent recovery coming in. I'll suggest better to reduce or cut down the positions at the current market price and switch over to some other quality names.
Okay, all right. So that's the view coming in on IEX. The next question that we have is from Sagunakar, who's writing us from Vijayawada. He's holding 300 odd shares of KC International at the levels of 780. currently facing a loss of around 25%. Should I book loss or maybe average out or continue to hold is the question that he has. Gaurav, I'll stick with you for this one as well. What's the view like?
Some more pain is likely here, Mahima. 550 is the level that I am seeing that the stock could come down in the recent move. Therefore, considering the overall chart patterns, 550 should act as a decent support. So I'll suggest him to hold on to his position.
Got that view, Gaurav. But the next question that's coming in now, it's on Angel One. Now, this particular space has also seen a lot of pressure. The STT raise was definitely a big kicker for all the capital market players. And, our viewer G. Srikanth from Tamil Nadu is actually holding shares at 1200 rupees. So, he still bought it at a relatively earlier price, holding 77 shares. And, Mr. Srikanth, if you can call us, let us know what you saw in Angel One at 1200, because it's definitely been, a doubler, at least for you in that sense. He's asking what he should do with this particular stock now that, there's also a stock split that is on the anvil, is what he's suggesting. Asking his view, Avinash, just based on the price that he's bought at, would you recommend him to book some gains, given that the government seems to be very serious on reducing the volumes in the F&O space? What would you recommend?
No, Puneet, I think he's purchased the stock at a very good level. So I think he should definitely book out some profits and encash his capital. But I think you should understand one thing, that despite the restrictions on the F&O trade, I would not be surprised that volumes are not going to be impacted significantly. Maybe in the short term, there could be a little knee-jerk reaction. But I think, all of us know that the F&O market is something which is growing, and where, traders definitely finally look at the risk reward. So the cost of transactions has definitely gone up post the STT increase. But I would say that, if the investor has a long-term trajectory of next 12 to 15 months, I think the capital markets are one area where a lot of interest is coming in, both on the investment and the trading side. So longer term, the runway is very large. So I don't think it's going to be a very big negative for the broking business as a whole. So I think he should continue to hold part book profits and try to encash the profits which he has made.
Okay, all right. So that's the view coming in on Angel One. But, switching focus and, speaking of the F&O space, it's time to look at what the F&O market is looking like today, what the setup indicates, and what are the cues shaping up for the trade. We have Sharad joining us to break that down for us. Sharad?
All right. Welcome back, Mahima. And largely we see the opening which was there in the gap up is not sustaining. We'll see largely the sell-off is coming in, but of course from Sensex, Adani Ports is leading the pack. It's up 2.5%. Kotak Mahindra Bank, Axis Bank also showing strength. Interesting, Reliance is also in the green. Overall, the technical setup is fine, but we could say net some kind of a little correction has definitely happened from the day's high as well. But what's not working is the IT sector. That sell-off is continuing, and of course JP Morgan also came out with its important downgrade as well. Stock specific moves, it's largely bigger moves coming in. Long build up, let's put out which stocks would be in focus when it comes to the long build up. And the sectors, if we talk about it, we just show the long build up. This is Indian banks and Cummins India. Remember, Cummins India came out with this analyst meet also, where a bullish momentum was there, and we had mentioned in IMO about the technical setup of the capital goods as well. Short covering at play for Union Bank and Amber Enterprises, and long unwinding, though the volumes are kind of mixed, is for Bharat Dynamics. This is where there is a sell-off happening in defense stocks, but AU Small Finance, the bank, that's one of the biggest accidents of the day. That's down 7%. But even bigger accident of this is, of course, IDFC First Bank. If you could see the short build-up happening, that fell almost, you could say, 20%, and now minor recovery is definitely coming in. But this is the stock of the day which we'll be tracking all across. And UPL also, that's down almost 14%. Street is not liking its demerger news. So these are the stock specific moves which are happening in F&O space, but these stocks are giving you violent moves.
Okay, all right, Shara, thank you so much for bringing us those details. Moving on, we've got Geeta calling us from Bengaluru. Geeta, hi, a very good morning to you. What is the query?
Yeah, hi, good morning everyone. I'm holding 777 shares of ONGC at the rate of 275.
Okay.
So I bought this for very short term. So today the stock has fallen 2.17% approximately. So I still need to hold, or I have to book a loss?
Okay, can you just define very short term for me? What is the time period that you're looking at?
Maybe 1 month.
Okay, got it, Geeta. I'll take this up with Gaurav then. Gaurav, for the next 1 month, do you see an upside on ONGC?
Mahima, yes, certainly. The stock is doing quite good. It is well placed. Any dip from here should be considered a fresh buying opportunity. The viewer can even add on to the position, average it down on dips, hold your positions, take a stop at closing stop at 260. I see the stock heading towards 300 in the immediate near term.
Gaurav, but the next question that's coming in, it's a stock that's been a pain to investors in that sense, and that's Tata Tech. Now, our viewer, is holding this particular counter, Mahesh, and he's asking, he's bought it at 726, bought 67 shares, and Avinash, his question is if he should continue holding for the long term, and largely if there is any upside potential, and should he average? So he's clubbed all these questions together. What would you recommend him to do on Tata Tech?
No, I think if he's looking at the next 12 to 18 months, Puneet, he should definitely add on declines. I think, this business is something which is very unique and where the tailwinds are extremely strong. My sense is that, clearly with the AI opportunity, I think there are a lot of initiatives which the company is also trying out. I think maybe in the fourth quarter, you could get a little more clarity. But I think from a longer term perspective, it operates in a very niche space where the business is growing very rapidly. So I think, if the investor has a long term runway of at least 12 to 18 months, then only he should average. But I think, yes, fourth quarter should hopefully be better than the third quarter.
Okay, all right. So that's the view coming on Tata Tech. Avinash as well as Gaurav, it's time for our rapid fire round. Try to keep your answers as short as possible. The first question is from Ramya, who's writing us from Chennai, asking about Apollo Tyres. She's bought at the price of 513, 150 shares is what she has. Wants to know if she can continue to hold or average. Avinash, your view?
Yeah, she can continue to hold.
The next question coming in is on KPR Mill, bought at 1117, Avinash. 41 is the shares that she holds. What she should do?
Here also, I think keep a time frame of 12 to 15 months and continue to hold.
Okay, the next question is on GE Vernova, and Sagar is asking this question. He's holding 7,820 shares. Wants to know if there is more steam left technically on the upside. Gaurav, would you recommend that?
Yes, it is looking very good. He can even consider adding the position. 220 to 230 are the immediate upside targets.
TCS bought at 3,100 odd levels. Avinash, should Mohit continue to hold for the next 3 years?
Yeah, I think he should continue and he can even average.
Okay, HAL is the next one. Samba is asking this question. He's got 4,000 plus shares. Wants to know what's the outlook for short term. Gaurav, your view on the charts?
Not looking good. Some more downside possible. 3750 on cards.
PSU banks, a larger query. Avinash, is it a good time to invest right now? Is the query from Murthy? Which banks would you recommend?
I think today, I think we should look at buying into Bank of Baroda, Canara Bank, Bank of Maharashtra. These could be good bets, in the current scenario.
Okay, the next question is on KPI Green. The viewer is bought at an average price of 490. Is it a good time to hold or maybe average out? Gaurav, your view on the charts?
Not looking good. Take a stop at 380 and remain cautious.
Got it, Gaurav. Avinash, you mentioned on Angel One, but a view on Grow as well for the next 3 years is what Nagaraj is asking.
Yeah, I think Grow also should definitely be a good compounder, over the next 2 to 3 years. If he already has it, he should continue to hold.
Okay, the next one is on DWE Development, and Bhaskaran is asking this question. He wants to know if this is the right time to make an entry into this counter. Avinash, your view?
I think he should continue to hold. Fresh buying is not advisable.
Sagility bought at 50. Gaurav, should he continue to hold?
Take a stop at 42 and hold your position.
Okay, the next one is on Indian Bank. Rajesh from Indore is asking, he's bought an average price of 649. What is the short-term outlook for this counter? Gaurav?
Very positive. Hold on to your position. Take it trailing stop at 950.
Sterlite Tech bought at 118. Gaurav, should Raghuram continue to hold?
Yes, hold.
Got it. Well, that's the end of the first round of the rapid fire in this edition of Fast Profit. But viewers, stay tuned. A lot more stock-related queries on the other side after this very short break.
respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already, do start sending in your queries on the WhatsApp number that's flashing on the top of your screen. You can also call us, speak to us directly on your stock related query as well. The next one that's coming in is on E2E Networks and it's a short-term view. So let me welcome in Ajit Mishra, the SVP Research at Railgear Broking as well. Ajit, welcome to the show. What would you recommend on E2E Networks? Now our viewer Sarthak is holding 675 shares. Bought at 2792. Should he continue to hold for the next 6 months?
Yeah, good morning, Puneet. So, Puneet, it's been almost like, 1.5 year of volatile swings that the stock has been experiencing. Downside 1800 is the immediate base, where 3400, 3600 is the hurdle area. We were very close to the upper band of late after this recent surge of or a rebound. Today, we are seeing that the stock is down by roughly around 8%. Volumes are okay. We feel that this kind of volatility is difficult to handle if the view is very short term. And since his time horizon is 3 months to 6 months, I guess he can continue to hold his long positions. 2200 is now the immediate base. So with that as a stop loss, positionally he can hold with 3700, 3800 as a positional target.
Okay, all right. So that's the view with regards to where E2E network stands. We've got our next caller. Ram is calling us from Vadodara. Ram, hi. A very good morning to you. How can we help you?
Hi everyone. In my bucket there is two stocks are there. One is the Borona Waves. 69 stocks are there. Purchase rate 216 and Bellrise Industries 50 stocks at 99.23 rupees. So query is, should I need to hold or can I book profits?
Okay, so Ram, we have a policy of taking only one query per viewer. So you'll have to choose between Borana Weaves and Bellrise Industries.
Yeah, go with the Borana Waves.
Borana Weaves. Okay, I'll take this up with Avinash then. Avinash, your view with regards to Borana Weaves?
No, I think Borana Views he can continue to hold. See, Mahima, this is a company which has gone public about a year back, but numbers have been very strong. In fact, last year they made a profit of 42 crores. This year, I think they should end with 55 to 60 crores of PAT. And I think the management call, after the Q3 numbers has also been quite encouraging. Their expansion has also started. So the real benefit of the expanded capacity will be felt in FY27. So I think, the investor has purchased a good stock. I think if he can hold on for the next 6 to 12 months, a further better risk reward is possible. So continue to hold.
Got that view, Avinash. But another caller coming in from Bengaluru, and Venkat has a stock query for us. Venkat, very good morning. Welcome to the show. What's your query?
Yeah, very good morning to you, Puneet and Mahima. In fact, I have got a query regarding Infosys. Okay, I'm holding Infosys and Tech. But the query for Infosys is I'm holding 75 number of stocks at the rate of 1,700.
Okay.
Okay. And I've been holding for about a year or plus. And I've been keeping on listening to your channel, wherein both, the gentlemen like, Parag Thakkar and Kush Bora, they were telling it's a knee-jerk, thing is happening in the IT industry.
Right.
I need not bother, so I didn't sell it.
Right.
And will it still fall or no, I can hold it for about maybe 5 to 8 years' time?
Got it. Venkat, you
What
bought
is the
it
outlook it looks like?
Got it. Venkat, you bought it at 1,700, right? Is that correct?
Yeah, that's right.
That's right. Okay.
1,700.
Got it. Avinash, let me come to you because, IT has been a very disputed space, a lot of queries on that. Should Venkat average right now, continue to hold? What would you recommend?
No, I think even if he has to average, I would say that it's better to do in a piecemeal method. There's no need to hurry. I think, the stock is weak in the near term, but longer term, I think the AI kind of scenario is not going to impact it significantly. In fact, my sense is if the investor can hold for next 12 to 18 months, he could definitely expect a decent risk reward. Typically, they've already signed a JV with Anthropic. So, basically the company is making efforts to now look at the AI challenge in a more rational way. Numbers for fourth quarter, I think, are going to be critical. But I think most importantly, the investor should realize that it's already got a decent order book, a lot of cash on the book. So it's not a business which is going to disappear. So I think if you got the conviction for the next 12 to 18 months, average at the current level and stay invested. Volatility will continue in the short term, but longer term, I think once this AI scenario scare goes away, business will be back to usual.
Okay, all right. So that's the view coming on Infosys. We've got our next question, and this is coming in from Bhavani, who's writing us from Chennai, asking about Jyoti Labs. She's got 50 odd shares at an average price of 251. Wants to know if she can hold, sell, or maybe buy more from a long-term perspective. Avinash, I'll stick with you for this one. What's the view like?
From a longer term perspective, this company operates as a very large dominant player in the FMCG pack. I think FMCG businesses are growing slowly and steadily, backed by good rural demand, typically, low GST rates, low interest rates. So I think, the investor needs to stay invested here for at least the next 12 to 15 months. A good business, but I think the stock will move slowly. I mean, it's not one of those stocks which is a very high alpha stock, but yes, you can definitely expect a decent risk reward over the next 12 to 15 months.
Another caller now dialing in from Chennai, and Meenakshi has a stock query for us. Meenakshi, very good morning. Welcome to the show. What's your question?
Yeah. Good morning, sir. Actually, I'm holding Ola Electric shares, 200 shares at the rate of 102.8. I just wanted to know whether I can hold it or put the loss, sir. Thank you.
Got it, Meenakshi. I'm wondering who to go to for this question because the fundamentals definitely not supportive at this point of time. But Avinash, let me just come back to you because she's bought it at 100. Stock's almost down 75% from those levels. What would you recommend her to do from these? Is it a good time to book your loss, move out, or somewhere around 2022 it becomes attractive, maybe in terms of EV to sales metric or market cap to sales? What would you recommend?
So, Puneet, this is really a very difficult question because, the investor has lost a significant amount of capital. But my sense is that, I think at 25 rupees, maybe, the downside is at least capped for the time being. But definitely, if you ask me honestly, how the investor will make money here, it all depends on the performance of the company. I think performance in the Q3 number has been extremely bad. The losses have increased, the volumes have come down. And I think, the most significant negative part about this company is the narrative has always been strong, but the numbers have never been delivered. So my sense is maybe another quarter she can wait, but I think otherwise, hopefully if she gets an upside, it's better to exit because, in these companies, it's very difficult to quantify what kind of risk reward may happen after the stock is corrected by almost 75-80%.
That's definitely bold of you to say that it could be something to look at after whatever has happened. But Ajit, I can't let you off the hook with this one. Your view on Ola Electric, is this the bottom?
Puneet, I see this as a gradual or a grinding decline. Stock is at the record lows. If you form a channel joining us to major lows, maybe close to around 22, 21 is the area where it might find support. But are we going to see a very strong recovery post that? It's still very doubtful because we are still seeing decent volumes during decline. So those people who are stuck at higher levels earlier, they were anticipating a bit of a relief. I guess they are liquidating their position. So maybe around 22, 21, it might witness a breather. 30 is going to be the very strong resistance area in the immediate future. So in case if it manages to cross that barrier and move toward, let's say 35, 37, consider liquidating your position.
Okay, all right. So that's it. Coming in on Ola Electric. We've got our next caller. Sujal is calling us from Bengaluru. Sujal, hi. A very good morning to you. What's your query about?
Yeah, very good morning to you. Thanks for taking the call. I have an investment of 5 lakhs. So I just wanted to know, is it the right time to enter? And then if it is right time, and then what could be my best strategy to investment?
And what is the time period that you're looking at?
A long time, please.
Okay, all right. Avinash, she's got 5 lakhs to invest in right now. What are the counters that you would suggest?
No, I think better to put your money in large caps, stocks like Mahindra and Mahindra, or for that reason, something like an Ashok Leyland. Auto is definitely a space which we like, and we feel that next 6 to 12 months could be quite promising, considering that GST cuts have come in, interest rates have gone down, rural demand is increasing. So I think in both these spaces, commercial vehicles as well as tractors and UVs, I think these are very large companies where the capital also will be relatively safe and the risk reward will be quite decent.
Okay, all right. So that's the view coming in with regards to where you can park your money right now. Large caps is the preference that Avinash has. But viewers, time to slip into a very, very short break. We'll be right back answering more queries on the other side. So do stay tuned.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
Welcome back. You're watching Ask Profit here at NDTV Profit. I take up the next question, which is from Nagababu, who's writing us from Andhra Pradesh. He's holding Fed Bank Financial Services at the levels of 136. He's got 136 shares at an average price of 140. He wants to know if he can continue to hold this, and if he wants to add, what are the levels that he should add this counter at? Ajit, your view?
So Federal Bank Financial Services, we are seeing that the stock has been consolidating in a range. Tone looks positive overall. Even at current levels, we feel that the upside is going to be gradual. So means in the range of 130-35, that could be the probable range with stop at 120 and positional target of 155 to 160.
Got that view, Ajit. But the next question that's coming in is actually on UPL. It's actually another stock with IDFC that's down and out in trade today. We saw post on Friday, post the market session ended, the restructuring announced and stocks down almost 13%. Avinash, firstly, how do you view this counter? And actually, our viewer is holding shares at 480. Should he book out, continue to hold? What would you recommend?
No, I think currently, the market is little confused and little upset on the valuation norm, and basically valuation details have not been disclosed. So, that is the reason the market is little uncertain. My guess is that some more clarity needs to come out for this demerger. I think the seed business is going to be demerged into a separate company. And obviously, the existing shareholders of UPL would benefit. But I think because the valuation and the clarity has not come in, the market is giving it a thumbs down. My sense is at these levels, it's not advisable to sell in panic. I think wait for the markets to settle down. I think you would definitely get some management clarification on this aspect. And I think over the next 6 to 12 months, hopefully this demerger move will be beneficial. So I think, if the investor wants to exit out of his existing position, he can get out. But if he wants to have a slightly longer term call over the next 12, 15 months, he should hold on.
Okay, all right. So that's the view coming on UPL. Probably the stock is down because of the reason that despite of the restructuring, there is no clear picture right now with regards to the debt position of the company. But moving on, the next question is from Ekambar. I was asking about Godrej Properties. He's got 50 odd shares at the levels of 1786. He wants to know if he can hold or exit and understand as to what should be the next course of action for him. Avinash, I'll stick with you for this one. He's also asking that if he exits this counter, should he invest into Maruti? Is that the right thing to do?
No, I think my guess is, he could exit, but typically, I think, my sense is that we would still be more positive on companies like Ashok Leyland, Mahindra and Mahindra, and maybe in the data center theme, something like Anant Raj, where possibly the traction is going to be quite significant over the next 12 to 18 months. So I think, these could be choices where you could take a call.
Got that view, Avinash. But the next question that's coming in now, it's on Tata Steel. A short-term view, Ajit, is what our viewer is actually asking. Soma Sekhar from Bengaluru, holding Tata Steel at 181. So currently in a decent profit. Should he continue to hold?
So in fact, Puneet, the metal as a pack is still, witnessing rotational buying. Some of the names like Tata Steel, JSW Steel, Jindal Steel. So definitely you should stay put. Now the trading stop should be at 200, where we have seen a decent pace formation. In the next leg, let's say about 212, the stock can gradually inch toward 220, 225 levels. So if the view is short term around that area, I can consider booking some partial profits.
All right, so that's the view coming in on Tata Steel. The next question is from Raghu. He's currently holding a long position in BEL with an average price of 263. He says that given the current market valuation, the stock's recent performance, he's evaluating his exit strategy. Should I consider booking partial profits at this stage? What is the fundamental justification for this particular counter? Okay, so Avinash, I'll take this up with you. Would you recommend him to book his partial profits, or would you recommend him to continue to hold the counter?
No, I think he can book out part profits here because he's made a decent upside. But I think the rest of the quantity he should hold on, because see, this is one company where our sense is that Safran, who's one of the French companies, has done a JV with the company. So the benefit of this deal plus the existing order book is going to give a lot of traction for the company over the next 2 years. So I think defense business is growing very rapidly. They have a very healthy balance sheet. So 50% one could book out, and the rest one could take a time frame of 12-18 months. Obviously, the risk reward going forward will be much better.
Got your view, Avinash. But the next question that's coming in from Pune, and Dhyanesh is having a stock query for us. Welcome to the show. What's your query?
Yeah, my query is I have 200 shares of Bharat Dynamics bought at 1526.
And do you want to hold it for the long term?
Yeah, actually, I have bought it for long term, but since last 6 months, I think the share has dropped. So I wanted your suggestion.
Got it. Avinash, is it a good time to continue holding Bharat Dynamics? Is it also a good time to average down? What would you recommend?
Well, I think, if the investor has a 2-year kind of time frame, the runway definitely looks good. They have a healthy order book, and, in case of surface to air missiles, BDL is a very prominent supplier. In fact, they have been exporting their products to quite a few countries. And typically, Q3 was a soft quarter, but Q4 is expected to be a strong quarter with better execution. So I think, you can even average, but keep a time frame of at least 18 to 24 months, because at these levels, the stock appears to be fair to expensive. So the market should obviously reward the company with a better earnings multiple, on FY27 numbers.
Okay, the next question that we have is from Yash, is asking about Senco Gold. Is bought at the levels of 365 rupees and 100 shares is what he's holding. He wants to know if he can hold or sell. Ajit, your view on the charts for Senco Gold?
So, Mahima, extreme volatility is what the stock has been experiencing for almost 4-5 months. 250, 360, broadly that's the range. Currently, we are in the middle of the band while holding below the long-term averages. So possibly an attempt on recovery toward, let's say, 40, 45 is still possible. But a sustained move seems difficult considering we have multiple resistances around 355, 360 area. So use any recovery to reduce your position. In the interim, maintain a stop at 310.
Got that view, Ajit. But next question is on SKF India. Srikanth from Bengaluru is asking if it's a good time to enter this counter. Avinash, I think he's not mentioned which one because I think there are two entities now, but what would you recommend?
I think the auto bearing player, I think should benefit because clearly with the commercial vehicle, with the two-wheeler and the passenger car segment doing well, SKF is a very large vendor in the ball bearing space. And typically, I think after the demerger, the return on capital employed, the earnings growth is expected to do well. So I think, if the investor can wait for the next 12 to 15 months, he could definitely start buying slowly. I mean, maybe he might deploy 25% now and wait for the next quarter results. But typically, it's a calendar year company, so obviously the January to March numbers should be reasonably good, coinciding with the kind of growth auto sector normally shows in the Jan to March quarter.
Okay, all right. So that's the view coming on SKF India. The next question is from K. Parthasarathy, who's writing us from Chennai, asking about Lemon Tree. He's got 100 odd shares at the levels of 148. He wants to know if he can continue to hold, add, sell from a long-term perspective. Avinash, your view, because considering that they've continuously added rooms in the last couple of quarters, that's now started to play out in terms of where the operation metrics also stand. So what's the view like?
So longer term, I think Lemon Tree will do well because they have targeted the middle and the affordable segment, and that's the largest part of the hospitality market. But I think they have also announced some restructuring, Mahima. I think that also will get reflected in FY27. So I think the balance sheet will also get a lot leaner. The ROC will improve. The earnings will also improve. So I think to that extent, the investor should wait for the fourth quarter numbers. And I think here you need to invest for a slightly longer period, 12 to 18 months. Only then I think you could get a decent risk reward, from the investors who have purchased it at around 130, 140 levels.
Got that view, Avinash. But the next question also, and it's a difficult one, but Anish from Kolkata actually has this question, holding Prince Pipe at 615. Now he's holding it since the last 4 years. Stock's been an underperformer in that space as a whole. But what would you recommend, Ajit, in that sense, because he's sitting on a loss of almost 2.8 lakh rupees. Does it give any indication of coming back to some of those elevated levels of where he would have bought it? What would you recommend Anish to do?
So Puneet, yes, it's underperforming, and in fact, the recent attempt of recovery also failed out, at multiple occasions. The only silver lining is that the last time the area closed around 230-35 from where it has rebounded. Same after this recent retest, we are seeing bit of a breather and consolidation. So probably we may see a rebound attempt again towards, let's say, 280 290 zone. And in case if it manages to surpass this level, then probably 340 350 is also possible in this rebound. So in my opinion, until we break this support zone, we should definitely continue to stay put. So 230 should now be his stop loss for this position, and above 290 he can trail his stop loss to 250 and wait for 340 350 and reevaluate his position again.
Okay, all right. So that's you coming on Prince Pipes. But Avinash as well as Ajit, it's time for a rapid fire round. Try to keep your answers as short as possible. The first question is from Soumya, who's writing us from Bengaluru, asking about Ashoka Buildcon. Is this the right time to buy, Ajit?
Avoid.
Aegis Vopak, Avinash, bought by Harjit at 228. Stocks up 9% today. What would you recommend?
Yeah, I think continue to hold.
Okay, 2,000 shares of NCC bought at the levels of 150. Can I continue to hold or sell? Ram is asking from Hyderabad. Ajit, your view?
Hold with stop at 140.
The next question is coming from Mohan. He's holding Jubilant Foodworks at 555. Avinash, what would you recommend?
Yeah, continue to hold.
Okay, Moshchip is the next one. Prabhakar wants to know if this is a good time to make an entry into this counter. Ajit, your view?
Maintain strict stop at 188 or 225 to 30 as position targets.
Sandhar Tech, Ajit bought at 565, holding 120 shares as Prasanna. Should he continue to do so?
Hold.
Okay, Dixon Tech is the next one. Kajal from Maharashtra is holding 6 shares at the levels of 18,290. She's sitting on a loss of 45,000 rupees. Can she continue to hold from a long-term perspective, Avinash?
Yeah, continue to hold.
Is it a good time to enter Hindalco, Avinash?
Yeah, I think from a longer-term perspective, yes.
Okay, the next one is on Force Motors. Bhanu from Hyderabad wants to know if he can enter right now from a short-term perspective. Ajit?
Maintain stop at 22,000 for 27,000, 28,000 as the position targets.
Novartis India, V. Nagaraja is actually bought at 635, Avinash. He's asking if he should continue to hold or book some profits now that post the announcement of the stake sale.
No, I think he should hold on. I think probably he could get a better price to exit.
Okay, Vikrant Engineering is the next one. Seemant from Bhopal is asking if he can continue to hold this for the next 6 months. Ajit, your view?
Better to exit.
Next one is on Thomas Cook, bought at 183 by Gautam, who's a regular viewer. Ajit, what should he do for the next few months?
Use recovery to reduce. In the interim, maintain stop at 100.
Okay, 50 shares of M&M bought at the levels of 3470. Can I add more or sell? I know Avinash's view, but Ajit, your view on the charts?
Yeah, you can add more.
Bank of Maharashtra at 56, held by Tejas. Avinash, what should he do?
I think he should continue to hold.
Okay, the next one is on Paradeep Phosphates. Is there a reversal that we can expect from here for the next 1 month? Ulus is asking this question. Ajit, your view on the charts?
Extreme oversold, rebound likely, but upside seems capped. So maintain stop at 110 and 132, 135, review the position.
Nitin has actually bought Union Bank shares at 165, but Avinash is holding 46,000 shares. Should he continue to do so, book some profits now?
Yeah, I think some profit booking advisable, rest he can hold on.
Well, got that view, Avinash as well as Ajit. Thanks so much for joining in and helping us solve all those stock-related queries. That's the end of the Rapid Fire as well as this edition of Fast Profit. And we've been able to solve 55 queries. So thanks so much to both of you. If we have missed your query, we will start taking all of them at 2 p.m. in our Ask Profit, the afternoon edition. To do, stay tuned for that. But thanks so much for joining in. A lot more action on the other side.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. I've got a very interesting company. It's been buzzing in trade also, but I won't give you the name before that. I'll give you some hints. Try to guess it. It'll be easier for you. The company manufactures heat exchange and HVACs. It's an interesting full form. I'll give you that option, but this is a hint. The second hint is it's based out of Neemrana, Rajasthan. It's coming from RICO. It's like an SEZ with a lot of benefits. Also, the stock, it has been listed in 2024 and it's up 313%. When it comes to the IPO price, that means it's been a multi-bag up. So now you must be understanding what this company is all about, and largely in this sector itself, if I talk about it, there's only one proper play. Of course, there are some larger MNCs also who are having some kind of a product portfolio, but specific is KRN Heat Exchangers. This is the company I'm talking about. Everybody is talking about it. But why are we calling this company right now? Earnings season is over. Data center theme is also playing out. Stock is also buzzing in trade. So let's list down the key reasons why KRN Heat Exchanger is important. The growth plans for 2027. This becomes very much important. Anything you see, any cooling solution you see, there needs a lot of structures behind it, and that is where this company comes in. What will be the margin outlook of fourth quarter, and will there be more inventory gains? We already saw that in Q3, and that's why the EBITDA margins were up. That is one question to be asked, and of course this is the second question. Both of them are correlated. And also, apart from these numbers, we will be asking about the new bus AC segment. They have acquired an interesting name, so we will be asking the management what's the outlook going ahead, what's the incremental benefit coming like. And if you look at it, the international expansion plans, global heat is also there, global warming is there. It's less than 20% of exports, but nevertheless, Middle East and US, that's where we'll be focusing. And on the show, we'll have Santosh Kumar Yadav. He's the CMD of KRN Heat Exchangers, and everybody's talking about this stock. So that's something which we'll be watching out for. But let me give you some more details about the company, what everything is all about, and then we'll get our doubts clarified also by Santosh. The first thing is it's based out of Neemrana in Rajasthan, and company designs, manufactures, supplies tube type heat exchanger. This is something which you do not see. It's inside the ACs, inside the compressors. So you might see the cold, but the entire machinery is something which the company makes inside. This is used for heat ventilation, AV and registration industry. So I'm talking about HVAC. So that is where these formula start coming in. Now this company was listed on both the exchanges on 3rd October 2024. Remember, the financial history, the shareholding history will be very limited because it was recently listed, it's just been 1 year. The company has acquired bus AC division of Spear Refrigeration System. That is where the incremental question starts coming in. Company makes 5 mm to 15.88 mm heat exchanger tubes. These are those smaller tubes which are combined together in different AC and ventilation setups. Now the company is having 2 manufacturing facilities and both of them are in Rajasthan. And looking at that production, that is around 10 lakh or 1 million units is something which the company is producing. In terms of components, 84% sales are being done domestically as well. That means the remaining 16% is for your exports. HVAC full form means heating, ventilation and air cooling. This is something which you should know, but to whom do they give their business to? To the OEMs also. That's why we call them original equipment manufacturers. These are the small alerts which is very important when you analyze a company like KRN Heat Exchangers. There are key triggers for it which is very much important. Management has reiterated 20 or 50% capacity utilization for the next 2 financial years. This is very much important. You should note that down. The second trigger is the data center order growth. That is where the interest is coming in the markets and expected that the medium term growth would be very strong. the tariff overhang that has actually gone, and the company might be increasing their penetration strategies, at least for European Union and America also. Remember, Middle East also, they are having a good proportion of revenue coming in the exports. The data centers business, they're capturing 15% of market share over the next 3 to 4 years. That is why the street is very bullish on this counter, and a very significant up move has come in. I'll give you all those details in the street cred. But the export revenue breakup, how things are looking like, the real action, of course, Middle East and America, that is where the entire setup is looking like. And this industry itself is growing, and it's a sustainable growing coming in. Also, let's look at the other key numbers also apart from this. The marquee clients are there. Whichever AC you want, major of them, the key components are there from Care & Heat Exchangers. We check Daikin AC, Schneider, all of them doing well. And remember, the entire industry, the Indian HVAC industry, that is a CAGR of 14.5% till 2029. So there is a big industry to be addressed to and to look at. So this is the entire setup coming in for the industry and the company. But to give you more perspective on our show, what we do, there are roughly 8 parameters where we track a company, and let's just get all of them to judge a company in KYC. It includes income statement, balance sheet, cash flow, return ratios. That is also something which we watch out for. Non-numbers, it's the shareholding, street cred, how much money it has been made, has it been a multi-bagger from IPO? All these questions will be answered in this query. Valuation, largely the peers I have not tracked. I've given the actual valuations of what the peak numbers could look like, because we need to be very fair in our analysis. It should be apple to apple comparison and outlook. Industry bhi, company bhi kya karta hai, that is something we would be focusing on. But let's start with the first parameter. That is the income statement. And remember, in our analysis, we track the Q3 numbers also. So largely we see the numbers are going well. The net profit, that has gone up to almost 53 odd crore. Little bit of pressure in the margins, but that's the FY25 number. The Q3 numbers are on the higher side when it comes to the margins, and that is what we have picked up the numbers for. And that's the growth coming in. Look at that. From 14.2%, this has gone to 20.3%. Will this sustain going ahead, or is this just an inventory bump up? That's what we'll ask Santosh and get our clarity. Q4 is something to watch out for, and FY27. So all side the numbers are looking very strong, and that is where it's showing strength coming in. So Q3 numbers have been good. So net, I will be giving this a strong thumbs up when it comes to the income statement. Next one is the balance sheet. Balance sheet is very much important. I checked the interest coverage ratio. They are increasing. That's actually showing a good strength. The debt equity ratio, that is also down. That's why you're seeing the borrowing from 60 odd crores. It has come down to 33 odd crores. That means there's been a good balance sheet management, especially after using the IPO proceeds as well. And net, the cash bank balance is also there. Despite an acquisition announcement, the company is still having a sizable 151 crore cash balance also. This actually helps the liquidity ratios going ahead. So for the balance sheet also, I will be giving this a strong thumbs up. We spoke about income statement, we spoke about balance sheet. Let's talk about the cash flow segment, how things are moving. And if you'd like to point out, it's very much important to understand, how much type of, operating cash flows are coming in and going out as self. This is a very limited history. So to be honest, we need to be fair in our analysis. The PAT number has gone up. The cash flow to PAT conversion is also good. And because of these two ratios, I feel the cash flow would be better coming in for Care & Heat Exchangers. And it's a thumbs up when it comes to the cash flow segment as well. A little bit of concern starts coming in, and that's the return ratio, the ROE numbers and the ROC numbers. That is something we need clarity from Santosh, is how do we judge this company? There was a big up move. Remember, at that time it was not listed, and this was a standalone number. The consolidated numbers coming from FY24 and FY25, but still from 30 odd percent it has gone down to 11%. Just show the ROC numbers and ROE also. You'll understand the change which is happening. Is this business specific? Is this industry specific, or is this account specific? All of these details will be asked to Santosh. So it's a negative, I would say, when it comes to the return ratios. The market also needs to understand why this is happening. Also, let's talk about the other ratios, and that's the shareholding pattern. And look at the shareholding pattern. The promoter holding has been decent, but the jump, the interest which has come in post the listing, from 1%, this has gone up to 5%, from 6%, that's gone up to almost 7% odd. So DIs have increased, FIs have increased. So there it seems like a very positive momentum is coming to the stock, and right now also we saw is that a good momentum is coming. So this is a shareholding pattern. It's a strong thumbs up when it comes to the overall numbers. Let's also talk about the street cred, how much returns have come in for the investors, be it short term, be it long term. That is what we'll be looking at. And if you could just show how the numbers have come up from January 26 lows onward. This is just 1 month. The stock is up 55%. It's been a vertical up move coming in, almost a parabolical move coming in. Of course, 1 year basis, stock is decent, up 10%. There was a period when the stock was flat, but if you have got the allotment in IPO, congratulations to you. If you're holding it, stock has given you 313% return, and this IPO just came in at the end of 2024. This is a matter of just 12 to 15 months. The stock has been a multi-bagger. Of course, the listing was also very strong, so do remember that. But nevertheless, the stock has done really well for medium term, short term, and the IPO investors. So I will be giving this a strong thumbs up when it comes to the street cred. Let's talk about the valuations, how they actually pan out, and we have taken the 12-month forward P valuations. There was an euphoria in this counter. This was almost 56 times its P, but after that it has corrected. But remember the up move which has happened recently, still the stock is cheaper, almost 42 times. But let's just give it a break. Why? Stock has run up also, and if you're reading this right now, if you're seeing this show right now, it's at 42 times right now. So there has been an uptake from almost 30 times to 42 times in a matter of a month. So you need to exercise that caution as well. Is it more cheaper compared to its peak level? Yes. Compared to current levels, there might be a second thought. So it's a neutral rating when it comes to the valuations. But valuations ke baad, there's one more important parameter to check, and that's the outlook. That's for, of course, the industry and the company. Most importantly, let's look at the data, how things actually panning out. And this is the number which I'm repeatedly saying is 14.5% up move is coming for the domestic market. And this is a very big theme in the making. The second important thing is this demand which is happening in both residential and retail consumer segment. And as things get quantified, more benefit starts coming in for a company like this. They are diversifying their customer base and increasing their market share as well. We'll ask the management what's the market share actually they are enjoying and how much it can go up. The growth is coming in data center, commercial space, and industrial cooling. And as industrialization picks up in India, the company becomes a beneficiary. There's a new manufacturing facility also which will be inaugurated on March 11. So we'll be asking the management about all these key details. But as of now, outlook, it's a strong thumbs up as well for both company and industry. But let's revise all the ratings, how things are actually panning out, and the income statement, balance sheet, cash flow, all of them have been decent. But return ratios, that's very suppressed coming in. That remains a concern for my analysis. Shareholding, street cred doing really well, but valuations, they have run up in the last 1 month. So you should take things with a pinch of salt. Outlook remains strong, especially because of the industry number which I looked at, and that's good. So overall, the KYC rating on the higher side comes in at 6.5 out of 8 we give for KRN Heat Exchangers. But joining us would be Santosh Kumar Yadav. He's the chairman and managing director of KRN Heat Exchangers with 19 years experience in this industry. And interestingly, he's the ex-head of operations and Lloyd Electric and Engineering. So joining us is Mr. Santosh. Good afternoon to you, Mr. Santosh. It's always a pleasure to talk with you. But the company of the moment, KRN Heat Exchangers, we just like to understand, what are the key growth levers like for the company going ahead? We already spoke earlier on data centers, but what it means now going ahead?
Yeah, good afternoon, Sharad. So I think recently, honestly, we always don't know why our share was down and why is going up. So however, now I think India market is, hoping for data center especially. So last, I think week have our AI summit in New Delhi and of course in Bombay. So many players, they announced good investment in data center in India. And we are one of the beneficiary for data centers. So that's why I think investor is keen to in our shares and is doing good since last week. So as I said in before our multiple calls, we are the key component manufacturer for especially data center cooling. So we hope ki whatever order will enjoy India market. So based on our capacity, capability, and our legacy in particular in data center, we will be able to, I think, achieve at least 50% of the total requirement for India market for heat exchanger. And of course, we are supplying to maximum to complete HVAC manufacturer for data center. And whatever like one or two still we are not supplying, we are connect with them already, and we have RFQ from them. So hoping in next one or couple of months we will start to them as well.
Okay, Santosh ji, a little bit of our audience needs to understand your product profile, what it is. It's generally something which is behind an AC or behind, you could say, cooling solutions. It's all around us, but we can't see it. Is it right?
No, if outer side, I think you can unable to see, but backside, if you see like especially room air conditioning, so condenser can be visible like behind the small visibility is there. But however, like in air cooled chiller, you can able to see from outside as well. But it's quite technical, so that's why you can say you are not able to see. But of course, it's the key part of the HVAC system. So we always say we make like HVAC and our industries are heating, ventilation, air conditioning, and refrigeration. So whatever complete HVAC system in their industry, so we supply our components. So there is the two component, like one is the heating side and one cooling side. So you always say condenser and evaporator. But now it's a heating pump as well, so it can reverse in based on season. So we supply mainly in our commercial industry. Our market share is almost zero from room air conditioning. So what you said, like growth is room air conditioning or maybe 14 to or maybe 15%, but in commercial is much more, around 25%, especially you can see bus air conditioning, and then of course metro, train, and cold storage is quite good now since last year. They are doing good, especially dark store, whatever they are like is.
And Santosh ji, talking about the margins, this Q3 number, the margins was 20.3%, and there was, of course, an inventory bump up also. Just want to understand what will be the sustainable margins going ahead on a consolidated or a blended basis for Q4 or FY27. Any range is also fine.
So I hope our maybe tough time for margins is still now only, or maybe maximum this quarter only, because our new facility is already started, and now we are ramping up from our new facility. So our overhead or maybe labor cost already increased from new facility. So next year we will be able to sustain our existing margin, and we will able to increase some percentage. Because in next year we are going to receive PLI, which we have already, but this year we are going to receive, but next year we are going to receive for sure. Then we are going to receive our RIPS incentive as well from next year. So, and our labor cost or maybe overhead can be reduced based on our top line once increase. So I think we can enough sustain, and also I'm hoping we can able to increase in some percentage.
There is two elements at play, right? One is the backward integration, and the plants being in RICO, there are some benefits also which come in. So that will also aid the margins going ahead?
Yes, backward integration, you can see we did, especially in manifold like it, our tubing section, and of course in sheet metal. So earlier some parts we are buying from outside, but now we are not buying. So that will also help to increase. And also, especially some products, what we added is really have much margins compared to our existing, especially in bar and plate heat exchanger. Secondly, is complete bus air conditioning. So these two main like component or complete HVAC system will able to also slightly up to our existing margin.
Right. And Santosh ji, your outlook for the new bus AC segment. Now, this is a new area which your company is going. Just give us the details about this, and by when can the incremental benefit starts coming in for this new segment of the bus AC?
So if you see complete bus air conditioning as on today, as per my personal opinion, is 1,000 crore market size for especially in India, and almost three company have a complete 90 to 95% market share. And as Indian company one, they have I think 60 to 70% market share. So if I compare in all three big players, we are the on top in terms of backward integration. And which company we bought, they have legacy I think more than 15 years in that particular field. but they are unable to do goods because of finance issue. So now we already have ramping up already like this quarter, including this quarter, we are going to achieve around I think 500 bus complete air conditioning for this quarter, and then next year we able to target at least we can able to achieve 15% of market share in next year for complete India market. For that, we already had almost 15 people in sales, and the main key criteria to market share of bus air conditioning, especially service center, so that we know, and my team already know. So we'll already open 5 service center in India, and each month we are going to open. So fully 25 or 30 like service center pan India we are going to open within next year. So that is the key criteria to get the market share for bus air conditioning, complete bus air conditioning.
And Santoshji, talking about the international business, it's roughly 16% of your revenue, that's much I know. But there seems to be a good demand in Middle East and US also. Just wanted to ask your views now, since a lot of trade deals are coming in India's favor. What would be your strategy in the international expansion? Which countries the inquiries have picked up?
So earlier, what we are exporting to our existing customer, so you can see we are able to increase numbers in export, but maximum revenue we are receiving is still on our existing customer. You can say from old customer only. But from old facility, we are not able to cater their new customer requirement or some you can say good numbers. But based on that, actually, we built our new facility, which is now operational, and we added some new geometry to key in mind to like requirement from especially North America and Europe. So from both sides now, I think tariff deal also is done. That is good for us. So we have already one president as on roll like as a sales for export. So he's still in the USA, and multiple inquiry we have, multiple RFQ we have. So we already supplied some of samples, some now we are going to supply. So this year we are able to at least like next financial year, where I think we are hoping to we can able to at least 60 to 70% on existing revenue only from export. Like we will jump.
And Santoshji, what about the capacity utilization levels? You know, what are the expecting at least for FY27? You know, for your businesses, what are the targets?
So next year we are like planning to utilize around 50% capacity from our new facility only, and after that we are planning to at least 80%. So on the same we are doing anything since last week. I think not last week, last quarter we added almost 40 plus new customer, including our existing as well as new products, especially from bar and play, bus air conditioning and refrigerator components. So things are going from right direction, and we are hoping we will be able to achieve 50% from.
Right. And Santoshji, the thing is there's a lot of volatility in the metal prices. Let it be copper, aluminium. A lot of them are a key raw material for you. How do you hedge your risks in this? And if any kind of adverse movements happens, what do you do? Just as clarity on that.
So I think still you can see price volatility is quite much in last quarter, but we have almost with all customer contract like that ki last quarter average we will apply for next quarter billing. So quarter to quarter basis, sometime you can say ki some percentage or like slightly we can hit, but we have always invented 2.5 months and almost 20 days or 1 month under transit material. So I think directly we not affect from volatility. However, we can pass to our customer easily quarter on quarter basis. So if you compare like around yearly basis is no effect on us, but quarter to quarter basis, sometime you can say slightly hit or some slightly gain.
Exactly. So quarter to quarter, if you see, there might be some kind of volatility coming in and there'll be some pass-throughs as well. But Santoshji, to put in perspective, apart from data centers, there is of course the industrialization taking place and larger cities or setups are being made in the commercial space as well. How are the demand trends or the client confidence looking like in these sectors, you know, which are the new sectors except data center? We have talked extensively on that. What are the key new emerging sectors where you are getting more business?
So we have tracked like that. We are still I think our top 80% revenue from top 10 customer only, but we have now on board almost 250 customer. So we have order or maybe forecast or from all sectors, and that's why we added this new big facility. I think all sector is growing except for us is I think we are not working in room air conditioning, so we are not enjoying room air conditioning growth. But the other sector, of course, we have multiple customer, multiple applications, and that's why we are saying we are going to achieve 50% capitalization from new facility. So for us, bus air conditioning also we are seeing good, and of course this bar and plate we are seeing. So last week only we got approved for our field trial as well from BLW. So now we can enter in as a tendering based 20% business. For,
Right.
As a
So that's
government
the
vendor.
view coming in. All right. Thanks a lot, Santosh sir, for giving your time and giving the entire picture of KRN heat exchangers and what it lies for the industry. It's always good to talk with you. Always a pleasure. Thank you very much, sir, joining in. Thank you.
Thank you.
So that's the management of KRN heat exchangers. The stock has jumped up more than 55% in the last 1 month, and we clarified a lot of queries which have been put up by our KYC viewers. That's all, folks, for today. Stay tuned to NDTV Profit.
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice.
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Dalal Street starts the week on decent footing but gives up the early morning gains. Nifty hovers above 25,600 levels. Sensex jumps more than 300 points. PSU banks lead the gains and autos were in top gear. IT on the flip side still continues to drag. IDFC First Bank and AU Small Finance Bank tank in trade. This after the Haryana state government de-impanels all the bank accounts held in both banks across the state. The move comes after IDFC First Bank disclosed a 590 crore rupees fraud by its employees and others in accounts held by the Haryana government. UPL tanks after it announces plans for restructuring. Will carve out its global crop protection units and merge them into a new listed entity. Concerns of debt burden ails the stock. The tariff tangle continues to baffle global community with President Donald Trump now slapping 15% tariffs after the US Supreme Court struck down his earlier policies. Global economists and legal community, however, argue over the legitimacy of these new levies. Two main board IPOs open for subscription. Renewable energy provider CleanMax to raise over 3,000 crore rupees. Cotton yarn manufacturer Shriram Twistex will raise little over 100 crores. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and let's take a look at where the markets are at noon today. So Nifty 50 clearly in a tight range, but did open with a gap up opening after what all transpired on the US tariff as well as the Supreme Court judgment, and then the reaction coming in from US President Donald Trump. So it opened with a gap up opening. 150 points is what it has in a tight range that it has traded in. But right now it is losing steam and inching closer to the low point of the trading session. So keep an eye out on Nifty 50, of course, holding the 25,650 mark at the current moment. Take a look at Bank Nifty. That is showing quite an underperformance to the key index of Nifty, and that is flat to negative in trade. But take a look at some of the factors which are really impacting Bank Nifty. Otherwise, it would have been an outperformer in trade today. IDFC as well as AU Small Finance Bank, these are the biggest drags because of the Haryana government de-empanelment as well as the fraud case coming out, and those are the two counters solely dragging Bank Nifty down and showing that particular underperformance. IndusInd Bank also is the only other counter in the red amongst the Bank Nifty constitution in the stack of Bank Nifty. So that is the contribution chart for Bank Nifty. Barring these three companies, and especially IDFC and AU Small Finance Bank taking a very deep cut, Bank Nifty would have been an outperformer in trade. And also remember, lessening the gap between PSU Bank Index as well as Bank Nifty gap, because remember, PSU Bank Index is the top performer in trade today, and there has been a lot of talk between how private Nifty banks are not the ones which are performing as well as the PSU banks. That gap would have narrowed not if it was not for the two companies on the news developments really dragging in trade. Let's take a look at contribution on Nifty. HDFC Bank with 40 points being added. HDFC Bank had a weakish trade in the last week and has come back with a lot of strength today. So Axis, Kotak, HDFC Bank, State Bank of India are the top contributors, and the biggest drags on Nifty 50 remain to be the IT space, especially Infosys, and metals counters are not doing that well, and consumption along with Asian Paints, ITC and some of the others, Eternal, are a drag. So IT index could be one of the sore points for the market, and not just in the key indices and the big ones, but even in the mid-cap space. It is the mid-cap universe of IT mid-cap index, which is also on a drag, along with two other counters, UPL as well as Godfrey Phillips. These two are really dragging the overall mid-cap index down, as well as a huge underperformance shown when it comes to mid-cap index today to the key indices of Nifty 50. So keep an eye out on the markets, and these are the momentums really playing out. But let's focus on one particular counter. We are talking about Vikram Solar, which has announced a series of updates coming in alongside its Q3 performance. Margins, remember, for this particular company have softened on account of a change in product mix. And we are now joined by the management. Gyanesh Chaudhary, who's the CMD at Vikram Solar, now joins in today. Vikram Solar stock is 2% down in trade. Gyanesh, always a pleasure to welcome you on NDTV Profit. A lot of developments and a lot of aspects to really watch out for. But first, to the question of the stakeholders. The stock is soft in trade. Of course, your 6 months lock-in period after your IPO has just been lifted, and therefore probably it's the selling pressure coming in from your long-term investors who are logged in. So for the new investors, what would be your pitch point point for this stock to really show growth and return from here on, and for them to really stay invested in your company?
Thank you so much for having me. I think as a renewable sector, what I can tell you is that the fundamentals are so strong. They're beyond what we have anticipated, what's coming up in the future. We recently saw the AI summit happen, and where is AI energy going to come from? It's going to come from renewable sources itself. So whatever the slated outlay for renewable deployment is, we are expecting that to increase multifold, considering all of these developments are happening. So the sector is strong. Vikram Solar is strong. We are performing well in the entire journey, post IPO, pre IPO also. I think and March is going to be quite reinforcing all of these claims for us.
Right. So, Gyanesh, we haven't spoken to you after the recent development of 2,000 crores pact that you did with Jupiter International, also ascertaining and also assuring the kind of assured list, approved list of modules and manufacturers, and those solar cells have been really now got in the pact. Now, with this particular agreement and assuring the supply chain constraints do not impact you, how is the performance going to get impacted? And you also have a series of expansion projects. How is this going to really fit in and impact a smoother sale?
The government of India has very nicely created a longish target for manufacturers like us who are looking at a long-term stable play. And that allows for us to kind of dig deep into our overall capex outlay and growth plans. While the market is consistently growing, last year India deployed 25-27 gigawatt. This year the run rate is touching about 40 plus 42. So there is a significant improvement in how deployment is being looked at. While this is happening, manufacturers also see the approved list of manufacturers coming into play from June this year, which allows for domestic cell to be the main source of deployment for solar panels. This for us is going to be a slow and steady ramp up, whereas we see that the demand for domestic content is increasing, but the real swing will happen in the next fiscal, where we in the fiscal 27-28, where we see that all the large IPPs will be bidding and winning large projects. In the meantime, to address the domestic content market, we have signed up with an offtake agreement with Jupiter, and that will help us ride through this current year where we need limited domestic content cell supply. Our plant is well on track and slated to come upstream by Q3 fiscal this year, and that will help us to commission, ramp up, and successfully give out domestic content cell as well as module of the highest rated capacity and output. So this is a part of the long-term strategy.
All right. So, Gyanesh, in the paucity of time, my one question with some pointed answers, if you can give guidance before you leave. First, of course, your EBITDA margin has seen softness because of the change in the mix. Second, most analysts are gung-ho about your expansion plans, but all the timelines and execution have to really match. And the third, because of this huge hyper capex plan, the debt levels and your plan on the debt and the leverage situation. So these 3 points, if you can clarify, please.
So firstly, our balance sheet is the strongest it has ever been. We are almost debt-free. We recently, de-pledged all the promoter shareholding, which also sends a very strong message to our lenders and others who have cooperated and supported us. So currently, Vikram Solar has no promoter pledge, which is very important for us also to send a message out for balance sheet strength. As far as the softening of profitability is concerned, what the market is going through a process of capacity deployment as well as large capacities coming into the market. While Vikram's brand speaks for itself, we have been in this market for last 2 decades, which talks about stability, growth, as well as technical competency. This is this phenomenon of change in mild change in profitability dynamics is a part and parcel of the market. Demand supply changes happen. We see an external situation which is quite different from the last year and the year before. So there are a lot of changes, and this is part of the industry that we're in.
All right, Gyanesh, always a pleasure speaking to you. Thank you so much for joining us on NDTV Profit. And of course, that was the picture given on the margin expansion as well as how the stock has reacted to the anchor lock-in really being lifted. So that is under pressure. Things should stabilize by March is what the management says. Now to the top story that we have been tracking in the entire market has been watching out for is the recent developments over the weekend on the US tariff situation. Let me call on the show Dinesh Kanabar, who is the CEO of Dhruva Advisors, an important tax expert, to put more clarity on this particular understanding. Dinesh Kanabar, always a pleasure to welcome you on NDTV Profit. My first question, where does India stand and what is your advice to the companies, to the corporates who are exporting to the US in this uncertain time?
Well, where does India stand is a very important question because for past several months, Nisha, we have seen a significant amount of uncertainty, a 50% tariff, the Supreme Court striking it down by a 6-3 majority, then a 10% tariff under Section 122 of the Trade Act of 1974, then the 10% going to 15%. In the meantime, India doing a deal with 18% reciprocal tariff and giving in certain concessions. So what we have seen over the last maybe 3 weeks has virtually been an avalanche of news and all going sort of seesaw way. But where we stand today is that we negotiated a deal. The deal was 18% reciprocal tariff with number of concessions given by us, $50 billion of trade, non-taking Russian oil, all of that. And that 18%, of course, for starters goes down to 15%. Then we have put on with there was no reciprocal tariff. So what happens to that is something which we need to think through. Then the question is that we have a trade deal and the trade deal is still open because we have only signed a framework. And the question is that how does India's position improve? And it does improve significantly. It has an elbow room today as it is negotiating the deal. So what we saw this morning, which I think was very, very sensible on the part of the government, is to step back and say that while our team is in Washington to negotiate and close out on the trade deal, we just want to step back. We want to study the legal implications of the Supreme Court judgment and then come back to say, because we now have a lot more elbow room, a lot more breathing space on what we need to negotiate. We need to understand that. We need to understand, of course, about refunds and all of that, which you can come to a little bit later. But net today, we have a 15% tariff. That 15% tariff, while it is across the board except for pharma, electronics and the like, question is there are other items which are exempted from reciprocal tariff, which will be there unless we are able to do a trade deal. So a trade deal is inevitable for India, but we are in a much better negotiating space today than what we were a week ago.
Right. So, Mr. Kanabar, you're saying that for pharma, there is right now no reciprocal tariff, and all those sectors which were exempt under the trade deal, they come back on the reciprocal tariff landscape.
Yes, that's right. So, two things happen. In fact, a number of things happen. First is that goods have been exported during this meantime. Overall, there are collections of close to $160 billion by way of tariff. It is estimated by Penn Wharton study that the amount of refund which the US government will have to give will be close to $175 billion. And as you heard President Trump say that he's in no hurry to grant this refund, that will be a separate legal battle already cases have started to be sort of worked upon and will be filed for the next couple of days.
Mr. Kanabar, I'll have to intervene. SEBI chairperson Tuhin Kanta Pandey is speaking.
या तो हुआ है या उसकी कमिटमेंट हुई है, लगभग 1 लाख करोड़ रुपया का फॉरेन कैपिटल ही इसमें आया है। तो ये इस बात को दर्शाता है कि हमारा जो बैंकिंग और एनबीएफसी का जो क्षेत्र है, जो पिछले 10 वर्षों में जो कार्य किया गया बैंकिंग क्षेत्र के द्वारा, आरबीआई के द्वारा, गवर्नमेंट के द्वारा, विशेषकर कि पब्लिक सेक्टर बैंक्स में जो गवर्नमेंट के द्वारा जो कार्य किया गया, उससे न केवल कैपिटल एडिक्वेसी इंप्रूव हुई, लिक्विडिटी जो है बेहतर हुई, प्रॉफिटेबिलिटी इंप्रूव हुई, एसेट क्वालिटी एनएनपीए आज के दिन में 0.5% से भी कम है, और साथ ही साथ जो गवर्नेंस इंप्रूव हुआ, जो पूरा सिस्टम जो इंप्रूव हुआ है, जो उनके अप्रेजल की कैपेसिटी है, कंप्लायंस की जो कल्चर है, जो कि ये कुछ एक सॉफ्ट चीज़ें हैं, उनमें भी जो पिछले 10 वर्षों में बेहतरी हुई है। तो हम बिल्कुल निश्चित हैं कि आगे आने वाले वर्षों में जो भी भारतीय अर्थव्यवस्था की ज़रूरतें हैं उनको हम पूर्ण कर सकेंगे।
धन्यवाद सर। नेक्स्ट क्वेश्चन फ्रॉम मिस श्रीमी चौधरी फ्रॉम एनडीटीवी प्रॉफिट।
Ma'am, my question is for you. How are you reading the latest US tariff twist emerging in past few days? Any impact on the Indian economy are you seeing?
On the Indian economy, I think it's a bit too soon for me to comment. But on the trade particularly, aside from the Indian economy in general, the Commerce Ministry is reviewing the situation. The delegation will have to take a call on when they're going to go for further negotiations. So it's a bit too early for me to comment.
Thank you, madam. Next question from Deepankar Kumar from PTI.
Good afternoon, ma'am. Good afternoon, sirs. This is with regard to one of the announcement made in budget in 22-23 with regard to CBDC. After that, pilot phase was launched and it's almost 3.5 years. Full-scale launch is still awaited. What are the challenges that RBI is facing, or if you could share the update on nationwide launch of CBDCs?
See, first of all, let me clarify that the CBDC is not for the moment. It's not a kind of a substitute for cash. Neither is it, a substitute for the other payments, fast payment systems or other payment systems. It is there, to augment these payment systems that we have in our, and currency systems that we have in our country. We have done a number of technical improvements in this regard. Right now, the effort is basically to get the technical and the operational details to be done, to perfect them. And in this regard, a number of further innovations and improvements are being done. For example, we are working on making this available even in offline mode. So unless and until we have the whole bouquet of features which are available on this CBDC, it would be premature to implement this on a large scale. However, at the same time, it has, you are aware, a number of additional advanced features which other forms of payments and currency do not have. For example, programmability. Because this is actually a new feature. So this is the feature, that we are again promoting in partnership with the central government and in partnership with state governments, wherever we want to make targeted payments.
All right, so that was the RBI governor talking, and Finance Minister Nirmala Sitharaman, when asked by our correspondent Shrimi about the US trade uncertainty. She said it's too early to comment. So Dinesh Kanabar, Finance Minister, also saying wait and watch, it's too early to comment. And of course, these are uncertain times. But if we just focus on the positives and negatives, of course, from 18%, it has come now down to 15%. And that is temporary for 150 days. And a lot can happen in that particular time. In your assessment, which are the specific sectors like pharma, electronics you mentioned, if you can summarize which sectors stand to gain and what stands to lose, who got unlimited benefit in the US trade deal, which is now overturned for the time being?
So two things. First, Nisha, you mentioned about 150 days ending on 26 July. I think there is, first of all, a challenge as to whether the invocation of Section 122 is itself appropriate. That depends on USA having serious challenges with its balance of payments. And while USA has a trade deficit, there is a deep divide even within the US legal system as to whether you could call it a balance of payment crisis. So nobody has invoked Section 122 in the past, no precedent. And therefore, it is quite likely that this itself could be challenged once again. And how will that stack up? I really do not know. But this is not free from doubt. That's number one. To your specific question, energy products, pharmaceutical, electronics are the three items which cannot be covered under Section 122 and are therefore out. And therefore, other items which were exempt from tariff will now be subjected to 15%.
All right. So that's a great point that you mentioned, Dinesh Kanabar. Thank you so much. We have to get back to RBI Governor speaking there with the Finance Minister.
In making our assessment of the liquidity requirements, looking into the leakage of currency in circulation, which requires more durable liquidity to be provided, but also requirement for reserves as a result of higher deposit and credit growth rate because of forex intervention, which we do not to target any price or level of the foreign exchange of the Indian rupee, but to reduce the volatility. And then more importantly, the government balances, because they also fluctuate, on a day-to-day, week-to-week basis. We'll continue to provide preemptively durable liquidity, which are what is needed for the transmission of the policy rate to all markets, whether it is money markets, the bank markets, government securities, all these markets.
Thank you, madam. Thank you, sir. Next question from Shishir Sinha from Hindu Business Line.
Namaskar, ma'am. Namaskar, sir. Sir, my question to you, Governor, sir. With the change in the base year of CPI and GDP, are you going to revise your estimate? And also, are you also thinking about that inflation targeting range should also be revised because of the change in the CPI base year, sir?
So two questions. You are saying will we change our CP estimate? Obviously, see if the whole methodology is changing, then that will undergo a change. So next estimate that we give out will be in our April policy, and so that will certainly take into account whatever changes that have been brought in. We have welcomed those changes, as you are aware. They will help, I think, they better reflect the consumption expenditure of the Indian households. They will also, to some extent, reduce volatility. So in both ways, the methodology also has been changed, so even that will also help, in better estimating the CPI inflation. The second question, as to whether the target should be changed or not as a result of that, that is still under examination by the government. We had we had published a discussion paper, we got comments, we gave our recommendations to the government. So now the government will be examining and very quickly coming out with a target. However, I may mention that merely, because of the change in this CPI series, will it result in a change? I don't think so, because even though those changes in terms of direction are very material in terms of methodology, coverage, representativeness, volatility, etc. But they are not high enough. They are not, because the changes are there, but they are not substantial. Only because of which there should be a change in the target. Only because of this.
Thank you, sir. Next, we'll have Aryan Khanna from Informist.
Thank you. This question is to both Madam Finance Minister and the RBI Governor. A couple of years ago, the Finance Ministry had moved away from switching bonds bilaterally with the RBI, according to public statements by finance secretaries at that time. What has led to a move back to such a measure, especially twice in the current FY, you've made large switches, and do you expect this to continue in the future? Also, is there from the RBI's perspective, is there a liquidity management impact from the switching of the GSEC? Thank you.
See, we have a number of measures in our operational toolkit for the debt management. This is not a tool, let me clarify, this is not a tool for liquidity at all. This is only a debt management tool. And effectively what it does is, the press had reported, that the gross borrowing has actually, increased a lot, which we tried to clarify that is not the real thing, to be noting. The more relevant number is the net borrowings. So the net borrowings actually, increased only by about 20,000 crore from, I think, if I remember correctly, 1150 to 1170 or something of that order. So this switching operation also, basically what it does is it postpones some of the maturities which are going to come in. Next year they will be postponed further, depending on the maturity of the switched bond. And the gross borrowing next year will decrease. So it's part of the tool. Now some of them are maturing, some of the RBI holdings were maturing, so that's why we have done with a switch with the RBI holdings, but we also followed it up with a switch with the market. So they are all part of our operating policy toolkit. They do not reflect any change in our operational strategy.
Thank you, sir. Next question from Nikunj Ohri from Thomson Reuters.
Just 1 minute here.
He wanted some clarification.
Ma'am, any change in thinking from the Finance Ministry side because of the public comments 2 years ago?
Not at all.
Okay.
Thank you. Nikunj?
Good afternoon. My question is for the Governor. So the market participants have sought government intervention on review of some of the bank guarantee collateral requirement norms that the RBI came up with. So that seeks to double the cash requirement as a collateral. So will there be a review on that? Thanks.
So we now, we mentioned even in the board, this was also discussed, FSTC. We now have a framework a framework for making regulations. So before making any regulation, we publish the draft, we invite comments, suggestions, and this has been done, after proper consultation with all the stakeholders. And initially in the draft, I may mention, that this particular proprietary trades, lending for proprietary trades was prohibited in the draft. And after that, after taking into their comments and suggestions, we have not allowed it with certain prudential norms. There is no change that we are contemplating.
Thank you, sir. Next question from Mr. Ajay Mishra from Doordarshan.
सर धन्यवाद। सर पूरी अर्थव्यवस्था में महंगाई लगातार काबू में है। आगे जाते हुए खासतौर पर जो ग्रामीण क्षेत्र हैं और एमएसएमई सेक्टर है, उसमें जो हम लोग लोन देने जा रहे हैं उसको लेकर के क्या आपने रिव्यू किया है? क्या वो सफिशिएंट है या उसमें और भी थोड़ा सा बेहतर करने की उम्मीद है? क्योंकि आज ही प्रधानमंत्री ने पत्र लिखा है बैंकिंग सेक्टर में बंगाल के लिए खासतौर पर, लेकिन उसमें और भी इम्प्रूवमेंट का उन्होंने संकेत दिया है। सर थैंक यू।
ग्रामीण क्षेत्र और लघु और मध्यम उद्योग क्षेत्र हमारे लिए बहुत महत्वपूर्ण है। आज भी बोर्ड में उसके ऊपर में चर्चा हुई, माननीय वित्त मंत्री महोदया ने भी उसके ऊपर में हमारा ध्यान आकर्षित किया और ये हमारे लिए एक लगातार हमारा एक प्रायोरिटी एरिया रहता है। जैसा कि आपको मालूम है, जो हमारे पास में लेटेस्ट आंकड़े हैं उनके अनुसार 14.5% लगभग 14.5% की वृद्धि दर दर्ज हुई है बैंक ऋणों में और सभी क्षेत्रों में, चाहे वो कृषि हो, चाहे वो बल्कि एसएमई क्षेत्र में तो 25% मेरे ख्याल से 28% के लगभग ग्रोथ दर्ज हुई है। तो अच्छी एक ग्रोथ वहाँ पे दर्ज हुई है आगे, और हमने इसके लिए कई सारे कदम उठाए हैं। बजट में भी आपको मालूम है माननीय वित्त मंत्री ने इसके लिए काफ़ी सारे कई कदम इसमें उठाए हैं और हम भी आगे यूनिफाइड लैंडिंग इंटरफेस की चाहे बात करें, चाहे जो कोलेटरल फ्री लोन्स की लिमिट है 10 लाख से बढ़ा करके 20 लाख रुपए का हमारा प्रस्ताव है, वो अभी पब्लिक कंसल्टेशन में है। तो हमारा आगे भी दोनों क्षेत्रों को, सभी क्षेत्रों को, विशेषकर इन दोनों क्षेत्रों को, ये प्रायोरिटी क्षेत्र में भी आते हैं हमारे, अगर इनमें ऋण बैंक देते हैं तो जो प्रायोरिटी क्षेत्र की जो उनके लिए जो रेगुलेशन हैं, जो रिक्वायरमेंट्स हैं, उनको भी ये मीट करते हैं। धन्यवाद।
धन्यवाद सर। नेक्स्ट क्वेश्चन फ्रॉम सुरभि प्रसाद फ्रॉम बिजनेस टुडे।
Good morning, ma'am. Good morning, sir. My question is to both of you. It's regarding the prices of gold and silver that have been shooting up, and imports of silver has also increased, and the prices have also had an impact on the trade deficit and the new series inflation also. So just wanted your thoughts. Is it a cause of concern as of now, and just your thoughts. Thank you.
See, all gold which comes to the market is imported. In this country, the dependence on precious metals is very much from outside only. In the sense, we get every ounce of gold which comes into the country is an imported gold. And we don't have our own source of exploring and extracting gold. There are steps being taken, but yet not sufficient to meet our demand. Gold has always been favored investment for households, whether as an asset class or for jewelry. So a high-pitched demand from, let us say, the domestic consumption also sees a seasonal spike during festival season, during Akshaya Tritiya and so on. We are watching it, but I'm not sure it has reached such alarming proportions given the tendency or natural things as it is in India for investing in gold, buying gold, and therefore I think it has not gone in that sense beyond a certain limit. But of course, RBI will also be monitoring it. Other than that, other than typically what's happening in the Indian market, it's also important, and I'm sure you from the media would have noticed, that most countries today, particularly their central banks, are buying gold and silver and storing them. It's a tendency when you talk of Indian consumer market, Indian households. Every central bank did have some, but of late you notice that many of the central banks outside are also buying gold. So international price of gold or silver, which used to be because of China and India being large consumers of gold, largely due to domestic purchase of gold, spiking up and down. Now the spike is largely due to central banks also buying and storing. And we as importers, therefore, for our domestic consumption, which is a usual thing which happens every season, every festival, every household purchase, is affected because of the global increase in gold and silver prices, which are much beyond the usual increases and fluctuations which happen in the gold and silver market. So I'm purposely bringing the element of the central banks outside, domestic consumption within the country, the pattern within the country of gold purchases, and the cause for that unbelievable spike in gold and silver prices, which are largely because of the investments in big numbers by central banks outside the country to store. So my observation is to bring in the central bank is for saying as to why globally it is shooting up.
I may add that if you look at numbers from April to December, the quantity of gold, I mean, in value terms, there was hardly any increase. I think about $1 billion or so against 50 billion. It increased from 49 to $50 billion. So till December, value terms didn't increase despite increase in prices, because whatever was the increase in prices was offset more or less by the decrease in the volumes of imported gold. It's only in January, we are still analyzing those numbers, that there has been a sudden spurt in value as well as in volume. As the finance minister also mentioned, there is a lot of fluctuation, seasonality in that particular demand. So we are not unduly concerned about that, especially because our external sector continues to be very robust and strong. The current account deficit is still very, very manageable as per our projections. It's within or about the 1% of GDP range. The government has now a number of agreements for trade, international trade, that it has signed, so that will help our current account even further going forward. Even on the capital side, it will help, because trade and investments generally go together. Over and above that, number of policies that government has come out on the FDI side, latest being liberalization, opening up 100%, insurance sector, and then the AI summit, recently that we had. So many, I'm forgetting the numbers, some hundreds of billions of dollars being committed towards data centers. Earlier we saw, the tech giants, Amazon, Google, Amazon. I think the number that we had, they together they had committed was $62 billion. So now it's 250. Earlier they had done $62.5 billion. So even if part of it comes, and gross FDI has been very robust, even this year, good growth rate, last year also, this year also. So we have sufficient reserves. So external side, is very strong, and including, the domestic macro, even the external sector is very strong.
Thank you, madam. Thank you, sir. Next question from Tarun Sharma from Z Business.
Thank you, ma'am. My question on the budget announcement on high-level committees. So, sir, what should be the terms of references? Will it be included the restructuring of banks, FDI limit, and corporate governance? And was it discussed in today's board meeting also? And what was the discussion in the board meeting which I went today?
You asking me or Governor?
It's
both. It wasn't discussed in the board meeting, but I mentioned it. Governor mentioned it from his side. The mention also did not have anything to do with the terms of reference that will have to be framed. It was a mention that it's a good step, we need to do it, and only to that extent the mentions happened. There were no discussion, and particularly not on the terms of reference.
No, I don't have anything to add, but we welcome it, we support it, from the RBI, and we'll work with the government in whatever ways the government would like us to work, so that the banking system is strong, but continues to be strong and becomes even stronger, so as to be able to meet the needs
of the Indian economy.
Thank you, madam. Thank you, sir. Next question from
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, we started off on a pretty strong footing in today's session. IT was the only one that was under pressure. And there is that momentum where somewhere it has been maintained. Where are you seeing the headwinds?
Well, thanks for that, Hiral. Largely, we had mentioned in IMO also that this up move might not sustain. A little bit of correction coming in, but still, nevertheless, Nifty holding up. But remember, it might be looking like an options data might be there on an, you could say, on a range-bound basis. Nifty Bank, the technical setup is a bit weaker, especially because what we have seen in the IDFC First Bank impact, which is there. So it's largely flattish here. Larger banks also not participating very comfortably also. But the key triggers in the market to look at is, of course, going to be on the positive developments which are coming on the US tariff front, and if we get more incremental information on that, it might benefit the Indian markets as well. FI short covering is also definitely at play. A very strong opening by rupee. That's a very positive factor for us to track in the Indian markets. But apart from that, coming back, the Nifty technicals remain better versus Nifty Bank. And right now also for both these indices, the buy the dip strategy, it still remains. So you can definitely do for a medium term setup, but of course Nifty's setup is way better than Nifty Bank. The accident of the day, there are three names coming in: IDFC First Bank, AU Small Finance Bank and UPL, where we'll give you more details on that. And if you look at it, apart from the stock specific news flows, the options data is suggesting a very range bound move. So do not expect, a good up move coming in from the current levels. It can be, a subdued range which could be there. Oil drops is something which is auguring well for the nation. The Brent crude price is on the lower side, and if you talk about the other important trigger globally, is that risk on sentiment has still not come yet. So these are the important market triggers, Hiral, but it's a largely stock specific approach, but a slate of negative news flows are coming in. What's there in your watch list?
Yeah, I mean, it's interesting. A lot of individual counters, BLS International, Aegis, Wopac, and both of these counters buzzing on volumes. Trident and Keytex are up in trade on the back of the tariff change. SKF again, strong moves in today's session along with good volumes building up on a PCBL. Murpin Labs is buzzing on the back of an order win. CI India gains have already hit a one-year high. Adani Ports has signed an MOU with NMDC and Vale, Brazil, and that really makes life easy. Axis Bank also buzzing in trade along with the DRL, where USFDA has accepted the BLA for Abatacept. IT stocks on the back of the Jefferies downgrade are slightly under pressure. And you have IDFC First and AU Small Finance Bank on the back of the fraudulent activities that have been identified. In fact, they've been debarred with regards to Haryana government. UPL also is another one. In spite of the restructuring, that stock is under pressure. And Godfrey Phillip, after that spectacular week, is seeing pressure in today's session. But as we talk about UPL, they are undertaking a major restructuring, and this is to reshape its entire business. The company will carve out its global crop protection units and merge them into a newly listed entity. And UPL Global, with regards to UPL Global, I did have a chance to speak to Jay Shroff, Chairman and Group CEO of UPL, and Toshan Tamhane, Group CEO of UPL, to discuss what this restructuring will look like and the strategic rationale behind it. Let's listen into what the management has to say, because the street is not really happy. Let's get in Jay Shroff, Chairman and Group CEO of UPL, and Toshan Tamhane, Group Chief Operating Officer. Let me begin with you, Jay. What will this actually restructuring look like, and what is that strategic rationale behind getting this kind of a restructuring done?
So basically, UPL over the last 50 years has built very strong platforms. So we have a very strong manufacturing platform, which is called Superform. We have Advanta, the seed business, which is one of the most valuable seed companies in the world. And we have the crop protection business, as you rightly said, is the second largest pure play crop protection business in the world. So we feel that it's the right time to unlock shareholder value in each of these platforms. And this is part of that reorganizing. As you know, we have already filed the DHRP for Advanta with SEBI and waiting for approval. This will be the second part of unlocking value, where the UPL shareholders, UPL Limited shareholders, will get mirror image shareholding partially in the crop protection business. And it will be automatically listed. And then we have Superform, where we could also raise capital and list it. And that is under discussions.
Okay. So, Jay, tell me one thing. You're talking about a pure play positioning over here. If being a pure play positioning, entity will improve UPL Global's valuation, if so, how will that be as compared to the previous integrated structure?
So when you have a pure play structure, the decision making for the management team becomes a lot more, and we can be a lot more agile. As you know, the global markets and we operate in 140 countries. Agility is key to continue to be able to be a leader in and gain market share. And we believe that each of these platforms, when they are independently listed, while they are part of the group, will have the ability to make quicker decisions and therefore continue to grow faster than the rest of the industry.
How we have looked at it is you have operating performance leading to financial performance, leading to valuation. And we believe that each of these pure plays, the kind of focus that one can have, the kind of capital allocation unlocks lots of avenues for growth on the operating side and the synergies, which leads to superior financial performance, which hopefully will reflect in the valuations from an investor and board's standpoint.
Well, that's the management of UPL, but the street is clearly not liking that. Stock is down almost 14 to 15%. But off to our rapid fire segment. Joining us is Raja Venkataraman. Good afternoon, Raja. Always pleasure to have you. First stock is BLS International. Buy, sell or hold?
Yeah, BLS International is a buy.
All right.
Overall, the momentum is quite good. So I feel that the recent declines can be used to buy into.
The next stock is Aegis Vopak. Your view on that?
Aegis Vopak, I would say that it's an avoid from my side. The stocks have not been performing well. So I would say that though the volumes are increasing, I still feel that it's not going to have enough momentum. So it's only a day's play.
Okay, a day's play. Trident, Kitex Garments, any views on that? A lot of textile stocks are buzzing in trade.
Yeah, textile stocks are definitely buzzing in trade, largely due to the trade deals. I would say that amongst the textile stocks, I would place my bet on VTL rather than Trident.
All right, your views on SKF?
SKF, the benefit of the trade deal, the auto and the auto components are going to work well. So I feel that SKF has got more potential. It's a buy at current level.
And Raja, your views on PCBL?
PCBL is in a range-bound condition, so I would say that it's best to wait for some action to emerge.
And Godfrey Phillips, a very positive momentum is coming in as the street is digesting the price hikes.
Right, so the price hikes have been digested, the results have been digested. So overall, it's a good positive trend in this stock. And you would see over the last few years, the stock has digested all the negative news and it has only gone up. So any reaction in the stock has to be bought into.
Right, and CI Automotive, after the management con call, there was a broking upgrade also.
Right, so the broking upgrade definitely will favor well for the stock. So it's a buy at current level.
And for a large cap, Axis Bank, what are the key levels to watch out for?
Yeah, Axis Bank is hoping to benefit from the recent news flow. And I would say that if you're going to trade into Axis Bank, one should look to buy on declines, because considering the way the markets have been playing out, I would say that a dip towards 1300 would be a good area to buy into.
All right, thank you very much for joining in and giving your views in the rapid fire. Over to you, Hiral.
Thank you, Sharad, for that. So these are stocks which NDTV Profit has identified, but let's see what Google Trends are indicating, and those are stocks that we will be discussing with Raja as well. In terms of Google Trends on the screens, if you see the stocks which we should be watching out for: BSE, Infosys, IDFC First, Suzlon and HDFC Bank. Raja, let me come to you first with regards to IDFC First. The pressure has continued in today's session. HDFC Bank is another one where the volumes are pretty strong as well. And we know the right reasons why IDFC First is being one of the trending stocks. BSE also is catching up in today's session along with the Infosys and a Suzlon, where stocks are moving with good volumes in today's session. So that's what the Google trend is indicating so far. But Sharad, IDFC First Bank is a stock which has been trending on Google Trends as well right now. Lots brewing there. What is the latest that you're picking up with everything that has been said and done, from brokerages to the management, and now you have the finance minister also who has come out and given some comment along with the RBI?
Well, that's true. It has become a very big national issue when we talk about IDFC First Bank. First and foremost, just to give a perspective, almost 590 crore of fraud was identified. The management actually acknowledged that, and they are undergoing. There was a con call at 8 a.m. where they stated that they have started the recovery process, they have started the investigation, and also they have appointed KPMG as well as for forensic unit. Now, brokerages, they have given a mixed kind of a reaction. They have stated that this is an operational risk. This is nothing which is related to the systematic risk. And also, importantly, if you look at it, this is a big amount. This is almost like 2 quarters of, you could say, the profits. But to give it more perspective, let's give you some views from the con call, which was there today earlier in the morning. Listen in.
In terms of financial impact, the discrepancy currently found is about 490 crores. We have additionally, where we have received, I would say, certain reconciliation requirements. So then through the reconciliation, we observed that there is a discrepancy of 490 crores. We have additionally estimated rupees 100 crores. That's how it comes to a 590 crores of impact, which we have put out in the press release. We have put out this number as we could best assess at this point of time, but we feel that the number is broadly appropriate to the situation, current situation. We don't anticipate this to broadly move from here on to a great extent. It could be a small, as we sort of go through the process, maybe these numbers could slightly change.
All right, so we spoke about brokerages, we spoke about management commentary, but there is some important commentary coming in from Kunal Shah of Citi. Do listen in.
Interestingly, when you look at it, it was not a digital thing, but it was more of a traditional
good old fraud.
Yeah,
Forge,
so maybe it was
check.
like the check issuances and not really the digital one which happened. And now there was a connivance of external parties along with the employees of the banks also involved into it. But yeah, so this had the impact. We are already seeing that in the stock price of both the banks which are involved. And the directive which has been issued by Haryana government, that's very clear in terms of preferring PSU banks with respect to opening up with of all the new accounts. And if you are not opening an account with PSU banks, there has to be a specific reason as to why you are not doing that. Okay, so for all the new accounts, Haryana government has directed that it has to be with the nationalized banks going forward. Even though Haryana government as such, as a proportion of overall government deposits, that's closer to 2.7%. And as a proportion of overall banking deposits, that's hardly 0.2%.
That's Citi's Kunal's view on IDFC First Bank, but we are out of time for trending stocks. That's all, folks. Stay tuned to NDTV Profit. And thank you for the entire team which has put up the show, and Hiral as well.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
The last trade starts the week on decent footing but gives up some gains from this morning. Nifty hovers above 25,600. Sensex jumps more than 250 points as well. PSU banks lead gains and autos were in top gear. IT on the flip side still continues to drag. And IDFC First Bank and AU Small Finance Bank tank in trade this after the Haryana state government de-impanels all bank accounts held in both banks across the state. The move comes after IDFC First Bank disclosed a 590 crore rupee fraud by its employees and others in accounts held by the Haryana government. And UPL also tanks after it announces plans for restructuring, will carve out its global crop protection units and merge them into a listed entity. Concerns of debt burden in the stock. And it's the tariff tangle that continues to baffle global community, with US President Donald Trump now slapping 15% tariffs after the US Supreme Court struck down his earlier policies. Global economists and legal community, however, argue over the legitimacy of these new levies. Meanwhile, two main board IPOs open for subscription. Renewable energy provider CleanMax to raise over 3,000 crore rupees. Cotton yarn manufacturer Shriram Twistex also is going to be raising little over 100 crore. Good afternoon, you're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a heads up in terms of the top buzzers at this hour and even what is happening in the world of commodities, all while you grab lunch. But first things first, let's take a very quick look at what the markets are up to right now. And when you look at the Nifty, it's not much to complain about, not much to write home about as far as the Nifty is concerned. Just a 70-point uptick coming in there, hovering close to that 25,600 level thereabout. When you talk about the Sensex as well, about a 200-point uptick coming in for the Sensex. Let's quickly take a look at the sectoral picture and what that also has right now, because you know you do have PSU banks that are leading gains, followed by auto that is also in top tier. What's also doing well is something like FMCG. On the flip side, there's IT that is ailing in trade still. 1.5% downtick coming in for that particular index. Metals also losing some sheen, realty as well. You're seeing a little bit of a decline coming in there as well. When you talk about some of your gainers, when you talk about stocks, something like a Blue Jet stands out, Trident, CCL products. Those are some of the stocks that are gaining anywhere between 3.5% to about 10%. But when you also shift that horizon onto Nifty, you do have some of your Nifty companies, the likes of Kotak Bank, that are doing quite well, 2.5% uptick coming in there. Axis Bank, something like an HUL, Nestle, Grasim, Dr. Reddy's as well, in good shape right now. What's not doing so well from within the Nifty 50 pack is something like a Hindalco, Wipro, and some of your IT counters, be it Wipro, Infosys, or even Tech Mahindra, are under pressure as well. And that's the kind of picture that you have as far as the stock-specific action is also concerned. But keeping that in mind, let's also turn the spotlight onto the world of commodities, because you do have a bunch of updates coming in. As far as gold and silver are concerned, it's actually gold and silver that are sparkling quite bright right now. So when you talk about silver, it's actually three triggers that you're looking at. Let's quickly address those and also move on to our guests, try and get you some more insights. But before we do that, three triggers that you're looking at, it's safe haven demand that makes it to that radar on the back of rising geopolitical tensions. Other than that, trade policy uncertainty also something that you're looking at. And on adding on to this list, you do have rate cut hopes. In terms of the latest FOMC minutes, also adding a little bit of sort of pressure coming in on that front as well, and also supply concerns. But tell you what, like I said, let's also connect with our guest, Anuj Gupta, commodity expert, joins us on the show. Mr. Gupta, thank you so much for taking time out and joining us this afternoon. one thing that we're looking at right now, of course, we're looking at gold and oil as well, but silver really stands out on the back of that stellar comeback that it has managed to script, at least as of today. You're seeing quite some good momentum coming in to kickstart the week. How are you looking at it? Do you think that the dust is going to settle yet again when it comes to silver?
Yes, as expected, we saw that silver price is now trading around $86, $87 per ounce, and on listed market, silver increase and
Well,
seen we have in
absolutely,
the
and Mr. Gupta, that's something that we're looking at. We seem to have you on a patchy line. Like I was saying, for silver, it's actually supply concerns that you're also looking at. And while we reconnect, Mr. Gupta, let's also take a closer look at that supply concern picture that I'm talking about, because you do have silver inventories on Shanghai futures dropping to their lowest level since 2015 as well. So what that really does is it highlights your growing strain in exchange held stocks, and that's something that you're looking at. On the supply front, other than that, in terms of other things that you're looking at, when it comes to the supply front, it's actually the 6th year of supply deficits that you're looking at for this particular metal. But like I was saying, let's go back to Mr. Gupta, try and get his word in as well. Mr. Gupta, what were you saying about silver prices then?
the safe haven demand basically supporting the silver prices. In last week, we saw three important instances. One is the Supreme Court saying that all tariff put by the tariff illegal. Creates uncertainty between U.S. administration and Supreme Court, so that will impact the safe haven demand. And also, we have seen that US and Iran issue is not clear, so that is also creating uncertainty in the global market. That's why we saw again a positive in gold and silver
And
prices.
Mr. Gupta, I think we still have you on a little bit of a patchy line, but while we reconnect that, let's quickly take a look at what Goldman then had to say about oil, because that's also something that we'll be addressing throughout the course of this conversation. When you talk about Goldman, they've in fact raised their forecast when it comes to Brent in the last quarter of 2026. So that's something that you're looking at. They've in fact hiked the estimate for Brent to about $60 for the last quarter of 2026. So that's something that you're looking at. Now, of course, you do have the geopolitical risk premium that is going to be at play when you talk about oil prices. And that's also something that we'll be exploring in greater detail in just a bit when we manage to get our guest back, because, you do have a decline that Goldman is expecting from the current levels despite that geopolitical risk premium when you talk about oil prices. But what they also do is that they expect oil to recover in 2027. But before we come to oil, Mr. Gupta, let's try and get that answer going in terms of silver. You were talking about supply concerns. In terms of it being the 6th year of supply deficits, there's quite a lot that you're looking at when it comes to supply for silver.
Definitely, supplies are very, not as per the demand, and we saw again a supply deficit in the market. So that is also providing the support. Even the safe haven demand is also providing support. The industrial metal demand is also providing support. But yes, the higher crude oil prices are also increasing the fear of inflation. So that's why we have seen again hedge against inflation, or demand against inflation is also providing support to the silver and gold prices.
No, absolutely. So when do you see this support sort of weaning a little bit, or are you expecting upward momentum to continue from here on? What is your outlook, at least in the near term?
See, we are a little optimistic for gold and silver prices because the uncertainty between U.S. administration and Supreme Court is there, and U.S. and Iran is there. So definitely, the uncertainty will be there. So we are expecting in a shorter term also gold and silver may rise from here. And for the silver, we are expecting silver may test $95 to $100 in the very coming time, and also we are expecting gold may test $50 to $100 per ounce in a very short term.
Got it. When you talk about gold and silver, if somebody's already invested, be it through the physical metal itself or through ETFs, what is the outlook that you'd be suggesting to them? Because there's actually quite a lot of volatility that they're looking at right now. Do you think that they should sort of sit by on the sidelines, wait for the dust to settle a little bit?
We are advising always that one should use the process to start investing in gold and silver ETF. So if somebody had a position on a higher level, so that's a time to average out the position from here. And we are expecting if they hold the position for the longer term perspective, we are again very optimistic for the gold and silver for the longer term. And we are expecting if somebody start investing from that level, they can get a good ROI.
Absolutely, it's ROI that is quite the word in this particular market, because that's something that is a little bit missing in terms of that volatility that we've seen of late. Last year you did have investors really making it big when it comes to their returns, but this year the momentum is a little bit of hitting a roadblock, at least when you talk about silver as well. Manages to recover, but then sort of gives up some of those gains. But when you talk about oil, Mr. Gupta, I was talking about Goldman Sachs talking about how there's a geopolitical risk premium. They're talking about how the prices, despite that, are also going to be pulling back from here on, and by the end of 2026 or even perhaps 2027, they'll actually script a comeback. Is that the sense that you have as far as oil is concerned?
See, currently oil is trading around $65 per barrel, and latestly we saw a sharp correction in the US inventory. So that will provide support to the crude prices, and definitely the geopolitical concerns between US and Iran, that will also, putting pressure on the supply side. So we are expecting crude may also rise from here, and expecting $70 to $75 per barrel in a very short term.
No, absolutely. And when you talk about gold and silver, which is the bet that you're more bullish on right now at this point in time, given that there's a lot more volatility on the silver side, but on the flip side, if you are the devil's advocate, there is also a little bit of scope for the devil's metal to also be giving you a lot more returns if the last year is to be trusted. So gold and silver, which is the bet that you're more bullish on at this point?
See, I am a little bit more optimistic on gold this time, because the geopolitical concerns are there, and definitely this will provide support to the gold as a safe haven demand. So I'm a little bit more optimistic for the gold prices, and expecting gold may test till the Diwali, I think $5,500 to $5,600 per ounce.
No, absolutely. And before we let you go, quickly wanted to get a word in as far as copper then is concerned. And which investment method do you suggest people should be looking at, investors should be looking at right now? Should it be through some of the listed players right now, or should they be looking at futures, given all of the volatility that we have, and given the fact that copper is a little bit of a complex market to also understand?
See, we have only an option through the MCX to trade in the copper if we talk about the derivative trading or futures trading. So one can use that platform to start investing or trading in the copper prices. Otherwise, they have an option for the physical side. We don't have ETF right now. Definitely, copper is also looking very, positive for this year also. But we are expecting a little bit a range-bound momentum kind of thing in the copper, because we saw a sharp momentum in 2025. So we are not expecting right now a sharp momentum in the copper. We are expecting for the shorter term a range-bound momentum kind of thing in the copper.
Well, absolutely, and thank you so much for helping us out with that update there. So there you go. That's the entire outlook as far as gold is concerned, silver is concerned, copper and even oil is concerned. But before we take a small break, Rahul Kanwal, CEO and Editor-in-Chief of NDTV, was recognized for his outstanding contribution to the journalism at the AMI Managing India Awards. He was also recently named News Director of the Year English at the 2023 ENBA Awards as well, announced back in April 2024. Let's see a clip from that particular event that I'm talking about.
Karan Adani received the Business Leader of the Year award at the Managing India Awards hosted by All India Management Association. The honour was conferred during IMA's Platinum Jubilee celebrations, marking 70 years of the institution and the 20th National Management Day. As the Managing Director of Adani Ports and SEZ Limited and Adani Cement Limited, Karan Adani has played a key role in expanding India's ports and logistics footprint and strengthening the cement business.
Truly humbled for this award and this recognition. I must dedicate this, genuinely, I must dedicate this award to all the employees of Adani Group. These are the people who have been working at all the plants, all the remote sites, working day and night. And this is truly their award rather than mine.
In an emotional acceptance speech, Karan Adani thanked his parents, his brothers, his wife and daughter.
Would like to thank my parents. From my father, I learned a lot of things. I still keep learning from him. And I must also thank my mother. From her I've learned compassion, humility. I must also thank my three brothers, Pranabhai, Sagar and Jeet. They are my strength. Together we work together, and we really value the legacy that my father has created, and we are very confident that together we'll be able to take it forward. And finally, I must thank my wife, Paridhi. She's the one who has been pushing me and has been the constant support. Finally, I must thank my three daughters. They push me to be a better father and a better human being every day.
For Karan Adani, the recognition marks not just a personal achievement, but a moment that underscores the Adani Group's expanding footprint in India's infrastructure and industrial growth. The IMA Managing India Awards, instituted in 2010, recognize excellence across business, governance, media, arts, and social leadership.
Heartiest congratulations to Mr. Adani.
NDTV CEO and Editor-in-Chief Rahul Kamal was awarded for his outstanding contribution to journalism.
Our heartiest congratulations to Mr. Rahul Kamal.
For me, the mission to build NDTV is an incredibly important mission because NDTV is a phenomenal media brand. A strong NDTV, I very strongly believe, is a public good, which is good for democracy, it's good for India, it's good for the public conversation. And therefore, as of now, our entire team is working to build, as we said, a new NDTV for a new India, a brand that represents and reflects the aspirations of India, that brings India's voice to the world and the world's voice to India.
IMA Managing India Awards brought together policymakers, industry leaders, and visionaries to chart India's economic growth story amid global uncertainty. Bureau Report, NDTV.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at some of the stocks that are in focus right now. There's IDFC First Bank that makes it to the top of that list. That stock has been tanking throughout the trading session. Right now, you have a 16% cut coming in on that particular counter. Now, the Haryana government has de-empaneled IDFC First Bank and even AU Small Finance Bank for government business with immediate effect till further orders. And this also comes after the disclosure of an alleged 590 crore rupee fraud involving accounts linked to the state government. Now, you do have the bank that has appointed an auditor for the probe, but what's the whole issue here? Sharad, in fact, is joining in with a detailed analysis when it comes to this one. Sharad.
Well, looking at IDFC First Bank story, and this would be the story of the weekend or even for Monday, a big loss coming on the intraday basis as well. But let's go layer by layer what has actually happened. They have disclosed a fraud of 590 crore rupees, and this is a Haryana government linked account. Remember, this is a disempanelment also being announced by the Chandigarh branch coming in. So that is coming for IDFC First Bank. But what's the main issue? That is very much important. Why are they getting disempanelment? And remember, AU Small Finance Bank also getting disempanelment. The accounts are under the reconciliation. And remember, this disempanelment is coming from the Haryana government itself. Now, banks have received a request from the Department of Haryana government to close its accounts and transfers to another bank account. Remember, the Haryana government has revised its guidelines, and the bank accounts have to be opened in a nationalized bank. And only after approvals come in from the respective departments, then only a private bank can participate. That is a very important point. But during this process, what has happened is the discrepancies were found in the above amount mentioned and the balance available in the account. So now currently, what is IDFC First Bank doing? There are two important reasons. The first one is bank has appointed KPMG to initiate an independent forensic audit in this matter, and also they have suspended 4 officials as well. Company also did a con call at 8 a.m. I'll give you those details as well, but there are key numbers you should be watching out for. 9-month FY26 operating profit, that's at around 6150 crores, and 1320 is the PAT number. Looking at the net worth, that's around 47,000 odd crore rupees. We also got you the brokerages impact, and it's largely, you could say, mixed to neutral. First of all, JP Morgan has stated that the confidence would hit the limited balance sheet as of now. There's a near-term drawdown likely, and the key downside risk would be sustained deposit flows going in the PSU banks or even other private banks. Ashika, they have stated that this is an operational risk event and not a deterioration in the underlying business fundamentals. And under a best case assumption, they're expecting 80% recovery to come in, and full loss, if it comes in, it's roughly 10 to 15 basis points impact on ROA, which is nothing but return on assets, and 20 to 25 basis points on CET1 ratio. Nomura is also there. They have stated that this issue appears localized. It has raised concern on the governance and the branch level controls. And the amount of reconciliation, if we talk about it, forms around 28% of the FY26 profit. Let's just take out the important key con call takeaways, which was there at 8 a.m. before the market hours opening. The first one is that certain employees worked with the parties to transfer money. Remember, no senior management till now has been involved in this. The police complaint has been filed and recovery process has also begun. Importantly, it's not a digital transaction. There seems to be a forgery of check. Haryana deposit overall is still a very small part of the deposit, and right now no communication has been received from other state government banks also. And the outcome of these investigations or these frauds typically takes roughly 4 to 5 weeks. But from the bank's con call, MD and CEO V. Vaidyanathan stated that the estimated financial impact of the Chandigarh fraud stands at around 590 crore rupees, and he also addresses whether this number could change. Let's listen in.
In terms of financial impact, the discrepancy currently found is about 490 crores. We have additionally, where we have received, I would say, certain reconciliation requirements. So then through the reconciliation, we observed that there is a discrepancy of 490 crores. We have additionally estimated rupees 100 crores. That's how it comes to a 590 crores of impact, which we have put out in the press release. We have put out this number as we could best assess at this point of time, but we feel that the number is broadly appropriate to the situation, current situation. We don't anticipate this to broadly move from here on to a great extent. It could be a small, as we sort of go through the process, maybe these numbers could slightly change.
And the big question, when will the investigation conclude? Here is IDFC First's answer.
Seems to be just particular to this branch, and largely because of connivance of employees and some parties outside. So we're yet to finalize on the scope, and we have appointed KPMG only yesterday, so we'll get into some of those nitty-gritties during the course. And typically, depends on the investigation, of course. Typically, to my best of my understanding, these processes could take about 4 to 5 weeks to conclude.
And as we conclude, the management was also quizzed on whether this investigation could impact the coming quarters. Here's their reply.
On the standalone basis, we were expecting a very solid quarter, this Q4, in terms of profitability. We were expecting, you should see last 2 quarters have gone up from 350 crores to 500 crores. We were expecting a higher number this quarter. So this is our normal base case expectation. Of course, despite this hit, if we were to take one, we still expect to be profitable. This is our estimates at this point of time. So we believe that hopefully when you will wake up, a quarter from now, you will look through this. We will not look through it, but hopefully you will look through this, and maybe from there on we will emerge stronger. I want to take this opportunity of even sharing with all of our employees that we have come through a lot to become a strong bank now and be rated what we are, and we will come out stronger from this. We will emerge stronger. We are confident about that.
That's the management on the con call. But when questioned about the fraudulent activity, RBI Governor Sanjay Malhotra said the central bank does not comment on individual institutions, leaving the matter in a limbo. Here is his first reaction to the issue.
As a policy, we do not comment on any individual bank or regulated entity. We are watching the developments. There is no systemic kind of an issue over here.
In fact, Profit went to ground zero to the Chandigarh IDFC First branch to gather more information on the very developed story that has rocked the stock. Let's bring in my colleague Gurpreet Singh for the latest news.
Right now we are reporting from that branch of IDFC where we have seen around 590 crore scam has already been come to light. What we have learned from the official, we were trying to talk to the officials, but they are not talking to the media. They are saying that they are not authorized to speak to the media. But what we have learned from the official, they say when they have received an information from Haryana department, one of the department from the Haryana government for the closure of account, then they have realized some unauthorized transaction had been taken place, and when they conducted an internal audit of all the transactions, they learned 590 crore differences between the balance of the account. So after that they are conducting multiple investigation to find out what was the main reason for the difference of these transactions. So what we have learned, they have already suspended some of the officials. They say they have already hired an external agency to conduct this thorough probe into this whole transaction, and strict action will be taken against those officials who are involved in this scam.
Well, and on the sidelines, FM RBI customary post-budget meet, Finance Minister has reacted to the latest US tariff twist, telling NDTV Profit that the Commerce Ministry is reviewing the situation and adds it's still too early for her to comment. Here's what she said.
Ma'am, my question is for you. How are you reading the latest US tariff twist emerging in past few days? Any impact on the Indian economy are you seeing?
On the Indian economy, I think it's a bit too soon for me to comment. But on the trade particularly, aside from the Indian economy in general, the Commerce Ministry is reviewing the situation. The delegation will have to take a call on when they're going to go for further negotiations. So it's a bit too early for me to comment.
Alright, then there you go. So that's the latest as far as the tariff twist is also concerned, and the latest on the IDFC First fraud as well in Chandigarh. But that's all the time that we have on the show for now. Thank you so much for tuning in.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon. You're watching Small Cap Buzzers with me, Varsha, and my co-anchor Puneet. Well, let's see what we're going to talk on the show today. We're going to start by a management interview on an upcoming SME IPO, which is Yap Digital, wherein the issue size is set at 80 crore, price band is set at between 138 to 145 per share. Well, the interesting thing for this IPO is Sunil Singhania and Mukul Agrawal are the pre-IPO investors when it comes to this IPO. Well, moving on, we're going to also talk about development. Well, the stock is buzzing on the back of order win of rupees 173 crore from BHEL. And also, company has also received $40 million contract from overseas client. Moving on, we're going to talk about Morpen Labs. Well, the stock is up almost 15-16% in trade. Now, this is on the back of 825 crore global deal that the company has done, which will the company will expand into high growth CDMO segment. Lastly, we are also going to talk about HIN rectifiers. The stock is buzzing on the back of huge volumes. Volumes are at 5x, and let's see what we have got more in HIN rectifiers. But this is all that we are going to talk about in this show. But Puneet, coming to you, how are markets looking like when it comes to Nifty and broader markets also?
Well, thanks so much for that, Varsha. It's an interesting day that we're seeing today on the markets. If you pull up the Nifty 50, early in the morning we saw about an 80 to 90 point uptake. Since then, hit the high at around 10:30 odd. Where the Nifty was up almost 130 points at one point of time, but since then has seen some sell-off and back at where we started off. So we are below the 25,700 level. If you look at the heat map for the Nifty 50, it will reflect the key stocks that are doing well in trade today, and largely we're seeing individual movers, a couple of them that are doing well. So pull up the heat map for the Nifty 50, and this is of course the contributors in terms of banks, but the heat map gives you the real picture for the Nifty 50 as well. At this point of time, we've consistently seen stocks like Max Health, Kotak Bank, HDFC Bank. So the banking names are holding the fort together, and Adani Ports definitely one stock which is the top Nifty gainer for today. Axis Bank also in the gain. So it's a day where the Nifty Bank is in the red, but largely a lot of stocks in the banking names which are supporting the Nifty positively. In terms of the losers, IT continues to be the bearer of bad news for the Nifty 50, and that's reflected in the top losers as well in terms of Wipro as well as Infosys in the top 5. The advanced decline ratio also tells you a similar picture, right? Because it has been a day where we started off yet again a lot of advances and then the sell-off, and now very neck and neck. So it can go anywhere from here at this point of time in the next couple of hours of the trading session. The mid cap and the small cap as well. Talk about the selling that we've seen, and yet a very similar trajectory for the Nifty 50, where we've seen the high, and then for both the small cap and the mid caps selling off on both these indexes as well. And finally the BSE 500 Definitely stocks like UPL and IDFC First are the top losers for today. In terms of the other losers, you have EU Small Finance Bank also seeing a similar impact to IDFC First, and HAL now slipped below the 4,000 rupee mark. So continue to keep that stock on your radar. Sterlite Tech, CCL Products, CIE Automotive are some of the other ones that are doing well in trade today as well. But at this point of time, let me welcome in Atul Hegde. He is the chairman and the managing director of YAP Digital. Varsha spoke about this particular IPO that's opening on the 25th of February. But Mr. Hegde, very good afternoon. Thanks so much for joining in today. It's Puneet this side. Definitely, and firstly, many congratulations on your IPO, which will start off this week. But largely, a couple of names that investors have, has caught investors' name of Sunil Singhania, Mukul Agarwal, who have invested in the pre-IPO. But just for the benefit of our viewers, your company, of course, YAP Digital, one of the key ones in the digital marketing space. But talk to us a little bit about what the company is all about, and in terms of your clients, which are some of the clients that you cater to at this point of time?
Sure. Thank you so much for having me on the show. In short, I'll tell you, YAP's a 10-year-old company. We are a digital-first digital marketing company. Again, new age, operate in 3 services, what we call as design, distribution, and discovery. We've grown inorganically and organically in this last decade. The core here is to really combine tech, data, and content. We bring that together. We work with some of the largest brands in India, large conglomerates like Adani, BFSI brands like UPI, RuPay, basically the NPCI stable, banks like IndusInd Bank, FMCGs like Del Monte, real estate like Ashiana. We work with the world's largest tourism board, which is the Dubai Tourism Board. We are present across India, 6 cities in India. We also have presence in Singapore. In the Middle East, we are present in UAE. So in a nutshell, that's what we do. 125,000 crore category, 60% of that is all digital. The uniqueness of this sector is completely dominated by foreign players. Right. I think it's time to change that now, and that's what YAP's real mission is for the next decade.
Well, Mr. Hegde, definitely a big announcement in terms of a lot of foreign agencies and some of the big names that you are working with. I want to talk about a little bit about your specialty, because you are present across India, UAE, and Singapore. What does that mean? Because a lot of those clients that you spoke about also cater to India and the domestic story thereof. So in terms of what are the products that you're pitching to them at this point of time, are you doing the complete end-to-end campaigns, and what is the presence that you have in these countries?
Yes, absolutely. So it's end-to-end digital marketing. So almost 80% of any digital marketing need for a large brand would be fulfilled by us. Right. The reason we are in this country is purely through our acquisition game. So we acquired a programmatic media company called Oplify in Singapore about 7 years back. We won the Dubai Tourism global tender about 7 years back again. Hence, we then acquired another company there in Dubai Media City about 4 years back. So these are actual office presences in these geos where we work with local teams for local clients, and primarily any type of content that needs to be designed, any kind of media that needs to be bought, whether programmatic, performance, high impact, we will do that. And discovery, which is our influencer marketing services. And both for discovery and distribution, we've now added a tech layer to it, which just helps us to do long tail in terms of content creators. So today, if you want to do a campaign where you want to reach out to 10,000 content creators, the platform allows you to do that. Similarly, in media, we've built a layer on top of APIs like YouTube and likes, where you're able to do much more better targeting.
Right. Hello, Mr. Hegde. This is Varsha, and welcome to NDTV Profit. Well, what will be the utilization of IPO funds, number one? Because one of the objectives that we have mentioned is the proposed acquisition of Go and Buy. When can we see this, and overall, how you're going to utilize the funds thereof?
Yeah, so 3 broad areas. The majority of it, almost 34 odd crores, goes into acquisition of Gozu, which is one of India's most well-respected digital marketing companies. We are building an AI studio in Bombay, which is going to power our design and content. So that's one risk. And the rest of it is, between working capital and unidentified acquisitions.
Also, talking about your financials, we have seen huge growth in terms of revenue and especially in terms of profits. At one point of time, you were in losses, but now you've seen a good profits, a good jump when it comes to margins and overall financials. Just wanted to understand, I know because of the legalities, you cannot give me the ballpark number, but what is the growth overall, outlook that investors should expect from YAP going forward?
So one of the things we've always benchmarked is we've benchmarked ourselves with the category growth, right? The category growth in India on digital is anywhere between 14 to 16%. And we've always been double of the category growth in the last 3 years. The losses 2 years was actually based on the acquisition where we we had a great opportunity to buy a loss-making unit, and we have now completely turned it around in 24 months' time. Right? So that's really what it is. So in terms of growth, always benchmark with the category. So we are looking at anywhere between 25 to 35% growth year on year.
Just one quick question. You mentioned about the financials, but last year you did about 154 odd crores in terms of revenue. That almost doubled from your FY23 base of 78 crores. But the first 9 months, you've done about 91 odd crores in terms of revenue. So is the expectation that you will largely end FY26 at a similar level to FY25?
I think we should be looking at about 25% growth. So one thing here I would like to call out, the advertising market itself in India is a very H2 phenomenon, right? Advertising peak starts in Diwali and peaks at IPL. Plus for us, our Q4 is the strongest. Like last year, we did almost 70 crores plus in Q4 alone. So that's our strongest quarter because most of it is led by BFSI spends. So we see that trend continuing this year too.
Mr. Hegde, basically from 154 crores, you're seeing a 25% growth. So you should end around 190 crores in FY26. Is that correct?
That's right.
And so 100 crore revenue you are anticipating in Q4 at similar margins of 12 to 13% that you've done in the first 9 months?
Margins would be 1% here and there, but yes, that's the goal.
Mr. Hegde, also, talking about the 25% growth, considering the history of financials that you have, is this 25% a conservative one? Because, you should, considering the history, you should at least have 40 to 50% of growth that I was expecting. So anything on that, if you could, tell us for the benefit of viewers.
Always better to underpromise and overdeliver. Also, the base is growing, right? Percentage growths can be misleading on a smaller base. So as we mature, as we grow, it's better to have certain targets and exceed them rather than the other way around.
Also, almost 77% of your revenue comes from, if I'm not wrong, from public sector. Is there any target going forward that you want to change this contribution, if any?
Not change it by design, but anyway, this year I think it will be less than 50%, while that pie grows for us. Right, and again, most of these are quasi-government, they're not your typical government. So like Dubai Tourism is as much as a private company as any other private company, but we would classify it as a government public sector. But yes, not by design. This year anyway, it would be less than 50%.
Understood. Well, thank you so much, Mr. Hegde, for joining and having a conversation with us, and all the best for your upcoming IPO.
Thank you so much. Thank you for having me on the show.
Thank you so much. Well, this was YAP Digital outlining the growth prospects for the next 2 to 3 years, and they're expecting 25% of revenue growth when it comes to FY26. But let's also invite the guest for the day, who's Tapan Doshi, research analyst at CA.Tapan.in. Well, Tapan, you heard the management of YAP Digital, expecting 25% growth year on year with, laying for an inorganic acquisition as well. What's your view when it comes to this IPO? Should investors apply?
Well, good afternoon, Varsha. Yes, no, management is quite confident for almost 25% growth. And again, they are quite expanding, at GCC and Southeast Asia. The margin, I think, EBITDA margin, they are targeting around 15%. So, of course, they have almost 75 to 80% concentration there on the public sector. So that is one point one has to keep in mind. Of course, if you see the ad spend growth in this sector is almost 10 to 12%. So because they are AI led, no lot of opportunities are in the future also. But we know that this sector there is lot of competition. So a person having a high risk profile, no, again is a SME IPO, so one has to check that also. So with a high risk profile can apply, but of course seeing the growth, I think this level one can enter, but with a high risk profile only person should enter.
Got the view, Tapan, and welcome to the show. But D-development is the other counter that we're putting a focus on. Revenue was strong in Q3, but what are some of the other factors that are driving the 15% move in the stock today? Jasmeet is here to tell us exactly that. Jasmeet, over to you.
Well, thank you for that. As rightly said, the stock is buzzing in trade today, and company has also had a good Q3. While the buzz on the stock comes on the back of the recent order win, company has won multiple orders worth ₹173 odd crore, which is leading the overall rally in the stock. And the order received is for critical piping. While the company operates in the critical piping space, where they manufacture pipes, and the installed capacity of management stands at 1.2 lakh metric ton per annum. If you look at the Q3 numbers, Q3 saw major margin expansion for the management, where the margins were at 16.6% versus 3.5% in the previous quarter. Now, in terms of the revenue saw uptick of 77%, while the net profit saw a profit turning into a loss turning into a profit of 18 odd crores. If you look at the key order wins for the management, the order wins received in the Q3 stand at 251 odd crore, while the order in hand is at 1300 odd crore, making overall positive movement in the order win trajectory. In terms of outlook, they remain strong in terms of what they expect going ahead. They expect a order win of 700 odd crores to flow in the coming years. Further, they also target a revenue of 1300 crores in the coming years, while the management also has planned a capex of 100 odd crores for the capacity expansion. All in all, we see strong management commentary, strong Q3, and also the recent strong news of the order win is making the overall stock rally in trade today.
Thanks so much for that, Jasmeet. But Tapan, this particular company post its listing over the last 12 to 18 months has been on investor radar. Would you be a buyer despite today's move?
Yeah, good afternoon, Puneet. Yeah, see, today it is a very good move, and as such, if you see there, management is talking about almost more than 20% growth in next few years also. Order inflow is quite good, around 1300 crore order book is there, and they are going to expand on that. Again, the margin they are talking about almost 15 to 17%. Capex, of course, they are going to deploy a lot, so one has to keep that in mind. But energy infra sector tailwind is always there. ROC is almost 26%. So things are looking good for this company, but as the stock has gone up, I think it will be a buy on dips category, but stock looks good.
Right. Well, got that view. Next time, well, now it's time to dive into the F&O market setup and the cues shaping trade today. Let's bring in Sharad for all the details that we have.
Thanks a lot for that. And largely, we see a good up move was there in the initial trade, but then we saw a little bit of correction coming in the market, but Adani group of stocks doing really well in Sensex. Adani ports up 2.5%. Kotak Mahindra Bank also doing well in trade. Reliance also holding up in the green, and that's good, positive for the markets. IT stocks on back of Jefferies downgrade are still under the pain, but the options data is suggesting that there might be a range-bound move coming in because market is losing out a little bit of fizzle, but nevertheless the large caps is where the interest is. Let's pull out the stocks which would be in focus, especially the key long build-ups which are happening. And Cummins India, that's doing really well after its strong management commentary. Indian Bank also good volumes coming in. Let's see the short covering candidates. What are that? PI Industries, they make it to the list, and RVNL also a good buy coming in after a big sell-off after its earnings. The long unwinding IDFC First, it's down 15% plus, and even UPL, the story remains the same. Two big accidents of the day. And short build up, it's in there in Coforge and Emphasis. Interesting IT names coming in, so that's something which you'll be watching out for. But today it's of course the day where losses are more. That's also coming up in the F&O segment.
All right, well, thank you so much, Sharad, for all the details. Moving on, let's pull up Hind Rectifiers. Let's see what that stock is doing. The stock was buzzing, although it's up almost 10% in trade. Now this is on the back of high volumes, but what lies ahead and what are the key triggers for this stock going ahead? Let's bring in Jasmeet for more details on Hind Rectifiers. Jasmeet, over to you.
Well, Varsha, thank you for that. If you look at this particular counter, the company operates in the manufacturing space. They manufacture power and railway equipments, and the company has a strong order book while it also has a global presence in over 30 odd countries. If you look at the Q3 numbers of us today, the stock is buzzing on the back of heavy volumes, but the company has had a good Q3 as well, with the revenue saw a jump of almost 64 odd %, while the EBITDA also saw a healthy expansion, but the margin saw a slight downtick on the back of the capex plan that they have announced. Further, the net profit also a good jump. In terms of the key takeaways from the Q3, we see the company marks its highest ever quarterly revenue in terms of the top line, while they also see the overall growth was driven by the demand in traction as well as in the power electronic segment. While the board also announced 1:1 bonus issue for the shareholders, and they've also acquired B-Link, a French robotics EMS company, in the Q3. While in terms of the overall in-house, the EBITDA saw a slight dip again on the back of that copper plant expansion investment plans. For the investment input cost remained robust for the company. In terms of the overall order book, the current order book for the management stands at 1,000 odd crore, and management sees that the majority of the order is driven by the railway segment, putting out roughly 70 odd %, while rest the company secured 100 odd crores of order in this particular year. So overall order books remain strong for the management, and healthy volume growth is something that's helping the overall company stock buzz and trade today.
Thanks so much for that, Jasmeet. But Tapan, we've seen a very strong move in the last year or so in Hind Rectifier. Stocks up almost 50%. Should someone who's continuing to hold this particular counter do so, or should they sell out, book some profits?
See, Puneet, no, they have a very good order book of almost 1,000 crore odd. Again, no, if you see the order inflow will be good going onwards also. Again, they are expanding their portfolio in EV charger. Also, target EBITDA margin will be almost double digits. So capex is going to go up at that in future also. Now talking about this, because they have a high railway exposure, we know there are always some issue on the cyclical part comes into picture. So my take is that not at this level one can enter. The company is good. I think wait for some correction, then they can enter.
Got that point. Well, moving on, Morpen Labs, let's see what that stock is doing. The stock is up almost 19%. Now this is on the back of order win. Well, they've won a multi-year CDMO deal of rupees 825 crore. Now this is from a leading global pharma major, and the supplies begin in next 4 to 5 months, and the execution runs through Q1 of next financial year. Why this matters? Because this is one of Morpen's largest single CDMO mandates, which expands global footprint and long-term programs and moves deeper into high-growth CDMO spaces. Now, this is a natural extension when it comes to the API strength, and this adds scalability, stability, and long duration revenues as well. And the core business remains reinforced. Companies evaluating when it comes to capacity additions on this, and they're investing in technology aligned to the pipeline. But overall, a very big order coming in, and hence the stock is buzzing on the back of this order win. But Tapan, what's your view on Morpen Lab, considering a huge order win and the stock is up almost 19-20% in trade? Should investors book the profits, or they should stay on?
If you see, this company has not been doing well from last few quarters also, and again, their EBITDA margin is down. Of course, this order book is quite high, but the stock has already done up a lot, 18%. But I still want to see, how the next few quarterly results will be there. Again, if you see now, there are a lot of pressure on the margin front. Again, the high competition is there in the generic pharma side. Export dependency volatility is there, and this company is not doing well on that part also. So my take is better to wait, don't jump. I think may just see 1 or 2 quarter results and then only get it.
Well, now an update from the primary market also. 2 IPOs have opened today, CleanMax and Shriram Twistex. Now let's see what are the details, starting with CleanMax IPO. If you see the price band, it's set between 1,000 and 1,053. IPO size is 3,100 crore with the fresh issue of almost rupees 1,200 crore. Now, this is the largest commercial and industrial renewable energy provider, has 2.54 gigawatt of operational owned and managed capacity. Well, onto the usage of funds, if I were to talk about, they're going to use this proceeds for repayment of borrowings and general corporate purpose. And also onto the financials, well, overall, a healthy financials, I would say, though EBITDA margin in FY23 was 42%, which has jumped up to almost 65%. So, good uptick when it comes to margins overall. Well, the next IPO is Shriram Twisters. Again, if you see the price bands is between 95 to 104, and this is an SME company though. They manufacture cotton yarns and offers value-added yarns, and operates and business on B2B model, supplying products to textile manufacturers. Well, the funds will be used for power plant for captive use, that is almost 39 crore, and repayment of debt, and some of the funds will also be used for working capital needs. And overall, if I were to talk about the financials, Well, overall the financials has improved. The margins have improved from 7.9% in FY23 to almost 12.8% in September 2025, and profits have also increased. So overall, a good set of financials that the company has seen. But Tapan, what is your view on both of the IPOs, CleanMax and Shriram Twistech? Should investors apply for this IPO? What are your views?
I think CleanMax is one of the company of which, if you are a long-term investor, one can think about it, not for a quick gain of listing premium, but long-term. I think because it's quite a good turnaround story, and if you say they have a very good revenue model also. Again, they have a deleveraging plan also, which going to do once the IPO proceeds will come. Again, they have a very good blue chip clientele also. So yes, this is one of the company. If someone is thinking for long-term, they can think about it. Another stock. Another IPO which you told about, I think the problem is the moat is comparatively not so strong, and I still feel valuation is on a higher side. So for me, I think CleanMax is one of the IPO one can go for.
That point. Well, thank you so much, Tapan, for joining this conversation, and always pleasure to have you. Thank you so much.
Thanks, Asha.
Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa, whoa, whoa.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me today is Mahima Vajrajani after her brief hiatus, a brief break, but she's back with us today and to take all your stock-related queries. So if you haven't already, do start sending them on the number that's flashing on the top of the screen. You can also call us, speak to us directly on your stock-related query as well. And we promise we'll let Mahima answer all the calls today. But before we do that and a lot more, let's take a very quick check of how the markets are doing, because we spoke about it just a bit back that we've seen selling across the Nifty 50, and that selling has actually taken a little bit of pace now. So just half an hour ago when I spoke about the markets, it was up about 90 points, down from the day's high of about 130 points on the Nifty 50, now currently trading at 70 points. So we continue to monitor what happens in the last hour and a half of the trading session, but most likely that we will be testing those levels where we started off with and already are at this point of time. The mid cap and the small cap also reflect a similar trajectory in terms of this performance, where we've seen selling, and now the mid cap index actually slipped in the red. Similar trajectory with the small cap, but small cap just maintaining and etching out the gains in the green right now, but just 0.2% at this point of time as well. And let's go across and start taking our lot of queries. Let me welcome, and at this point of time, Jay Bala. He's joining us on the technical side of things as well, and Chakri Lokpriya from LGT Wealth, who will be joining us very shortly as well. But Jay, thanks so much for joining in. Very good afternoon. A very quick check of first the levels of the Nifty that you're watching out for, because seems to be that the day's highs of course been broken down, but we seem to be selling off in the last hour or so. Where do you expect the Nifty to likely stabilize at this point of time?
Let's split Nifty's view into two categories, the medium term and the short term. The medium term, there's no doubt the markets are bullish. From a, say, 6 months to 12 months perspective, I believe the Nifty is headed to 29,000. But in the very short term, it's a bit ambivalent. We want the markets to stay about 25,148, so that the short term also is bullish. Right now, I'm maintaining a short term bullish bias, but the price action so far has been all over thanks to Trump's tariffs. The markets are very volatile, but since the larger degree trend is up and bullish, I'm also assuming the short term trend is bottom. But in the event that markets print 25,148, intraday is also good. If it prints 25,148 on an intraday basis, we are looking at the markets first declining to 24,000 and then resuming the medium-term uptrend. So the short-term, a considerable amount of volatility, but a mild bullish bias as long as 25,148 is holding, but it turns negative below 25,148.
Okay, all right. So that's the view coming in with regards to where the benchmarks stand. But moving on to our first question for the day. Ramesh from Bengaluru is asking about Equitas Small Finance Bank. He's got around 200 odd shares, bought at the levels of 67 per share. He's sitting on a loss of, just about 250 odd rupees, and wants to know if he can continue to hold, sell from a short-term view. Jai, what would you suggest?
Yeah, Equitas is in a uptrend, and as long as it stays above 64, I think it's a bit safe. So I would still think further highs are coming through, and the highs could be in the region of 74 to 75. But it's coming very close to 64, so it's an important support. As long as it holds above 64, I'll be bullish on this one.
Got that view. The next question also, coming your way, Jay. Now, this one's on IDFC first. Is definitely one of the casualty of the day today. down and consistently, has been under pressure today. So let's pull up the chart firstly of IDFC First. And Babu Gowda, actually, of Bengaluru, has bought this stock at 68. He's holding roughly 1,250 shares, so very close to the current market price as we speak now, trading at 70, down almost 16%. But Jay, I know it's a very volatile day today for this counter, but is there a long-term support being formed at this point of time? Should Mr. Gowda continue to hold? He's held it at 68 for the last 2 years. What would you recommend?
Yeah, see, the very short term, the stock has got one more sequence of up-down sequence at least. But yeah, the medium-term support is where he's actually bought. It's around the 67 level. So I think in this anticipated sequence of up-down, I think it could hold 67. But the long term is bullish. But if you are looking at this a quick recovery for the stock, I wouldn't anticipate it. When such extreme emotional moves happen, the market tends to consolidate at the lower levels and then only recover. So be prepared for the stock doing nothing to slightly negative from here on. But the long term is good. But I wouldn't advocate putting incremental money at the moment. Let the stock stabilize at lower levels and then form a reversal. And then we can look about it. But the short-term support and medium-term support are at 67 to 65.
Let me also welcome in Chakri Lokpriya at this point in time the show as well. Chakri, on the fundamentals also, let me get a quick view on IDFC First, because we are getting a lot of questions on this stock. Definitely a big, 590 crores fraud compared to the company's profits of the last year. How do you view this counter now?
Clearly, while it is a negative, I don't think it's going to be any systemic issues, or rather even a bank-specific issue in terms of its solvency. Yes, there will be pain for the bank and clearly not worth stepping into at this point in time. But I think their reserves will enable them to overcome what has happened with this most recent episode.
Okay, all right. So that's the view coming in on IDFC First Bank. The next question is on Wockhardt Pharma. We don't have the name of the viewer, but the viewer has 110 odd shares at the levels of 1719. He wants to know whether he can continue to hold this counter from a long-term perspective. Chakri, I'll come to you on this one. The stock has come down to 1357 as we speak. Would you recommend a hold?
I don't cover this, invest in the stock, but Wockhardt has been a very volatile name, and its fundamentals keep swinging quite a lot. But more than that, I wouldn't be able to add value to this name.
Jay, a quick view on Wockhardt, because on the fundamentals, Zenix has been driving the positive outcome on the share price, but as Chakri highlighted, a lot of volatility there. But is there a similar volatile picture on the charts as well?
Yeah, it's a very important juncture on the long-term charts. You don't want to see the stock close below 1270. If it does that, it would be signaling that it's finished a significant move from 2023 to 2025 because the stock is forming a head and shoulders, potential head and shoulders. If it closes below 1270, then it confirms the fundamentals are turning for the stock in the medium to long term. So as long as 1270 holds, the current trend persists. So it could be a hold as long as 1270 is not broken on a closing basis. So watch 1270 as a very critical support.
Got that view, Jay. But we have a first caller for Ask Profit, the afternoon edition now, and Harjeet is dialing in for a stock query. Harjeet, very good afternoon. Welcome to the show. What's your query?
Good afternoon. It's a pleasure talking to all of you, and I have been a subscriber of your program for a very long time. I'm a retired Army officer, but always listening to your channel. Thanks a lot for all the advices. My specific query is regarding Aegis Vopak Terminal Limited. The issue came up some time back, and I'm holding 1,140 shares, and I have been accumulating for a very long time. But is it worth now accumulating? Now, today, it has taken a jump of approximately 9.2%, and the present current rate is 230.
Right.
But as I see, this is a long-term planning, and as we as a nation trying to hold more reserves of gas.
Right.
So 3 terminals coming up, and in the long run, if I hold it for, say, about 1.5 years or 2 years, is it a good investment to increase the number of shares right now at this level?
Well, firstly, Harji, thanks so much for calling in and being a regular viewer as well. We did try to sneak in this question in the morning edition of Ask Profit in the Rapid Fire, but since you've called, we'll also take it in this one and go across to Chakri for a very quick view first. Chakri, if you cover this counter, Aegis Vopak, Harjeet has bought at 228, but any quick view? Because we did see a few brokerages actually start coverage over the last year or so, but any view?
Given the fact that they have 3 terminals and the capacity utilization will only increase from here, and the economy is in generally a recovery phase, post this whole tariff Trump thing, the volumes will clearly improve over the next year or two. So therefore, I would believe that, it's worth holding on to.
Okay, all right. So that's the view coming in on Aegis Vopak. The next question that we have is from Rajiv Mudgil, who's writing us from New Delhi. He's got 100 odd shares of car trade, bought almost 40 days back is what he's saying, at the levels of 3,100. What should be the next course of action for him? Jay, I'll come to you on this one. He's sitting on a loss of over ₹1 lakh. Would you recommend him to continue to hold or sell, book losses? What is the strategy on the charts?
I think it's already started a short to medium term downtrend, and the momentum is to the downside. Now, taking a call on the to book losses is a very emotional decision. So I would leave it to the discretion of the viewer. But all I can say is the peak it saw about 3,200. That has got a reasonable probability that was an important top. If you were to ask me how much lower it can go, I would think the move from 3344 to 3291 was a first important large degree cycle. So the next support comes at about 1800 to 1800 levels, and if that were to break, I would think it's going to 1470. So watch 1800 as a very important level, but the momentum is to the downside, and the short-term momentum isn't yet abating. So a lot of caution here.
Got that view, Jay. But another caller coming in now. Gautam has a stock query for us. Gautam, very good afternoon. Welcome to the show. What's your query?
Yeah, good afternoon, sir. Hello. Actually, I want to buy like Ultratech cement or Siemens. Which one is best for a long-term purpose? Maruti Suzuki also.
Sorry. So your question is, is Ultratech cement the right bet for the long term? Is that your question, Gautam?
Yeah, correct.
Got it. Chakri, in the cement space, how do you view Ultratech? Consolidation has been one of the key stories over the last few years. Should he continue? Should he buy into it for the long term?
Absolutely, yes. Ultratech is clearly the market leader. And in an environment where the economy is again recovering, one of the primary beneficiaries, Ultratech having a national footprint and being the market leader, we'll see the first improvement in volumes. The pricing for the industry, has generally been slow to come by. But, these guys control the trade. So clearly, yes, hold on Ultratech for both the short and long term.
All right, okay, so that's the view coming in on Ultratech. The next question that we have is from Vanita Bala, who's writing us from Kuwait, asking about Bank of Maharashtra. Wants to know if she can accumulate at the current levels for this counter or not. Jay, I'll come to you on this one. Your view?
Yeah, see, most of the banks have had a good run, and I wouldn't. When she says accumulate, I would say this is the best time to do it because the Nifty Bank as a sector has got a very strong resistance about 63,000. So we are at 61,000 and change, and that being the case, the upsides are getting quite limited. So I would say hold on and trail with stop losses, and on the next sign of weakness, then you can probably start to look at taking profits. But at the moment, I wouldn't say add to it, but hold on to it. And there is a little bit of upside left, but not too much so that you can accumulate more and add to the existing positions.
Got that view, Jay. But the next question that's coming in is from Madesh from Tamil Nadu. He's asking if it's the right time to buy into EIH. Jay, would you recommend that trade?
That's hotels, right? EIH hotels. That's what you're talking about?
Yes,
okay.
yes.
No, it's not at the time for it to get into the stock. It's probably got one more low sequence to come through below 300. The stock also a bit volatile, and wait for the stocks to stabilize. And I'm of the opinion that one more low at least. So currently from the price of about 326 to 323, it's that's about at least 10% downside. So probably there is no guarantee that it will bottom around 300 levels. Let the market go below the February low and then mark a low, and then after it has signal that it's turning up, then we can consider that.
Okay, all right. So that's the view with regards to where EIH is concerned. We've got our next caller. Alok Kumar is calling us from Delhi. Alok, hi. A very good afternoon to you. How can we help you?
हाँ जी मैडम, ये मेरे पास है ब्लू जेट के 300 शेयर हैं, ये 530 रुपए के।
ठीक है।
तो ये पूछना है मेरे को, ये जो बढ़ेगा तो कब तक बढ़ेगा?
ठीक
अगर
है।
नहीं बढ़ेगा तो फिर क्या करें?
ठीक है आलोक, जब आपने ये खरीदा था आपने चार्ट्स देखे थे, आपने फंडामेंटल्स देखे थे, क्या देखा था?
नहीं मैडम, एक्चुअली में ये काफी एकदम से ऊपर से नीचे गिरा था अभी ये पिछले क्वार्टर में, अक्टूबर मंथ में ना, तो मेरे को लगा कि गिर गया, कंपनी तो अच्छी है तो इसको बाय करना चाहिए, लेकिन जब से गिरे जा रहा है।
ठीक है, ओके आलोक, समझ गई आपकी क्वेरी। मैं ये चक्री से पूछ लूँगी। चक्री जी, विद रिगार्ड्स टू ब्लू जेट हेल्थ केयर, you know, I mean, it's not been very long since it's got listed as well. What's the view like? Should he continue to hold?
You know, I think one of the reasons why it corrected, it was not particularly a cheap stock to begin with, but it has a very limited history in terms of, its operational history, in terms of, for us to take any constructive view. And therefore, I think I will remain on the sidelines.
Got that view, Chakri. But the next question that's coming in now, it's on Samvardhana Motherson. Now, it's a very interesting time for this counter because they have announced their next 5-year plan as well. And Shankar actually holds shares at 132 rupees per share, and he's holding about 1,000 shares. Chakri, let me come back to you actually, because the next 5 years seems to be very different from the last 25 or 30 years for Samvardhana. But do you think that there is a lot to still watch out for, and what would you recommend Shankar to do?
Samvardhana is a company which will clearly benefit now that the US trade deal, one, we had that 18%, two, even post the Supreme Court ruling, whether it's 15 or 18, it takes away a lot of the headwinds. Yes, auto industry will still have that, they operate at about 25%, but the company is extremely well positioned to benefit from its overseas divisions, and clearly would hold it at current levels for the long-term investor as well as for the medium-term investor.
Okay, all right. So that's the view coming in on Samvardhana Motherson. The next question that we have is from Sanjay, who's writing us from Gujarat. He's asking about KPI Green Energy. He's bought 100 shares at the levels of 530 is what he's saying, sitting on a loss of around 13,000 rupees. Jay, I'll come to you on this one. What are the charts indicating?
Yeah, it's an avoid at the moment. The stock isn't strong on the charts in the short term as well as the medium term, but it's trying to stabilize. So let it signal that it's put in a bottom. Bottom is always a process, and I would think it's trying to come out of that process, but there could be a little bit lower lows to come through. Yeah, but the medium term and the short term are going sideways. Probably that's you can take it as a positive signal, but it's not yet complete at the bottom. So I would just wait and watch for some more time before getting to or taking some decision on the stock.
Got the view, Jay. But the next question that's coming from Vinay is an interesting one. He's holding Ujjivan Small Finance Bank at 52.92 rupees per share. Let's pull up the chart. And he's holding roughly 17,000 shares. So it's a meaningful position that he's built in this counter. And asking, should he book profits, continue to hold, because he was looking forward for the universal bank license for the company. That still hasn't happened yet. But Chakri, do you think that he is in the gains, he can book some profits and continue to hold with that theory? What would you recommend for Ujjivan?
Clearly betting on a universal bank license for Ujjivan may not be the most appropriate sense, because the timeline is extremely unknown. It is not very clear whether the RBI, if and when, will do so. And second is, the company in itself is, while the space, the SFB space is still kind of reeling under pressure, it will kind of improve as the economy improves. The whole thesis against the whole thing is we are now in a recovery economy, but that will take time. So clearly, if there are profits made, then it's always worth taking some money off the table.
Okay, all right. So that's the view coming in on Jio and Small Finance Bank. But it's time for a rapid fire round on this edition of Ask Profit. Jay as well as Chakri, you both know the drill. Try to keep your answers as short as possible. The first question is from Murli Dharan, who's writing us from Pondicherry, asking if this is the right time to buy Manappuram Finance. Jay, would you recommend that?
I would just say wait for it, and it's not yet the time.
IRFC Jay bought by Vishakha at 88 rupees per share. She's asking if she should book out. What should she do right now?
Yeah, it's in a very strong downtrend. So yeah, if you are seeing some profits, definitely take it off the table.
Okay, Hindustan Zinc is the next one. Fanendra is holding 201 shares at the price of 495. Should I hold or sell? Chakri, your view?
Clearly hold. There's materials as a space and zinc as a space. We'll continue to see an uptick. With the whole world is recovery mode, so therefore clearly hold.
Dabar or M&M? Our viewer Sampath wants to invest for the short term. Jay, what would you recommend either of those picks?
As a sector, I'm avoiding FMCG, so Dabar is an avoid, and autos I'm very bullish, so go with M&M.
Okay, the next question is on Apar Industries. Suresh Mohan wants to know if he can continue to hold from a long-term perspective. His average buying price is 2937 and 345 shares is what he has. Chakri, your view?
Clearly this is a company which will benefit from the expanding industrial cyclical cycle that will come about in the coming 2 quarters. It's not immediate, it's slightly more far away, but clearly yes, hold it for the longer term.
Jindal Steel bought at 826. Jay, what should our viewer do?
Yeah, metal stocks are on a bullish uptrend, and Jindal Steel has been one of my favorites, so I would still hold on it. So it's still got residual bullish momentum, so I would anticipate further higher highs to come through.
Okay, the next question is on HAL. Vijay is asking this question. He's bought 93 shares at the levels of 4,300. He's sitting on a loss of around 29,000 rupees. Wants to know if he can hold or average out from a long-term perspective. Chakri, your view?
Clearly you can average out and hold because, this is a company with a very long, big order book, and that a market leader will benefit.
Right.
Is it a right time to enter parity phosphates? Jay, on the charts, what would you recommend?
Yeah, chemical stocks are starting to turn. Be a bit measured. Let it stabilize from here. But, there are better stocks than Paradeep. But Paradeep is not the best one. So watch for others. So avoid for the moment.
Okay, so Suzlon is the next one. Ashok is asking if he can average out at the levels of 44. Chakri, would you recommend that?
Suzlon is a long-term play. It's volatile. Some of its subsidies have gone. So yes, you can average down, but not, yes, you can average down.
Chakri, do you track Power Mech? Our viewer is holding shares at 2,700, sitting on a loss right now. What should they do?
Power Mech, sorry, I don't hold.
Well, that's the end of the rapid fire as well as this edition of Ask Profit. But Chakri as well as Jay, thanks so much for helping us solve these stock-related queries. But viewers, that's all the time we have on this edition of Ask Profit. Stay with us. India Market Close comes up next.
New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk.
Hello and welcome to India Market Close on NDTV Profit with Sharad Dubey and myself, Hiral Daria. An interesting day. We've given up those gains. What, 120 to 130 points
Initially
correction.
also we had pointed out that yes, these gains, will they sustain or not?
And that was the key question, right? That the kind of implied open gains that we were seeing this morning, now those were not sustainable 100% with the way markets have been panning out, because there's no strong trigger that will help you sustain, but your FI shorts is one of the key aspects that we're considering.
That's the best data actually for the day. FI shorts are 4-month low.
And to add to that, I think it's that short covering which is keeping the markets afloat in today's session as well.
Exactly.
Where from here on is anyone's guess, but let's quickly look at what the markets are looking like right now. We have corrected from the day's highest levels. I think it's 120 points correction if you see the intraday chart, but still staying above those 25,600 levels is one of the key positives that you should be tracking. In terms of the advanced decline ratio as well, if you can just pull up that chart which tells you the advanced decline ratio, because that will tell you how it's actually narrowed right now. It's trying to widen slightly here, but clearly your advances have cooled off. In fact, your declines have been catching up from what we started off at 350 declines versus now we're close to around 1420. So that breadth is something which is absolutely narrowing in terms of where the markets are concerned. Let's quickly look at the Nifty heat map, and then we look at Bank Nifty as well post that. And the contributors is going to be interesting.
It's pretty good, you could say that.
Yeah, I mean, you know, but still, I think, you know, my concerning area over here, Sharad, is your IT, which is one of the heavyweights, is still putting pressure.
Actually going down
Nothing
more.
has turned there.
Infosys, yes.
Reliance Industries was one of the major contributors. That has also come off slightly, and that's the reason why you're seeing that kind of a downtick. And you had an ICICI Bank and Axis Bank, which were seeing some sharp moves. Axis still holding on to gains of nearly 1% right now. But clearly, it's the IT pressure which is coming in. Pharma, again, mainly a Cipla, but not again that kind of contribution. IT is the one which is actually putting that kind of pressure right now, and few of the other names which have come off, but still the breadth is in favor of the greens, at least in terms of Nifty 50. Let's just look at the contributors slide. Because in the morning when we started off the trading session, Reliance Industries, HDFC Bank and Axis were the few names that were actually contributing to the kind of gains. Your Infos, I mean, your RIL somewhere has come on this side. I mean, no contribution from that aspect. So that is one of the pressure points right now because of the cooling off. But still, you have HDFC, ICICI, Axis. It's your private banking space which is ruling the roster, whereas an ITC, marginal dips there. Infosys, Hindalco is very interesting with the kind of dips that we are seeing here right now in terms of contribution. And Eternal has been doing its way since last couple of days. But clearly, the trend overall, there is some buying interest. I think it's the shorts which are being covered. But the key is going to be the factors that we need to watch out for with the broader markets. If we can just quickly pull up the mid cap and the small cap index before Sharad takes us through all the, key things we should be watching out for. There you go. Mid cap 150, 0.5%
That's
down.
where the support is not coming in. But Hiral, one data before you go is the rupee. That was a significant, strengthening in the initial hour of trade, and it's holding up. So that is also something good. That's something we should be watching out for. If the closing is good, then definitely there's something there.
Some respite for the next day of trade as well. But let's look at the factors.
Exactly. Overall, looking at the factors, the developments which have happened on US tariffs is technically still good for India. Brokerages also gave a thumbs up. A strong opening by rupee, that was one of the reasons why that happened. But coming back to the market, the Nifty technical still remained better than Nifty Bank. There is a little volatility in the day's trade, and the buy the dip strategy right now also works because the medium term setup is still strong. Also, looking at the newsmakers, IDFC First Bank, AU Small Finance Bank, UPL, that's where the big selling is happening. Of course, we'll discuss all those news flows to you. And Jefferies has also downgraded the IT stocks, and that is why we are seeing a lot of IT stocks also selling taking place, especially the mid-cap ones. Apart from this, the oil drop has also eased out. The tensions which are there between US and Iran, that is also good. And the European markets, right now I checked, they have opened in red. So global sentiment doesn't seem that it's very bullish. Definitely you need to wait and watch. A lot of things are being in the development, and India also looking at the markets is still having lack of triggers. So what will be the next move? That is something we'll be watching out for. Over to you, Hiral.
For that, the key triggers are the key aspects one is watching out for. But let's look at the watch list. BLS International, Aegis, Wopac. These are a few of the names which are buzzing on volumes. Now, tariff change is something which is having a positive impact on Trident, and when you talk about names like Keytex, Welspun Living is another one that you can add to this bucket as well. Gokuldas, though, under pressure. SKF also strong up move in today's session, along with a PCBL, which is again buzzing on the back of a strong volume built up that is seen on this counter. You have Morpan Labs, which has got an order, a double-digit uptick coming in terms of the stock price. CIE India has hit a one-year high. Adani Ports on the back of the MOU with NMDC and Vale Brazil makes a lot of things interesting when it comes to your metal companies in India, iron ore companies specifically, and that's what is keeping that stock afloat. Axis Bank, which is buzzing on a bit clarification, and Dr. Reddy's, where Apatacept BLA has been accepted by the US FDA. So strong moves on a DRL as well. Apart from this, IT stocks on the Jefferies downgrade. IDFC First is what you're talking about with the AU Small Finance Bank. UPL, I don't know. I mean, it's going to be more of a bull versus bear case scenario because the management is very bullish and the street is very bearish on this counter, and that's what we are dissecting on India Market Close. And a Godfrey Phillip, a super cool off coming in today's session after that 18% uptick that we saw last week. So strong moves, and these are the stocks that we're going to discuss on in today's day of trade. But let's get in Hemen Kapadia, as well as we have Chakri Lokpriya, who joins in as well. Welcome to the show, gentlemen, and always a pleasure to speak to you. Hemen, my question coming to you is, there is some bit of relief that's come in terms of markets. Though we are not able to sustain at the day's highs, we've cooled off from there. But the FI short position is very interesting, very encouraging. If you have to summate all of this, where does this take you in terms of levels one should be looking at in terms of Nifty and Bank Nifty?
A very good afternoon to you. Thank you for having me on the show. It's always a pleasure. Well, I'll go back a little bit in time, Hiral. I think post the budget and the trade deal, whatever, we've seen a 1770 point move in the Nifty, Hiral, and we are still digesting that. We've obviously not gone out above or below. A big bullish gap is still remaining open. The VIX has gone up to 14. And like you gave all those figures, In terms of levels, I think currently we are in a small trading range between 25,365 to 26,000. That is the range. If you look at the whole range, I know it's probably not very relevant at this point in time, Hiral, but it's 24,588 to 26,326. And I don't think it looks as if we are going above or below this level as of now. So, and like you said, IT is down, something else is up. Larsen all-time high. I mean, so it's all over the place. But frankly speaking, plus we have an expiry tomorrow, so that just sort of obviously rollovers positions have reduced significantly on Friday for obvious reasons. So these are the levels I had looked at, but currently nothing seems to be happening or working. It's very stock specific and very narrow moves. Hiral.
That's with regards to Nifty Bank 50. Heyman, quick picks at this hour?
Okay. Hiral, mission impossible, but I'll give it a go. Firstly, a buy call on Colgate. I'm going slightly defensive. I'll give you the technical logic briefly. Rounding bottom, oversold, positive divergence, crossover buys. A bounce is underway. One can buy Colgate at 2190, stop loss 2150, target 2260. I believe it's set for even more. The second one is IRCTC. If memory serves me right, I think it's getting out of FNO. Same logic applies. It's given a breakout from a 18 trading session range above the 55-day exponential moving average. Hiral, oscillators turning positive, volume spike, levels holding. Once again, similar logic, everything seems to say that and if IRCTC is going out of FNO, thank God, it'll start moving. So a buy on IRCTC at 645, stop loss 625, target of 685. Hiral.
So a buy coming in for IRCTC, but good afternoon, Chakri. Your view on the private banking space. What are the key, banking counters you're looking at?
The private banking space will clearly do well, with the economy recovering, and in spite of, the latest development of the Trump is actually a good thing, because somewhere between 15 and 18% is now going to be a tariff, and that's a number which Indian economy can live with, and therefore the banking sector will benefit from the increased credit growth that we will see going forward, and hopefully a stronger consumer. As the consumer stabilizes, we will see the private banking space also stabilizing, because PSU banks are more geared towards the corporate. So clearly, Axis Bank looks the strongest, and the whole pack looks good, but Axis Bank looks the strongest.
All right, not everything is good in the private banking space, and the thing which is hampering is definitely going to be IDFC First Bank, and that's of course the biggest loser also in the Nifty banking pack, and it's the stock of the day also. But to put that entirely into perspective, what actually this means, the important announcement is a 590 crore worth of fraud which has been detected in the Chandigarh branch of the Haryana government. That is the account which I am talking about. Now, this discrepancy was reported, and this branch itself is located in Chandigarh. And let me just give you an entire perspective of it. What's the main issue? The first main issue is definitely going to be the issues coming in from the government, because they have moved on their deposit accounts from we could say private banks to the nationalized banks, and in case a private bank comes in, there has to be an approval. Because of that, the disempanelment started for IDFC First Bank, and going ahead also this becomes a problem. But the bank had a con call also at around 8 a.m. and they had stated that the certain employees were working with the third parties to actually transfer the money. Some case was there definitely that no senior management till now has been involved as per the understanding. Apart from that, there is a filed police complaint, and in talks with the law enforcement agencies, some kind of recoveries also underway, and most importantly, this might take around 4 to 5 weeks of investigations of this fraud to understand how more things actually pan out. Now, let's see the brokerage stake, how things have panned out, and brokerages have given, you could say, a mixed kind of a call or a setup going ahead. And if you just like to point out the key brokerages, Ashika has stated that the operational issues which have been there, that is not major concern. Even JP Morgan has stated that the confidence, however, has been hit going ahead, and there might be a near-term drawdown likely as well. And looking at the downside risk, this might be a sustainable deposit outflows, and where it'll go to the other banks, be it private or public. So that's where the clarity needs to emerge. And Ashika, of course, is a little bit more hopeful than the other broking houses. And if you look at Nomura also, they have given an expected return ratio impact on the CET ratio, or you could say even the overall liquidity ratio. Some concerns definitely going to be there. So this is the entire picture for IDFC First Bank when it comes to the brokerages, management commentary, and also the picture of the entire setup coming in. But Hiral, apart from this, anything else on IDFC First Bank?
Yeah, I mean, in fact, it's going to be interesting to hear what the management had to say, what market experts had to say. Let's listen in. MD and CEO V. Vaidyanathan, where he says that the estimated financial impact of the Chandigarh fraud stands at around 590, I beg your pardon, odd crores. And he also addresses whether this number could change. Let's listen.
In terms of financial impact, the discrepancy currently found is about 490 crores. We have additionally, where we have received, I would say, certain reconciliation requirements. So then through the reconciliation, we observed that there is a discrepancy of 490 crores. We have additionally estimated rupees 100 crores. That's how it comes to a 590 crores of impact, which we have put out in the press release. We have put out this number as we could best assess at this point of time, but we feel that the number is broadly appropriate to the situation, current situation. We don't anticipate this to broadly move from here on to a great extent. It could be a small, as we sort of go through the process, maybe these numbers could slightly change.
Interestingly, when you look at it, it was not a digital thing, but it was more of a traditional
good old fraud.
Yeah,
Forge,
so maybe it was
check.
like the check issuances and not really the digital one which happened. And now there was a connivance of external parties along with the employees of the banks also involved into it. But yeah, so this had the impact. We are already seeing that in the stock price of both the banks which are involved. And the directive which has been issued by Haryana government, that's very clear in terms of preferring PSU banks with respect to opening up with of all the new accounts. And if you are not opening an account with PSU banks, there has to be a specific reason as to why you are not doing that. Okay, so for all the new accounts, Haryana government has directed that it has to be with the nationalized banks going forward. Even though Haryana government as such, as a proportion of overall government deposits, that's closer to 2.7%. And as a proportion of overall banking deposits, that's hardly 0.2%.
And when questioned about the fraudulent activity, RBI Governor Sanjay Malhotra said the central bank does not comment on individual institutions, leaving the matter in a limbo. Here is his first reaction to the issue.
See, we do not, as a policy, we do not comment on any individual bank or regulated entity. We are watching the developments. There is no systemic kind of an issue over here.
Okay, so that's the word coming in from the RBI governor, from the management as well. Chakri, a quick view when it comes to IDFC First, and with that you have a impact coming in on a AU Small Finance Bank as well, because Vaidyanathan did mention that there are a lot of other parties to this as well who could be involved. So far we don't know who it is, but at least a AU Small Finance Bank has been debarred. How are you looking at this entire issue?
It is a fraud, and these things happen periodically and over time. And in terms of the impact on IDFC in itself, it is not a number which will significantly impact the bank operations. It's unlikely to impact even the tier 1 capital ratios of the bank. Yes, incremental growth will kind of slow down because of, the Haryana government is stopping to work with IDFC banks, so the customers go away. And some amount of, slowdown in growth will happen, but otherwise I don't think there is any other systemic fear to be had in case of IDFC Bank.
Okay.
And in the case of AU, it's more probably a speculation at this point, so we should rather wait and watch.
Okay. Absolutely, Chakri. And Sharad, that's exactly what, Vaidyanathan also mentioned, and you had the RBI governor and Nirmala Sitharaman who mentioned that it's not a systemic issue. I mean, the moment they dive deeper into it, we will know where it is coming.
It's like an operational risk issue.
It's from the bank side, right? So I think that's what they will have to tighten from here on, and whether RBI is going to be willing to get any guardrails on place is the key question.
That's what the street is expecting. Some kind of announcement might come or something on the bank, some regulatory action maybe. But to give it more perspective, in the F&O space, a lot of stocks are buzzing in trade, and indices definitely, they look, pretty interesting. But Puneet is here to, give us the entire breakdown of the F&O markets right now.
Well, thank you for that. Just some stocks which are seeing, a lot of action, at least in the long unwinding side. We are seeing the PSU basket back in favor. So long build-up seen in Indian Bank. Cummins India post its results. We've seen a stellar movement in this particular stock, and long build-up yet again seen on this particular counter. When you look at short coverings, now PI Industries post results was a counter that was down and out in trade. Seeing some covering of shorts right now in the system. Whether it will lead to a move from here on will be something to watch. While RVNL also post the budget was out of favor, now again seen coverings of shorts in the system. In terms of long unwindings, now no prizes for guessing here. Both essentially the weakest stocks for today as well as the accident of the day, you can take your pick, but both these counters down and out. In terms of the short build up as well, you're seeing again not too much for guessing, but Coforge has broken that key level, and it will be interesting to get Heyman's view on this because it's broken now the 1300 price band as well. 1400 was also a key level for Coforge, but very interestingly that the company actually did a QIP just less than 6 months ago at around 16 to 1700 rupees per share. So a lot to watch for that, and similar one for its ITPI emphasis as well. So IT continues to be a pocket which is consistently seeing pressure, and both those stocks seeing short build up in the system right now.
Thank you very much, Puneet, for that. But let's just pull out HL's chart. We're seeing a good uptick coming in. Exchange filing, there is a clarification coming in. They have stated that there is no reported crash of the light combat aircraft Tejas. The event was a minor technical incident on the ground, and analyzing Tejas incident with Indian Air Force for the resolution. So it's a minor technical incident. It's not a major crash coming in. Let's just pull out the stock to see on the intraday basis what it's doing. Seems like a spike has come in. If you could just pull out the intraday chart. Yes, a minor spike definitely coming in. I just want to get your views in, Heyman, on this HAL.
Frankly speaking, Sharad hasn't been doing much. Hasn't been doing much for the last 1.5 years, I think so. And whatever news came out, it's not even broken the previous swing low. So I think probably it's digested. Whatever has happened is already built into the current price. 39.20 is important, Sharad. It hasn't closed below this level since weekend at 21st March 25. So till that doesn't break in terms of closing, it's okay. It's in a correction of a greater degree. So when a stock goes up 10-20 times, I mean, there's a natural consequence for a couple of years. It goes for a consolidation. That's what's happening on the bigger picture. Sure.
Okay, understood. So not very fond of in terms of HAL is what we understand from Heyman. But a quick view in terms of the defense sector as a whole, Chakri, if I have to look at it, I mean, in terms of calendar year 2025 as well, pretty good. This year, again, there are bouts of recovery that is coming in, but at times you see that muted moves also. Would you be a buyer with the way valuations are panning out, with the way geopolitical risks are increasing?
Defense is a growth sector, at least for the next 10 years. The valuations are kind of not cheap, but this is a sector that HAL or Bharat Electronics, Bharat Dynamics, all these companies will do well over the longer term. There was a point in time where you could trade in these stocks, but I think that is kind of now everybody is into this space. But for the long term, clearly it's a space to buy.
With regards to defense as a space, but it's that time of the day where we do a rapid fire with our technical guest. Heyman, quick answers with your target price and stop loss, if any. Blue Jet, strong trading volumes. In fact, the stock is up 9.5% in the last 5 days. Today, 10% up move already now.
Buy, stop loss of 543.
Okay. Aegis Warpac, again, strong volumes, strong moves in today's session.
Hold, stop loss of 222.
Okay. BLS International, probably one of the beneficiaries when it comes to trade deals, trading volumes very strong.
Hold with a stop loss of 268.
Okay, what about a Newland Laboratories? Again, a volume buzzer, 3 times 20-day average volumes.
Hold, stop loss of 12600.
And a Jindal Stainless, trading volumes is almost 97% above the 20-day average. That stock is up 4.5% today.
Hold 740, stop loss.
Interesting. I think, Himen, all of them have been holds, and I think that's what is encouraging for me right now.
Exactly. That's the point. And we could say the markets are also like that, Hiral, if you look at the entire setup coming in. But just the IT space is something, Jeffrey's downgrade was also there. We'll get into that space as well. But in the mid-cap IT space, any kind of, I want to get in Chakri on that. Any mid-cap IT product-based company is looking interesting here. We'll stay away from the IT space right now.
IT space is, clearly dominated by fear of AI, including a company like Microsoft, which is the leader, and it's investing, hundreds of billions of dollars into AI infrastructure, is also down 15% in the last few days. So against that backdrop, clearly, fundamentals take a backseat. But here, I think IT services companies will actually benefit, just like Infosys said on its analyst day. But this is a time to just wait until the dust settles, because every other day there is conflicting fears more than news.
All right, and now moving on, one of the top gainers in the Nifty index is Adani Ports. The company announced a strategic memorandum of understanding with NMDC and Whale SA to develop an iron ore blending and export ecosystem at Gangavaram Port. Mahima is here with more details. Mahima, what are the key details?
Right, Sharad. So as you rightly mentioned, Adani Ports, along with NMDC and Whale Brazil, have signed an MOU for iron ore. Now, Adani Port, through its subsidiary, that is Adani Gangavaram Port Limited, has signed a strategic MOU, and this is, an initiative which is designed to kind of strengthen the iron ore export value chain on India's east coast. With this development, overall, the capacity of Gangavaram Port will increase up to 75 million metric ton, and Gangavaram Port will become the hub for iron ore exports for India in this region. Now, if we take a look at what the collaboration will involve, there are 4 certain points. Development of an integrated iron ore blending and value addition ecosystem as a whole. Secondly, establishment of fully mechanized berthing and cargo handling facilities. Thirdly, port will be capable of accommodating Wellmax vessels with a carrying capacity of up to 4 lakh million metric ton. And lastly, end-to-end yard management, blending operation and vessel discharge and loading to enhance supply chain efficiency. So it's a big development, of course, coming in. That's why we're seeing the positive, reaction on the stock as well.
Thanks a lot, Mahima, for that, and welcome back as well. Just a disclaimer, NDTV is a subsidiary of AMG Media Networks Limited, which is an Adani Group company. Emin, just wanted to get your views on Adani Ports. Also, what will be the key, technical levels to look, and is the medium-term setup looking good now?
Frankly speaking, it's been a personal favorite for quite a few years. Technically, without doubt, it has been one of the strongest Adani stocks, if not the strongest Adani stocks. It's been a corrective for 1.5 years, Sharad. The medium-term setup is turning positive. We have been in a very large range between 1,000 on the downside and 1620 on the upside. We close above 1580, we come to 1620, and we close above 1620. I'm saying this is weekly, ideally monthly. We are going to 1800, 2000. Looks good. It's been consolidating for 1.5 years. Everything on technical parameters is improving. Above moving averages, oscillator slowly giving crossover buys. The setup is clearly turning bullish. Levels are slowly being overcome. I'd say if you're an investor, buy.
Okay, if you're an investor, buy Adani Ports. That's a word coming in from a technical analysis perspective as well. But let's look at Cummins India. Now, Axis Capital did have a plan to visit. The stock is up nearly 3%, and they've maintained an ad. In fact, they've hiked the target price to a 4,950 from a 4,600. What they're saying is that the outlook is very healthy when it comes to the industrial business, which is led by railways and marine. They're seeing a steady uptick when it comes to R&D investments and steady growth when it comes to distribution industrial revenues. Now, faster execution in the data center capacity addition is what they're staring at, and data center has been the buzzword along with AI so far, though Jeffries has pointed the pain in IT with the AI in it, but data centers is the clear buzzword from here on. Chakri, your view when it comes to a Cummins India on the back of the data center ramp up and any other stocks that you would bet on if you have to look at the entire data center play?
India is a power deficient country and lack of consistent power. And Cummins plays a very important role in bridging that gap. And data centers require phenomenal amounts of power. And a lot of data center capacity is on the cards of both public and private companies. Cummins is clearly the one of the main beneficiaries of that. And it's other businesses, industrial, marine, railways, all of that will benefit as the economy picks up over the next 2-3 quarters. So clearly, Cummins is a market leader worth buying onto.
All right, Hemen, what about the other capital goods plays? We have ABB. Of course, some volatility was there in that counter. We have Thermax, Cummins India. Anything which is looking good on the charts?
ABB looks interesting, Sharat. Only thing that's moved $1,600 in a month. So I wouldn't like to chase a stock in a market which is slightly wobbly. But yes, Thermax that you mentioned is very clearly looking positive, Sharat. We've formed a medium-term base, so not only a short-term, a medium-term bottom have been formed. A turnaround is on the longer-term charts also. I believe 3,100 was a level to take out swing high and resistance area. We're sustaining about that, though it's just the first day of the week. I assume we'll close about 3,100 this week. I think things should start looking better. Positive divergences, Sharat. Technically, a clear medium-term bottom. I'd say it's a trading buy. I would say it's a longer-term buy if the market were not so iffy and dependent on event risk. But yeah, standalone, Thermax looks interesting. I believe at the risk of sounding overly optimistic, 1,000-point rally is around the corner in the next few months, Sharat.
That's an interesting view coming in from Hemen. Chakri, I want to get your view on the cement stocks. Let's just pull up the Ultratech cement chart. Of course, a lot of broking houses reports are coming in, but the pricing is not showing that much strength. But nevertheless, the demand seems to be coming back. And if you're tracking this cement pack, Chakri, do you think this pressure, the pricing pressure and the demand, both of them will become favorable going ahead, at least in the fourth quarter?
Ultratech, KCC, Ambuja are pretty much the market leaders. And they're going to be pretty much determining both the volume trends as well as the pricing trends. And, given that, both, whether it's ACC or Ultratech, which are trying to increase market share and pricing is low down in the importance list. So I think in a recovering economy, you will see some amount of pricing for this industry has been very low for the last 3-4 years in a row. So I think volumes plus pricing, clearly this is a sector, ACC, Ambuja, Ultratech are worth buying into.
All right, so from cement to chemical space, let's move on. As UPL reshapes its entire business in a major restructuring exercise, we look into the bull versus bear scenario of the company. Take it away, Mahima.
Right, Sharat. So I think the pressure that we are seeing on the stock today is largely on account of, the fact that the debt position for the company is not going to change, which was something that probably the street was expecting, and that is why the street is disappointed. But with regards to the development, bull versus bear case, for our viewers, simpler structure, of course, should improve the focus and execution going forward. But overall, the holding company listing may introduce persistent discount as well going forward. In terms of where the guidance stands, overall, of course, before that, the overall unified UPL will get a cleaner crop protection valuation. This is something that, might be an attractive bet for somebody who's looking at this counter, but shareholders will face a dilution in terms of indirect global stake as well. Now, with regards to where the guidance stands, the management has kept its FY26 guidance unchanged. Revenue is going to be in that 4 to 8% range of growth, and EBITDA between that 12 to 16% growth. Debt remains unchanged. Now, this is the major reason as to why we're seeing the stock under pressure, because UPL Global has around 19,000 odd crores of debt standing and around 3,200 crores overall in terms of where the standalone debt stands. So the debt position still remains an overhang for this particular counter. New products and overall volume-led growth in Q4 can lift near-term growth, and we could see some, reaction on stock as well going forward once the Q4 numbers are out. But pricing pressure still persists on this counter, and we'll have to wait and watch out for as to how pricing versus volume-led growth pans out for this particular counter. In terms of the Advanta, that is, the IPO that is going to happen. That is something which is an optionality. We'll have to see and wait and watch out for as to how that pans out. But debt overhang is still not resolved, and leverage worries will still remain going forward as well. Lastly, UPL Global, led by industry CEO, has something which is looking for a sharper execution. But working capital is elevated into peak season, and normalization is expected only by March going forward. So this is the overall view as to how the bull versus bear stacks up for something like a UPL. And I think debt being a big overhang, and that is why we're seeing the counter in extreme red today.
Thanks a lot, Mahima, for that. Debt being a major overhang, that's the key takeaway coming in. But let's also listen into what the management has to say on the same.
We feel that it's the right time to unlock shareholder value in each of these platforms. And this is part of that reorganizing. As you know, we have already filed the DHRP for Advanta with SEBI and waiting for approval. This will be the second part of unlocking value, where the UPL shareholders, UPL Limited shareholders, will get mirror image shareholding partially in the crop protection business. And it will be automatically listed. And then we have Superform, where we could also raise capital and list it, and that is under discussions.
Okay, so that's the word coming in from the management, but the street not enthused. A 15% downtick coming in there. Heyman, would you use this correction as an opportunity to buy a UPL? Because very mixed views coming in from technical analysis. I would like Chakri's view as well, but what are charts indicating?
Very strong support at 620. Woeful underperformance over the last quite a few years here. That doesn't seem to be in a mood to go away. 810 is where we've turned twice in the last 4 years. And once again, we've turned from there. So going nowhere, markets have done phenomenally well. And sad to say UPL hasn't. So I'd say stay away. But yes, if you do want to take a calculated risk, keep a stop loss of 620. I think a bounce is around the corner. Volume is 2 crores. Normally these are selling climaxes. Level holds for 2-3 days. I think downside appears limited, but the level needs to hold here.
And a quick take, Chakri, on the fundamental view, especially if you take a long-term view on UPL, is this a good time to enter as a value buyer? And what are the key fundamental triggers now?
UPL today is a global company and it has all kinds of businesses, from crop protection and very related businesses, and that business structure allows it to hold a high level of debt, which is not really a company risk. But clearly that level of debt was expected to be simplified in the current restructuring, and I guess investors are not happy with the numbers that they see. Near-term issues aside, they're just cyclical. They happen every year in terms of pricing and all that. But clearly, I would wait until the dust settles. There's UPL wouldn't really buy it at the current levels.
All right. Thank you, gentlemen. Thanks, Chakri and Heyman, for giving your time for both fundamental and technical picks. But let's take a quick break. And on the other side, we get you the top buy today, sell tomorrow picks. Tune in.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And When the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate.
Welcome back to India Market Close on NDTV Profit. Let's just quickly look at Nifty 50 as well as we speak right now. Overall, if you see in terms of rates, there you go. It's again to see that buying interest coming in. We're above that 25,700 mark already. How sustainable is this going to be is the question, and whether we continue this upcycle, because this number looks pretty interesting. Nagraj Sethi from HDFC Securities joins in. Nagraj, welcome to the show. Again, from the day's lowest levels, we are seeing some bit of recovery. We've retraced that 25,700 mark on Nifty 50. There is participation coming in from banking majors as well, like an HDFC Bank, Axis. These are the ones which are contributing. What is the strategy looking like at this hour and your topics?
Yes, good afternoon. Yes, rightly said, market is showing some buying again after the intraday consolidation. If you look at the chart, overall chart pattern remains range bound within a broader high-low range. Volatility has been at the best, at the high, and global uncertainties and global rising escalations are impacting the market. The market has been moving around the support of around 25,400 to 25,900, 26,000 levels. And I think having bounced back from the lower levels of around 25,400, I'm expecting this to reach towards the important resistance of around 25,900 to 26,000 levels from the current area in the next at least a few sessions. And I have two picks from the long side. We know that broader markets, mid cap and small caps are started to outperform after a small consolidation. And I have two stocks. One is from PSU banking side, that is PNB, Punjab National Bank. It has been in a consolidation phase recently and witnessed sharp breakout from the lows of around 120 and placed at the higher levels. Overall chart pattern is indicating a positive bias. The volume has broken out during the upside breakout. Currently trading around 130.50. One can look to buy at this point of time. And immediate upside target would be around 137. One can place a stop loss at 126. And one more is the hemisphere properties from the realty side. This stock has been in a larger accumulation phase over the last few months, and it has faced a strong resistance of 200-day EMA. And recently, it has moved above that 200-day EMA and sustained above that level. Currently trading around 143. One can look to buy at this market current price, and immediate upside target would be around 149, and one can place a stop loss at 139.
Right, that's the view coming in from Nagraj on hemisphere properties. Jeffries believe that the AI may structurally change the IT business mix. Now, this is towards the consulting, while the shrinking managed services, but there are any companies where the brokerage house is betting on? Jasmeet is here to give us more details. Jasmeet, any clarity now in the business models when it comes to the mid caps, large caps, or even the product companies?
Well, sure. Thank you for that. Yes, the day by day, as we pass in the AI journey, we do get more and more clarity. And today we have Jeffries explaining what they feel about the whole Indian IT pack. Now, what they name the report is they name it as pain not over yet, but they're still selective. There's still hope among the large caps and the mid caps. Now, what they say is the overall IT mix will change eventually going forward. It will move towards consulting while shrinking the managed services given on the back of that new AI tool that is taking over the managed services. Well, they also make a note stating that they would require the overall trend to move cyclical and they would opt for selective approach than betting on the overall IT pack. Now, in terms of the estimates, they lowered their EPS estimate to 1 to 4% and they cut the target price for almost all the IT companies in the coverage by 33%. While they also make a note that the Q3 results saw a good up move in the stocks. Some stocks even rallied 8 to 10% post the result. But again, the AI fear is something that led the overall sector in red and the de-rating has started since then. Well, further, they also make a note that they like Coforge, Sagility and IKS remain their pick and they expect the growth for these three companies to be far more compared to the other pack. Well, they have also made key changes where they have downgraded a couple of stocks. Now, what they do is they have changed the stance of Infosys to hold, HCL Tech to hold, while Infosys to hold, and they have also cut the target price from 1880 for Infosys, they have cut it to 1290, while HCL Tech also has a cut from 1885 to 1390. If you look at Emphasis, again it turns to hold from initial buy, from rate changing from 3,410 to now 2,450, 1,000 rupee cut coming in for Emphasis as well. Now, in terms of the other further change, we say LTI Mindtree, they have changed the stance to underperform, while they have again cut the target price for LTI Mindtree, TCS and Exavid as well on the same back of the overall AI fear. While they have also given the scenarios where they say if it's the case one where the growth is maintained the way it was in last 10 years, then that's a best case. And the growth in line with the previous decade would be the best case of outcome what they see, while that would lead to the P maintained between 40 to 22x, where the current P is between 20 to 22 of all the IT players. While the second case is the worst case, where they see the overall outcome to see a 3% downtick in the top line, which might impact the overall IT pack of 15% going ahead, which is the worst case, and it would lead to further derating of the stocks from current levels to further 40 to 60% of it. While the third case shows no growth till FY31. So all in all, we see the brokerage penciling in to be selective over few stocks, but the fear still continues, though with the selection point of view.
Okay, the fears do continue when it comes to IT, and that profit booking is very interesting. FI holding in terms of IT as a sector is also at one of the lowest numbers that we've seen. Let's also get in Gurmeet Chadda, Managing Partner and CIO at Complete Circle. Gurmeet, welcome to the show and always a pleasure to speak to you. Hiral on the side. You know, I mean, we've been talking about what's happening with the markets. There is no particular signal that anyone is able to catch right now. Yes, if you're a long-term investor, buy on dips could be your strategy. If you want to stay put in terms of cash, sell at highs is what everyone is talking about. But let's talk about IT as a sector. There is pain. I mean, no one knows whether AI is coming in as a boon or a bane. How are you looking at it? Because the pain continues.
So, you know, sometimes markets tend to discount things far more than, you know, and front load both good and bad things. I think this is what is happening with IT services. And also apparently there's a lot of negative coverage coming from a lot of brokerage firms. I think it's for the near term probably looks done to me. And I also think that, as Mr. Chandra said, that a lot of our companies are also system integrators. And to just compare all IT companies and paint them with the same brush that this is just the labor arbitrage and a number of hours billable model, I think won't be fair. Plus, we would also, I think the market would want to see the commentary when next quarter earnings come. Market would want to see some more deal wins, how much they are actually doing in AI services. And then I think the market will start differentiating between, let's say, a pure IT services and an IP-driven company. So we like HCL Tech in large cap. We are also KPIT is looking very attractive after this recent correction. Again, a very IP-driven play. And we are looking at Persistent and Mindtree, whether, you know, if there's further correction, price correction, if that can be added. So we are not very negative. Also on broader markets, I think one good thing is if you see this quarter gone by, a top line growth is 11-12%. I'm talking about Nifty 500. The earnings growth, if you adjust for the one-off and labor code impact, it's about 18-19%. So I think earnings are coming back. And I think that matters more than anything else as far as we are concerned. And once we see another good quarter of double-digit earning growth, I think sooner or later the market should also catch up.
Exactly. Markets might do a catch-up if the earnings come in good, especially in the fourth quarter. But on the sidelines, on the RBI customary post-budget meet, Finance Minister has reacted to the latest US tariff twist, telling NDTV Profit that the Commerce Ministry is reviewing the situation and adds it's still too early for her to comment. Here's what she said.
Ma'am, my question is for you. How are you reading the latest US tariff twist emerging in past few days? Any impact on the Indian economy are you seeing?
On the Indian economy, I think it's a bit too soon for me to comment. But on the trade particularly, aside from the Indian economy in general, the Commerce Ministry is reviewing the situation. The delegation will have to take a call on when they're going to go for further negotiations. So it's a bit too early for me to comment.
Okay, so that was the word coming in from Nirmala Sitharaman. And also addressing the portfolio managers conclave in Mumbai, SEBI chairman said that the regulators have received representations from brokers seeking relief from the RBI's guidelines on collateral and bank guarantees used for proprietary trading. And to be noted that this is what actually puts pressure in terms of margins as well. Let's quickly listen in.
We are undertaking comprehensive reviews of different regulations. We have completed the review of mutual fund regulations, notified. Then we also completed for the stockbrokers regulations and notified. I had also announced that we would be undertaking a review of LODR and settlement regulations, of which the process is continuing. And we are also will undertake the PMS regulations in that spirit. This regulation was 2020 regulations, and in between, after 6 years, we have found that there are certain things which need to be rationalized, and based on industry and investors' feedback, we would be proposing. After that, as usual, we will have a consultation paper and we will get to know the scope of the regulations change.
That's the important commentary coming from SEBI chairperson. But moving on to our second rapid fire of India market close. And Nagraj, buy, sell, hold. We need fast answers. We'll start with the first one. Trident and Kitex Garment. It's buzzing in the back of positive tariff change.
Hold.
All right. AU Small Finance Bank. It's a DM panel by Haryana government identifying fraudulent activities at its Chandigarh branch.
Exit.
Exit coming in. Morpen Labs, the order, they have received almost 825 crore of it and they are expanding into high growth CDMO segment. Your views on that?
Buy.
Buy. Axis Bank issuing clarification, no plan to submit any bid for stake in Credit Access Grameen.
Buy.
All right, so these are the important stocks in the rapid fire coming in from Nagraj. But coming back to the markets, Nagraj, I want to take your BTST pick as well. Which stock will that be?
Hi, I am continuing with the same stock that I discussed a while ago. The first one is the Punjab National Bank. It is there around 130.30, 130.50, what we have discussed last time. And I'm expecting this to move further, at least in the next short term. As I mentioned, the upside target of around currently getting 130, 137 is going to be the upside target, and with the stop loss of 126. And the hemisphere properties that I discussed, it was in an accumulation pattern, now making an attempt to break above the accumulation, somewhere around 143, 144 levels. One can look to buy at this time, 143, and upside target would be around 150.
Okay, so that's with regards to where hemisphere prop is concerned. That's what you're looking at so far as we speak. But moving on, let's just quickly look at a few of the other sectors which we are watching out for. HAL is another stock I want to reconsider right now with the Gurmeet as well. You have IAF which has gone ahead and barred all the some of the fleets of HAL right now on the back of the crash that happened in the past. That stock is trading under pressure, though the management has come out and given a clarification right now as well. Gurmeet, any view when it comes to HAL and the defense pack?
Oh, it is disappointing, to see not only from a stock performance, but considering that how badly the country needs to replenish. We are left with 29 squadrons, assuming, if you have to prepare for a three-way war, we need about 44, 45, which means you're almost like 16 quadrants short. One squadron is typically about 18 jets. So that's like almost 300, 350 jets short. So anything on this obviously is disheartening. But so we like Bharat Electronics. The order book is excess of 80,000 crores, which is largely into radar, sensor, communication systems. So it's an across the board play, 27% kind of EBIT margin. So you can see visibility of 25,000 crore EBIT over the next couple of years. We like solar industries. I think if France was to acquire Pinaka multi-barrel rocket guided, I think this would be a significant event because Armenia is already bought. But if larger nations, Western nations, advanced nations can buy Indian assets, I think it would be quite an event. We also like Zen Technology. I think the stock has underperformed because the order book has been shrinking and they've revised the guidance a little bit, but it's a very IP-driven play, basically to simulators and anti-drone systems. And we are looking at more names like Azad Engineering, which is both into aerospace, oil and gas turbine parts, and across the globe. So we are as far as we are concerned, we think defense is a very structural long-term play, and the defense exports is something which can surprise. Also, once you see the localization playing out with Rafale and others, there are a lot of pick and shovel plays which will come into play. So we are a little more than 10% as far as defense goes in our allocation.
Okay. In fact, Morgan Stanley also has initiated an overweight on a solar industries, which Gurmeet is talking about. They have a target price of 16,151 on the counter, which is very steep. And what they are saying is that it's a defense-led multi-year growth opportunity for a solar industries. And the key risks would only include slower defense orders and execution. So that's with regards to solar industries that we're talking about. But moving on to a NDTV Profit exclusive, IDBI Bank divestment. That is what has been doing rounds and everyone's talking about it since quite some time. And that is something which has been discussed at the RBI board meeting. My colleague Srini joins in with more details as to what she's been picking up so far. Srini, what do you have for us? Because the divestment is something that everyone is eyeing right now.
Yeah, absolutely. In fact, Finance Minister Nirmala Sitharaman is holding a meeting with DIPAM, the department which is handling the disinvestment, to review the progress of the strategic disinvestment of IDBI Bank, is what sources, hinting at. In fact, the meeting is happening at 4 o'clock, is what sources indicating. And this follows the discussion on the stake sale at the RBI board meeting earlier in the day, where Senior Finance Ministry and Central Bank officials were apprised of the status of the transaction. As we reported, as we know, that DIPAM has received bids for strategic sale, and about 2 to 3 bids were received by the government, is what sources again hinted. The transaction, of course, involved the sale of both Center and LIC combined stake, which is 60% odd. And then the review is what sources highlighting that is expected to focus on the evaluation of bids and all the regulatory clearances and the timeline for closing the transaction. Now, timeline is very important, as you know that government is kind of maintaining the timeline of announcing the winning bidder by end of March. So we are very close. It's about next month. So that timeline is very crucial, and that's the review is coming ahead of that timeline which government has kept. And of course, before deciding on the winning bidder, this meeting is very, very crucial, because SM herself is taking the review meeting with the DIPAM department. So we will get to know more after this meeting how that will turn out. Back to you.
All right. Thanks a lot, Shrimi, for it. Interesting development coming in. But banking space is something which we are looking at. Gurmeet, of course, IDBI Bank, you need your views on that as well. And also IDFC First Bank, we all know what has happened, a big fraud. amount has been, announced by the bank itself, but they haven't recognized it as yet. The street is still confused on that. Just want to get your perspective on both of these stocks, Gurmeet.
So, overall, we are very constructive, Sharad, on this space. If you see over last few months, we've got more than $10 billion FDI and growth capital. And if you take the system is leveraged about 7-8 times, that's almost like $80 billion additional growth capital coming into the sector. And already, if you see the bank credit growth is upwards of 14-15%. So that's very good sign. Liquidity is improving, even the M3 supply is good. So we are pretty constructive. I think some rotation might happen because there's been PSU banks all the way for last couple of quarters. In fact, there is no valuation premium left. Very little left, if I would say, between, let's say, an SBI or SDFC. So that gap has got bridged. So some bit of rotation may have happened back in tier 1 private banks. Somebody like SBI has given a 13% guidance on credit growth, which is phenomenal, on a 50 lakh crore plus balance sheet. Stock continues to do well. So we are very constructive. In tier 2 banks, we have Federal and RBL in the portfolio. We are looking at some of the NBFCs as well. We do not have any exposure to IDBI or IDFC First Bank. I also think one should wait it out in IDFC First. It's very disappointing. And that's a risk you run, in financials. One event can just shave off your months of and maybe years of return and can lead to derating. Also, in issues like this, often there's multi-layers which happen. So there'll be a lot of recovery, asset seizures, which will happen over a period of time. So we should just wait it out. We should see if it's just restricted to this, or there is it's a little more widespread in terms of layering of this transaction. So better to wait it out. There are enough opportunities, and it's not that the stock is very cheap. So there are enough opportunities on the other side.
Opportunities, you should wait it out on IDFC First or EU Small Finance Bank as well. Nagaraj, quick view when it comes to PSUs, because we've seen 3 consecutive weeks of gains when it comes to the PSU Bank Index. There is some positivity that has continued in today's session as well. Would you still be a buyer on the charts?
Yeah, technically still it is positive, though it has more placed at the higher levels. I don't think there is any a reversal pattern forming at the higher levels. I think 1 or 2 days of consolidation, we could see this PSU banking sector moving up further in the short term.
All right, let's just pull up IDBI's chart as well. You're seeing a good uptick coming in for the counter. Nagaraj, your views on these counters?
Yeah, IDBI has been in a constant up move recently, tops and bottoms on the chart, indicating a sustainable up move. Currently placed at the hurdle of around 118, 119 levels. I'm not expecting a big hurdle for this time. And eventually we could see IDBI Bank moving above this resistance in the near term.
That's with regards to where IDBI Bank divestment is concerned. But moving on, you have the cement space, but a lot of brokerages, in fact, not only today, last couple of trading days, we've seen a lot of dealer checks that have come in on the back of price hikes that could be on the anvil. And what HSBC dealer checks are indicating is that stronger non-trade prices, where trade price hikes is not sustaining in the east and the southern region. Though the demand trends have remained pretty much stable, they're seeing that 5 to 7% growth. The next price hike window that would open up is April to May. And they have a positive stance as the profits are strong and the supply and demand is set to improve. They're saying it's too early to say consolidation would aid pricing. Likewise, Nomura is saying that it's positive in terms of near-term outlook. They remain bullish. The dealers are remaining confident on price and demand recovery. And the price hikes have been implemented and sustained. The prices currently being around 10 rupees per bag higher than end of Jan 2026 levels. And on the demand front, the conditions remain subdued with gradual recovery that could be expected. 40 to 50 rupees price increase per bag post March 2026 is what dealers are expecting. And you have a Nivama who's saying that the capex trajectory is steady and the price improvement is going to be something that you should be watching out for. Though JK Cement is a top pick on their radar. Gurmeet, quick view when it comes to cement as a space, taking the capex theme, the infra theme into consideration.
We had some mixed results. I mean, I think Ultratech was pretty good, pretty solid, very good guidance also. And Ambuja actually disappointed, was very soft. But I think I broadly think if we are of the view that the private capex cycle is started, government is spending as far as the government capex is growth, There's a bit of revival in housing as well. I think cement should do well, and there's been a nice consolidation. I think if we can see double-digit volume growth with some reasonable price hike, I think we should do well. So I think we are tracking this space, but we like more the energy space. I think that's where you are seeing a very structural demand, both in terms of grid modernization, in terms of cable and wires, in terms of industrial equipments, power systems, power electronics. So there are multiple headwinds and tailwinds in that space. So we like that space more. But cement is something we are looking at if we can find some value play here.
There could be some value emerging there, but thank you for that. Nagraj, quick view when it comes to Godfrey Phillip. I don't want to talk cement with you, but that stock is seeing profit booking after 18% surge last week. What are charts indicating? A further downtick, or is there a reversal possible?
Yeah, short term it is the reversal. The way it has declined 11% from the higher levels. The 200-day EMA has acted as a strong hurdle, and the stock price has reacted from the higher levels. I think there is a support for the stock around 2000 level, and even though further there may be some more consolidation after having declined sharply, and we could see the stock bouncing back from the lower levels from the support.
Right. Thanks a lot, Nagraj and Gurmeet, for taking out your time for NDTV Profit and giving views on both fundamental and technical basis. But looking at the markets, of course, there was a good gap up opening on global cues, but some kind of, you could say, downtick came in, and now a little bit of recovery coming in. But Nifty comfortably above that 25,700 mark, and that's a key technical level. Nifty Bank, however, if you look at it, there was a drag coming in, especially from IDFC First Bank. So the technical setup for Nifty was way better than Nifty Bank. Advanced decline ratio, they were gyrating throughout the day, but largely it has gone in the favor of declines. But some kind of recovery was definitely there in the last 10 minutes of the trade. But most importantly, the rupee, that has shown a good strengthening. If you'd like to point out the rupee, that has done a good work. It's near the 90.9 level, so that's something still positive. FI short covering was also good. And let's pull out the stocks in the Nifty index to show you what the constituents have done, and largely greens coming in from Adani Group, and also a lot of good banking names are doing well in trade, the private banks also. But remember, what's not doing well is definitely the IT pack and Cipla. That is where the concern is, but the biggest loser remains Hindalco. Remember, the IT stocks are down on Jefferies downgrade as well. But today has been largely a stock specific move, and 3-4 stocks have taken the entire limelight when it comes to news. And the sector specific news flows also is very much important. If you could just point out the sectoral heat map, PSU banking, MNC, infra, all doing well in trade. Remember, capital goods are the ones lifting the MNC stocks. But when it comes to sell-off, of course, the mid-cap and the Nifty IT, that is where the sell-off is coming in. But we'll take it. Most of the, almost 75% of the constituents in the sectoral space ended in green. Let's point out the BSE 500 index to show you stock-specific move where the movement is happening in. Largely CI Automotive on the back of the upgrade coming in, and Gujarat Alkalis, SKF, all these stocks also seeing good volumes. What's not working where the sell-off is there? The list is big. We just discussed Godfrey Phillips, but these two names, IDFC First Bank and UPL, both of them actually tanking in trade. This on the fraud announcement coming in, UPL on the concerns of restructuring but no debt coming in, but AU Small Finance Bank also, and the IT names taking the pain throughout the day. This is the main story for the markets today. But let's look at what to watch out for. That's tomorrow. Sudhir Pharma might be under pressure in the initial hour of trade. It's exiting from the anchor lock-in, and also there's an important board meeting where the fundraise would be coming in for Healthcare Global and IFL Finance. We'll be tracking them. And IPO, the week is becoming very busy to open today. One more is opening tomorrow. That is the PNGS Reva Diamond Jewelry, which we'll be focusing on. And earnings is also there. Schaeffler India and Elantas Beck. That's what we will be tracking. So that's all, folks, which we'll be tracking tomorrow. And for today, that's it for India Market Close. Stay tuned to NDTV Profit. And up next is Market Express by Himangshi.
New year, new power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a highlight of the day, gets you all the headlines that you need to know at this hour. But first things first, let's take a look at the markets before we head straight into the show. It was a range-bound day of trade coming in on Dalal Street. Nifty shut shop above that 25,700 level when you talk about trade. Meanwhile, Sensex also jumped more than 400 points. The advanced decline ratio, however, was tilted mildly in the favor of declines. But with that in mind, let's take a quick look at the sectoral picture before we move on to the top headlines. Most sectors ended the day in the green, leading gains at the top of the pack. Yet again, were PSU banks tracked by autos. On the flip side, what fared poorly yet again was IT. So that was one sector that was reeling under pressure yet again. But let's also get stock specific and onto a stock that was tanking in trade today. IDFC First Bank has disclosed a major 590 crore fraud that was linked to Haryana government accounts at its Chandigarh branch. Now, the bank has said that discrepancies surfaced after a department requested closure of its account, triggering a deeper reconciliation that also revealed mismatches across multiple Haryana-linked accounts. Now, you do have 4 employees who've been suspended, a police complaint that has been filed, and KPMG that has been appointed for an independent forensic audit. Coming in for this one, the bank maintains the issue is confined to a specific set of government-linked accounts and does not affect other customers. In terms of the recovery efforts, they're still underway right now, and the full picture is expected in the next few weeks. Let's also talk to you about brokerage reactions then that is sharply split when it comes to IDFC First Bank in terms of that fraud disclosure. So on one side, you do have JP Morgan that is saying that the episode has dealt a confidence hit, and while the balance sheet impact may stay limited, the brokerage also warns of a near-term drawdown, a risk of sustained deposit outflows, and even overhang that will persist until full clarity emerges at this point in time. Meanwhile, Nomura believes that the issue appears localized, but it nevertheless flags governance concerns and says investors must await clarity when it comes to the quantum of loss before assessing the true financial impact. So the one commonality here is the governance issues that are being highlighted by both of the brokerages, but overall both brokerages caution that sentiment may remain pressured until reconciliation and even recovery details become a little bit clearer at this point in time. Let's also talk to you about UPL. That is a major restructuring of its business that they've announced. The company is carving out its global crop protection operations into a new listed entity that is called UPL Global, while the existing UPL Limited remains the holding company. You do have the management saying that the move simplifies the structure and sharpens focus as well, but it does not fix the debt problem. And that is something that in fact caused quite the stir when you talk about the stock, about a 14.5% downtick coming in. When it comes to this particular counter, most of the borrowings shift to the new crop protection arm, keeping leverage concerns very much alive here. Let's also talk to you about Nuvama that has turned cautious on UPL. Now the brokerage has downgraded the stock to a hold rating and revised its target price as well to about 816 rupees per share. When you talk about some of the other commentary, Nuvama in fact also says that the debt overhang remains unsolved at this point in time, even as the company's proposed business split helps simplify its structure, but it also adds that the split does not actually reduce total debt, keeping leverage concerns intact. Now you do have the brokerage also expecting near-term sentiment to stay muted until the balance sheet picture improves. Let's also talk to you about Axis Bank that has quickly moved to quash market talk that it's planning to buy a stake in microfinance lender Credit Axis Grameen. Now you do have the bank that has said that it has not submitted and has no plans to submit any bid for the microfinance firm, shutting down speculation at this point in time that swept the markets. The clarification aims to give investors clarity and also prevent rumors from driving share volatility. When you talk about this particular counter, it was up about 1.5% at close. Let's also talk to you about Adani Ports, because you do have Adani Ports own Gangavaram Port that is set for a major transformation. As you know, you do have the company NMDC and Brazil's Whale signing a strategic pact to develop a large-scale iron ore blending facility and special economic zone at the port. Now, when you talk about the contours of this particular agreement as well, it was inked during the India-Brazil Business Forum in the national capital, aims to create an integrated ecosystem for blending, value addition, and even export of iron ore. And the project is expected to boost the port's capacity to up to 75 million metric tons, positioning it as a consolidated export hub when it comes to India, but also the wider region. When you talk about this particular collaboration, it's going to also be enabling the port to handle Whalemax vessels, among the world's largest ore carriers, significantly strengthening India's iron ore export capabilities and even supply chain efficiency. Let's also talk to you about Cipla that has supply to the US that has faced quite the setback coming in. The US FDA has flagged its Greek partner at the Rhodope facility, classifying it as OAI, or in other words, official action indicated. This means that serious compliance issues that need fixing are getting highlighted here. The site makes lanreotide injections used for hormonal disorders and some cancers as well for Cipla USA. So the stock in fact was tanking under pressure, recovered just a tad bit to end with a cut of about 1%. Let's also talk to you about Dr. Reddy's Laboratories that announced that the US FDA has accepted its application for a biosimilar. Now the product given as an IV infusion treats adults with rheumatoid arthritis. And this is the first such biosimilar application also coming in. And the company aims to also bring a more affordable alternative to the US market quickly. But with that in mind, let's also talk to you about Morpin Labs that has clinched a major win. Now the company has secured a multi-year CDMO deal valued at about 825 crore from a leading global pharma major. Under this agreement, Morpin will also be supplying key pharma components with delivery set to begin in the next 4 to 5 months. So that's the kind of horizon that you're looking at when it comes to this particular company. Execution of the contract is going to be continuing through the first quarter of the next financial year. Now, this of course marks a significant boost to the company's order pipeline and long-term growth visibility as well. So that's Morpin Labs that you're talking about, calling it a strong validation of its manufacturing capabilities. When you talk about this particular counter, it was buzzing away in trade, but with that in mind, let's move on to D Development Engineers that has announced fresh order wins worth to the tune of about 170 crore rupees. So that's the magnitude, the quantum that you're looking at here. The company, nearly 90 crore rupees of the total comes in as job work orders, and the development in fact strengthens the company's order book, also improves near-term revenue visibility. So that's definitely something that you're looking at when it comes to this particular counter, which was buzzing away in trade. Let's also talk to you about Godrej Properties that plans to develop an 18-acre land parcel in Thane, in Mumbai as well, and the project is expected to generate revenue to the tune of about 7,500 crore rupees. So that's the magnitude that you're looking at for this particular project. Let's also talk to you about Vikram Solar that has signed a major 2,000 crore rupee pact to secure 2 gigawatts of high-efficiency solar cells from Jupiter. The cells use advanced TOPCon and Mono PERC technologies and are fully compliant as well. When you talk about the ALMM variation as well, the deal also strengthens Vikram Solar's domestic supply chain, reducing reliance on imports and also supporting India's push for self-reliant solar manufacturing. Let's also move on and shift focus onto some more brokerage notes. Axis Capital is staying positive on Cummins India. The brokerage has maintained its ad rating and also hiked the target price when it comes to this particular counter from 4,600 rupees to 4,950 rupees. Axis also says that the outlook for the industrial segment remains healthy, driven by strong demand from railways and the marine verticals as well. It also highlights a steady rise in the R&D investments, along with consistent growth in distribution as well as industrial revenues, plus faster execution in data center capacity additions. That's something that's expected to further support growth as well. When you talk about their roadmap for growth, Axis Capital also sees a resilient, broad-based demand environment when it comes to this particular counter. Let's also talk to you about Jefferies flagging caution in the IT sector, saying that the shift from traditional services to consulting brings fresh challenges and risks despite recent falls when it comes to the stock price. Now, the brokerage sees more downside than upside for large IT firms. It also downgrades something like an Infosys, HCL Tech, Emphasis, even TCS, LTI Mindtree and Hexaware, while also highlighting mid-sized companies, the likes of Coforge, Agility, are set up for faster growth. So that's the entire roadmap that they also point out here. Let's also talk to you about Patel Engineering that has emerged as the lowest bidder for the Renuka-Ji Dam project in Himachal Pradesh, securing a major civil contract worth about 910 crore rupees. And this is according to a regulatory filing. The work includes building diversion tunnels, access roads, and even mechanical installations with a completion timeline of about 2.5 years. The award adds a key engineering contract when it comes to this particular company's infra portfolio. Let's also talk to you about Investec that has initiated a buy rating when you talk about Acutaas Chemicals with a target of about 2,500 rupees. Now, the brokerage expects strong growth to continue, driven by the Daro brand and also the company's base business. So that's something that you're looking at. Acutaas is diversifying beyond a single product, exploring new molecules and even electrolytes. The expansions are expected to start contributing from FY28, with sales and profits forecast to grow at a healthy pace over the next few years. So that's something that you're looking at when it comes to this particular counter. Let's also talk to you about Morgan Stanley initiating coverage when it comes to Solar Industries India with an overweight rating and a target of about 16,150 rupees. The brokerage sees strong multi-year growth led by the defense business, which is expanding rapidly, and steady growth in international explosives. Defense is expected to become a larger part of the company's revenue mix, while the robust order book supports near-term prospects key risks, let's also talk about those as well, because they're including slower defense orders or even execution challenges that make it to their radar. Let's also talk to you about some business news then. In an address to the media after the customary post-budget meeting, you do have the finance minister and the RBI governor explaining their stance when it comes to US tariffs and the broader economy. Now, FM said that it is too early to assess the impact of the latest US tariff changes on India. The comments come after the US imposed a fresh global tariff of about 10%, later hiked it to 15%. She added that India's negotiating team will decide when to resume talks on the interim trade pact, which has now been rescheduled at this point in time. On broader uncertainties, when you talk about those as well around the India-US trade deal, you do have the finance minister saying that such uncertainties are always there, and also reiterating that India remains committed to pursuing trade agreements, having already concluded FTAs with several countries. Let's keep it going with some more commentary at the meet. Finance Minister also issued a strong message to the banking sector as well. She warned banks against mis-selling financial products, urged them to focus on customer needs and core banking activities as well. Now, she's also said that many banks had shifted away from strengthening CASA deposits and moved too quickly into aggressive lending. So that's something that makes it to the finance minister's radar as well, reiterating that mis-selling has long been her concern and welcomed the RBI's upcoming guidance on this particular issue. Now, she's also added that the central bank's framework should make it clear that mis-selling is an offense and cannot be overlooked at this point in time. Also stressed that banks must prioritize trust, transparency, and even responsible conduct as credit demand grows. Let's also talk to you about some other commentary coming in from this particular interaction. Now, the FM's also said that the rise in gold and silver prices, that is being closely monitored by the government and the RBI as well. She's also noted that India is heavily import dependent when you talk about bullion, and while steps have been taken to reduce this reliance, domestic demand continues to outpace supply as well. Now, she's also added here that households traditionally view gold as a preferred investment, and the current surge in demand appears seasonal rather than structural. Now, she's clarified that the situation is not alarming at present, with both the government and RBI watching price movements. The minister also pointed out that global central bank buying is a major driver of volatility in international gold and silver markets. Let's also talk to you about Goldman Sachs raising their oil price forecast for the final quarter of 2026, now expecting Brent at about $60 a barrel. The brokerage says that prices could trend lower from current levels before stabilizing just a tad bit. But you do have Goldman expecting the cycle to turn in 2027, forecasting a recovery when it comes to demand and supply balances. So that's something that makes it to their radar. But for next year, it sees Brent averaging at about $65 a barrel. WTI is expected to average around $61 a barrel. Now, the firm says that the near-term softness is temporary, with fundamentals improving as the market moves into the next year. Let's also talk to you about HAL, that has clarified that there was no crash of the Tejas flight combat aircraft. The jet was damaged during a runway overshoot at an Indian Air Force base, reportedly due to a suspected brake failure. The pilot ejected safely. The Indian Air Force has grounded its entire fleet of single-seat Tejas jets for inspection at this point in time. This is the third major incident involving this particular aircraft, and a full investigation is underway. Now, let's talk to you about the Indian Navy that's going to be commissioning Anjadep, the third vessel in its 8-ship anti-submarine warfare shallow watercraft project on 27 February at Chennai port. The ceremony is going to be presided over by the Navy Chief Admiral as well, designed and built by Garden Reach Shipbuilders in Calcutta. You do have the vessel strengthening India's push for defense indigenization under the Atmanirbhar Bharat push as well. The 77-meter ship is engineered for coastal ASW operations, equipped with indigenous systems, including the Abhay hull-mounted sonar, the lightweight torpedoes, and even the ASW rocket. So that's something that you're talking about here. It's water jet propulsion enabled speeds of up to 25 knots, and the ship can also support coastal surveillance, low-intensity operations, and even search and rescue missions. And in a setback to industrialist Anil Ambani, the Bombay High Court has quashed a lower court interim order that had stayed proceedings to classify his and Reliance Communications bank accounts as fraud. A division bench called the earlier stay illegal and perverse, and also allowed appeals from 3 public sector banks and auditor. In terms of this particular matter, the stay had stopped present and future action by Indian Overseas Bank, IDBI Bank, Bank of Baroda as well. Ambani's request to pause the ruling to approach the Supreme Court was declined. Now, the banks say that the forensic audit underlying the fraud classification was valid, and that's the latest coming in on this particular matter. Now, the Karnataka government is likely to announce restrictions on smartphone use for children under 16 to address concerns over addiction, cyber risks, and even mental health. The proposed policy would encourage schools to monitor usage and limit access during school hours, with parents urged to enforce time limits at home as well. Now, you do have authorities that are exploring technical solutions, content filters as well, and even awareness when it comes to this particular matter, and that's something that you're looking at when it comes to this one. The move comes amid rising concerns about screen time, social media use, and its impact on behavior. You do have details that are still being finalized here, and the state is expected to roll out guidelines soon for implementation across schools and even families. Now on to some somber news then. At least 18 people have died after a passenger bus plunged into the Trishuli River in Nepal's Dhading district. Now, the bus was traveling from Pokhara to Kathmandu when the accident occurred on the Prithvi Highway late at night. Authorities say that 44 passengers were on board. Bodies of 12 men and 6 women have been recovered, including 2 foreign nationals who were New Zealand residents as well, and 26 injured passengers have been rescued and shifted to hospitals, with most transferred to Kathmandu. Rescue operations were hampered by darkness and even difficult terrain. Let's also move on. India has issued a fresh advisory asking all its citizens in Iran to leave the country immediately amid rising tensions between Tehran and the United States. The Embassy of India in Tehran has urged students, pilgrims, business travelers, and even tourists to depart using any available transport, including commercial flights. The advisory reiterates that earlier warnings issued in January and also asks nationals to avoid protest-hit areas at this point in time, stay in close contact with the embassy as well, and monitor local media for developments. Indians have also been told to keep passports and identity documents ready and register with the embassy. As tensions escalate at this point in time, concerns of possible US strikes is also something that you're looking at right now. And that's something that's adding a little bit of pressure coming onto this one. Now, United States and Iran are set to resume nuclear negotiations in Geneva on 26th of February, aiming to break the diplomatic deadlock over Tehran's atomic program. Oman, acting as a mediator, confirmed the next round of talks between Iranian Foreign Minister and US Special Envoy Steve Witkoff. Now, both sides hope to build on modest progress from earlier indirect discussions, though key differences remain on limits to Iran's enrichment and sanctions relief. So it's really nuclear usage that is very important to highlight here. The talks come amid heightened regional tensions and US military pressure in the Middle East. Officials say that the diplomatic push could offer a path away from escalation. And Mexican security forces have killed Nemesio El Mencho, the notorious leader of the Jalisco New Generation cartel, in a military operation prompting widespread unrest across several Mexican states. Now, El Mencho was one of the country's most wanted drug lords linked to large-scale drug trafficking and violent crime, had a multi-million-dollar US bounty on his head. Following his death, cartel members mounted violent reprisals, burning vehicles, blocking roads, and even disrupting travel. That's something that you're looking at. Governments including the US and Canada, issued safety advisories, flights were cancelled, and residents were urged to stay indoors as authorities work to restore order. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Benchmarks gain over 0.5% each to close in the green for the second straight session. Broader indices end mixed to underperform the Nifty and the Sensex. Sectors finish mixed with PSU Bank's index as the top gainer. IDBI Bank divestment gains momentum. According to sources, RBI board has reviewed the status and the finance minister is likely to assess the stake sale progress in a meeting today. IDFC Bank ends 15% lower after crashing 20% intraday after reporting 590 crore rupee fraud linked to its employees and the Haryana government accounts. RBI governor offers reassurance about the banking system, says it's not a systemic issue. Two main board IPOs open for subscription. Renewable energy provider CleanMax to raise over 3,000 crore. Cotton yarn manufacturer Shriram Twistex will raise a little over 100 crore. India has a clear path for getting trade deals done and will continue with that approach despite the uncertainties, says Finance Minister Nirmala Sitharaman. Sitharaman addresses concerns around the spike in gold and silver prices, seeks to reassure that despite the surge, the situation is not alarming and is being closely monitored. Citi believes third quarter numbers were above expectations, prefers private banks over NBFCs as the NBFC stocks are expensive currently, remains cautious on most two-wheeler names and bullish on passenger vehicles. In a setback for Anil Ambani, Bombay High Court lifts stay on RBI's circular classifying his and Reliance Group's accounts as fraud, allows banks to resume action against Anil Ambani and his group. India advises its citizens to leave Iran amid possible US strikes, asks them to leave by available means of transport including commercial flights. Advisory applies to everyone, students, pilgrims, business persons and tourists. and welcome. Very good evening, viewers. This is Malika Mishra on NDTV Profit, and you're watching Profit 360, a show that gets you all the insights on markets, national as well as international news. Let's first check how the markets closed today. Indian stock markets ended higher for the second consecutive session on the back of positive global cues and domestic ones as well. Nifty closed about 25,700 and the Sensex gained over 470 points at the end of business hours. The sectoral picture looked mixed, with PSU Bank though again emerging as the top gainer. Let's go across to my colleague Jasmeet Singhai for a wrap of the day's market action. Jasmeet.
Well, Nifty ends in green today, gains about 0.5% in trade, while Adani Ports and Dr. Reddy lead the gain in Nifty, both up about 2% in trade. While in terms of the broader market, they underperformed the benchmark, while Nifty Midcap ends in red, down about 0.10%. UPL and IDFC first lead the fall in Nifty Midcap on 50, UPL on the back of the restructuring and IDFC Bank on the back of the fraud news. In terms of small cap to 50, it ends in green, gains about 0.4% in trade today, while Blue Jet and Agni Swopark lead the gain in Nifty small cap to 50. In terms of the overall sectoral trends, the sectors end on a mixed note. Nifty PSU Bank gains the most and emerges as the top sectoral gainer, gains about 1% in trade, while Union Bank and Indian Bank gains the most in Nifty PSU Bank. In terms of Nifty IT, it loses for the second consecutive day in a day, and it also falls about 1.5% in trade today. Nifty IT marks its fourth consecutive day of decline in trade. In terms of what led to the fall in Nifty IT, Coforge and Emphasis fall the most in Nifty IT, both down about 3% on the back of that overall AI fear and Jeffrey's downgrade note. While if you look at the other key sectors, Nifty Pharma, Nifty FMCG gain for a second day in a row, while Nifty Auto, Nifty Financial Services gain for the second consecutive day in a row.
So second straight session of gains, but overall a mixed picture. Monitoring the latest market developments, external factors continue to take center stage in shaping corporate performance. Speaking on this, Surendra Goyal, head of India research at Citi, says there is a visible impact from tariffs and the ongoing AI disruption. He notes that investors are now sharply focused on the sustainability of earnings in this changing environment. Let's listen in to that exclusive commentary.
Today we are in a situation where there is a fair bit of uncertainty on quite a few things. Firstly, the tariff situation. It's been a bit fluid, lot of changes, and that does impact different companies in different ways. Secondly, you have artificial intelligence as a big topic. It impacts different businesses in different ways, so people are kind of looking at that as well. Is it a tailwind, headwind, doesn't impact the sector, and so on. So I think there are a lot of these factors at play, and which is why investors are focused on sustainability of earnings in addition to what companies have already reported.
And a quick update on the IDBI Bank stake sale as it enters a crucial phase. According to sources, Finance Minister Nirmala Sitharaman has reviewed the progress with DPAM as government moves closer to selecting the winning bidder for this bank. RBI and senior government officials have been briefed on the current status of the stake sale. Finance Minister, in fact, is likely to hold a meeting today to review the progress on the stake sale. But moving on, let's focus on an important commentary from IDFC Bank. In fact, in the context of the fact that the Haryana government has de-empanelled IDFC First Bank and AU Small Finance Bank for government business with immediate effect till further orders. Now, this comes after the disclosure of an alleged 590 crore rupee fraud involving accounts linked to the state government. Now, the bank has appointed an auditor for the probe, but what's the whole issue? Sharad is here to share. From the bank's con call, MD and CEO V. Vaidyanathan also said that the estimated financial impact of the Chandigarh fraud stands at around 590 crore rupees, and he also addresses whether this number could change. Let's watch it all.
In terms of financial impact, the discrepancy currently found is about 490 crores. We have additionally, where we have received, I would say, certain reconciliation requirements. So then through the reconciliation, we observed that there is a discrepancy of 490 crores. We have additionally estimated rupees 100 crores. That's how it comes to a 590 crores of impact, which we have put out in the press release. We have put out this number as we could best assess at this point of time, but we feel that the number is broadly appropriate to the situation, current situation. We don't anticipate this to broadly move from here on to a great extent. It could be a small, as we sort of go through the process, maybe these numbers could slightly change.
And viewers, when questioned about the fraudulent activity, RBI Governor Sanjay Malhotra said the central bank does not comment on individual institutions, leaving the matter in a limbo. Here is his first reaction to the issue.
We do not comment on any individual bank or regulated entity. We are watching the developments. There is no systemic kind of an issue over here.
In fact, Profit went to ground zero to the Chandigarh IDFC First Branch to gather more information on the very development that rocked the stock. Let's bring in my colleague Gurpreet Singh for the latest developments.
Right now, we are reporting from that branch of IDFC where we have seen around 590 crore scam has already been come to light. What we have learned from the official, we were trying to talk to the officials, but they are not talking to the media. They are saying that they are not authorized to speak to the media. But what we have learned from the official, they say when they have received an information from Haryana department, one of the department from the Haryana government for the closure of account, then they have realized some unauthorized transaction had been taken place, and when they conducted an internal audit of all the transactions, they learned 590 crore differences between the balance of the account. So after that, they are conducting multiple investigation to find out what was the main reason for the difference of these transactions. So what we have learned, they have already suspended some of the officials. They say they have already hired an external agency to conduct this thorough probe into this whole transaction, and strict action will be taken against those officials who are involved in this scam.
And viewers, on the sidelines of the customary post-budget meet between the Finance Ministry and the RBI, FM Nirmala Sitharaman reacted to the latest tariff twist with ambiguity. She said, while the ministry is reviewing the situation, it's too soon for her to give a definitive comment on the issue. This comes as India-US trade deal hangs in uncertainty once again after the US Supreme Court struck down President Donald Trump's tariffs. In view of the court's decision, Trump has in fact imposed global tariffs of 15% now. Listen in to the FM's reply to my colleague Shrimi's question on the same.
Ma'am, my question is for you. How are you reading the latest US tariff twist emerging in past few days? Any impact on the Indian economy are you seeing?
On the Indian economy, I think it's a bit too soon for me to comment. But on the trade particularly, aside from the Indian economy in general, the Commerce Ministry is reviewing the situation. The delegation will have to take a call on when they're going to go for further negotiations. So it's a bit too early for me to comment.
And as the Finance Minister opts for the wait and watch mode in light of these 15% tariffs that, by the way, are valid only for 150 days as per law, there are some Indian sectors that stand to gain in the interim. Dinesh Kanabar, CEO of Dhruva Advisors, crisply points at 3 sectors that could be better positioned in the current scenario. Listen in to know which ones they could be.
Energy products, pharmaceutical, electronics are the 3 items which cannot be covered under Section 122 and are therefore out.
And viewers, while the Finance Minister says that the government will sign FTAs based on the approach it has used so far, the changes in US tariffs are likely to impact the imports and exports in some sectors. Let's go across to my colleague Nisha Podar for a detailed analysis of these sectors that are likely to be losers and gainers.
I spoke to a whole host of tax experts and sourced some important information when it comes to the tariff, the new tariff of 15% that US has levied on India, and what is the impact on different sectors. So from 15% to 0%, that is the sector that we are really looking at. Right now, when we talk about the sectors which are really losing, which were exempt in our US trade deal, they were gems and jewelry as well as certain handicraft segments. So those are clearly the 2 sectors who stand to take a hit because of the changes, because the US trade deal that India signed had specific sectors of choice that they had negotiated. In this particular blanket order of 15%, the sectors that are losing are gems and jewelry and handicraft, which now are levied 15% versus 0% earlier, because that particular trade deal now is nullified. When we talk about the next sector, which are exempt at 0 and also remain neutral, so they include generic pharmaceutical as well as APIs, that is pharma as well as pharma ingredients, IT and electronic sector, Tata tea as well as coffee are also one of those sectors, and spices, which did not make much of a difference in the US trade deal that we had signed, has also been made a mention in this particular regard, and aircraft parts and small tropical fruits like mangoes. So this is the list of the sectors which really are right now exempt at 0% duty, even though there is a blanket reciprocal tariff of 15% coming in from the US, and these are the ones which are largely neutral because they already had these exemptions under the US trade deal that India had really negotiated. Now comes the winning sectors. So from 18%, now it has reduced to 15%. So those sectors include textile as well as apparels, leather and footwear, plastic as well as rubber, organic chemicals minus the pharmaceutical ingredients, and also machinery. So these are the sectors which currently will have a reduced tariff from the US exports from earlier 18% that was negotiated with the Indian government to now 15% under the new rules that have been put in place by the White House. Now, one particular sector has a mixed review. It is a bittersweet trade deal when it comes to auto as well as auto parts. So while the passenger vehicles and parts are exempt under Section 122, which has been really applied over here for that 15% tariff, so they are really exempt, but India, remember, loses the preferential tariff rate quota under Section 232. So in effect, what it means is that those auto parts and components and exporters who were under the US trade agreement were to be given preferential tariff rate under the quota of Section 232, they will continue to have a 25% tariff, and this top-up of 15% will not levy on them, but what they lose here is the preferential treatment when it comes to the quota which Indian government had negotiated for them. So it remains neutral for them, but without the preferential treatment, which can be seen as a negative. But on the other hand, remember, auto parts which do not come under Section 232, they are the ones which will attract now 15%. Remember that India exports around $6 to $7 billion in auto components to the US annually, and this is one sector which has some negative as well as some positive, while we have also listed out which are the sectors which stand to gain or are neutral or are really losing in this particular newly changed tariff regime. Nishal Maheshwari now joins in. Nishal, if you have heard our news break on which sectors stand to lose, gain, and it's neutral for. First, I'll talk about the auto and auto parts. While some passenger vehicles and parts are exempt under the Section 122, under which this 15% levy really comes on the tariffs on Indian exports, India stands to lose also the preferential tariff rate quota under Section 232. How do you see this particular bit? It's clearly negative when it comes to the preferential treatment.
So difficult to figure out basically which all companies were having this preferential treatment, but the larger ones basically were all coming under the 18%. And I think for them going down to a 15% would be somewhat of a relief. But what you have to see here is basically before this whole tariff thing started, they were at whatever 0% tariffs basically. So from there you are still up 15%. So I do not see much changes basically, given that we were at 18% and now come down to 15%. Some relief, but not much.
That's right. And the preferential treatment under Section 232, which really India had really negotiated with the US, that goes away. That could be seen as a negative. But the positive here, Nishchal, that I was trying to explain is also that those which fall under Section 232 in auto components and parts space, which export to US, will remain at 25%, and this 15% will not be a top-up levy on them. So this part is clear. When we talk about gems and jewelry business, Nishchal, that is one sector which has been hit because India had really negotiated for an exemption under the earlier trade agreement that we had negotiated with the US. Now, in this particular blanket 15% of reciprocal tariff, this particular sector, gems and jewelry, loses that particular exemption, and from now 18%, it really from 0% earlier, it now moves back to 15%. How do you see gems and jewelry sector?
So, Nisha, I think basically we have to wait and see how this whole thing pans out, because what I hear from the US government that the earlier deal is on, and even the Indian government is saying basically that they are waiting for the new guidelines to come. This is only a Supreme Court guideline basically which has gone out there, and they are waiting for the executive orders from the US government before restarting the negotiation. So I wouldn't really jump to that some sectors are benefiting, some are not, and our US deal is off. I believe basically there may be some negotiations, fresh negotiations basically which needs to be done. But I think mostly the US deal, more or less what all has been discussed earlier, and it has been a prolonged discussion. So I believe that that is going to continue. So I wouldn't jump saying immediately that things are going to change.
All right, Nishchal, thank you so much for joining for a quick reaction on this. So what remains is that this 15% tariff is also temporary in nature for 150 days, and some have legally challenged it being levied as well. So a lot needs to be seen, but at the current moment, these are the sectors which are gainers as well as losers. Malika.
Thanks so much for that roundup, Nisha. Of course, those are the sectors that one needs to keep in mind in view of these negotiations that may go on for a long time as Trump's tariffs now stand dull and void. But at the customary post-budget meeting, the RBI governor also emphasized the central bank's firm stance on curbing excessive proprietary trading by brokers funded through bank lending. He stated that a comprehensive regulatory framework is now in place, comments and suggestions from stakeholders have been invited, and at this stage, no changes to the proposed framework are being contemplated. This is important as brokers have been largely asking for the new rules to be revised. Listen in to the Governor Sanjay Malhotra on the same issue.
We now have a framework for making regulations. So before making any regulation, we publish the draft, we invite comments, suggestions, and this has been done, after proper consultation with all the stakeholders. And initially in the draft, I may mention, that this particular proprietary trades, lending for proprietary trades was prohibited in the draft. And after that, after taking into their comments and suggestions, we have now allowed it with certain prudential norms. There is no change that we are contemplating.
Complementing this regulatory resolve, Finance Minister Nirmala Sitharaman highlighted her long-standing concern over mis-selling by banks. She stressed that banks must prioritize their core business, which is raising stable CASA deposits and focusing on lending rather than diverting efforts to aggressive cross-selling of third-party products. Listen in.
Gradually, with the economy and the types of businesses growing, banks have spread themselves to do many other things, which is all right. I'm not against that. But they have reached a point, not now, a couple of years ago, they had reached a point where they did not have that comfort of the CASA money. And as a result, with the government also tightening on professional handling of the banks, performance, also making sure that the banks understand what the credit requirements are and so on, they had to keep lending.
and inclusive of the aberrations which happened without checking on the security, you lent and whatever, they went on the other side far too soon. You didn't mobilize CASA as much as you needed or as much as there is availability.
And in some other news, tech giant Amazon has opened its second largest office in Asia in Bengaluru. The massive 1.1 million square feet campus will house over 7,000 employees. Amazon believes the new facility will strengthen its long-term commitment to India, boost innovation and support thousands of jobs in the state. With world-class infrastructure and sustainability at its core, this new campus marks another big milestone for Bengaluru as India's tech capital. Indians in Iran have been advised to leave amid possible US strikes in the days to come. In its latest advisory, the Embassy of India asked Indian citizens to leave Iran by available means of transport, including commercial flights. The advisory applies to everyone in Iran: students, pilgrims, business persons, and even tourists. Indians in Iran have also been advised to have their travel and immigration documents, including passports and IDs, readily available with them. They have been asked to contact the Indian Embassy for any assistance on the same. Viewers, moving on, the third event of the 2026 DP World PGTI season is underway at the historic Tollygunge Club in Kolkata. Jointly launched by DP World and the Professional Golf Tour of India, the tournament marks another key milestone in their partnership, which aims at basically strengthening professional golf in India. Our next report telling you more.
Third event of the 2026 DP World PGTI season got underway at Tollygunge Club in Kolkata. The tournament is jointly launched by DP World and PGTI, and it marks the third event of the 2026 DP World PGTI season. The launch of this partnership reflects a shared commitment to strengthen professional golf in India by creating more competitive opportunities and raising the overall standard of the tour and of golf as a sport in India.
So I think golf in India is going to go really a fastest growing sport. After cricket, obviously, we can't catch up with cricket, but I think with the support of Mr. Kapil Dev, Mr. Amitabh Kant, I think this game is going to go really, really big guns. This week at Tollygunge Club, we had a great tournament, the golf course. This is the traditional home of golf, Calcutta. The Royal Calcutta Golf Club was the oldest club outside of the British Isles. So thank you very much to the Tollygunge Club. It's always great to be in Calcutta. It's sweet Bengali people with their great food. I'm a big fan. Always love coming back to Calcutta.
The third event of 2026 DP World Players Championship witnessed participation by 126 players. The stellar field at Tollygunge Club featured leading Indian professionals like Om Prakash Chauhan, Manu Gandas and Shaurya Bhattacharya. The DP World Players Championship is creating more opportunities for Indian golfers and opening new pathways for them to compete at a higher level. Talking about the latest DP World Players Championship in Kolkata, it was Om Prakash Chauhan who held his nerve to lift the trophy at Kolkata's Tollygunge Club. His impressive performance, marked by 8 birdies, earned him a prize of Rs 22,50,000 and a significant leap in the DP World PGTI Order of Merit, moving from 16th to 4th place. Chauhan, meanwhile, seized his 12th professional win, ending a 2-year winless streak with a 6 under 64, culminating in a 16 under 264 total. Chauhan attributed his victory to a return to rigorous practice and a change in mindset.
मुझे बहुत अच्छा लग रहा है क्योंकि मैं आफ्टर 3 इयर्स बैक मैंने मैच जीती है. सो लास्ट ईयर मैं थोड़ा अपने स्विंग के साथ स्ट्रगल कर रहा था, बट इस टाइम थोड़ा सा मैंने अपने स्विंग पे वर्क किया है, इसलिए.
कैसा टूर्नामेंट रहा कोलकाता में, टॉलीगंज क्लब में, ये पूरा जो ऑर्गेनाइजेशन था, कैसा
कोई एक्सपीरियंस?
मेरा एक्सपीरियंस बहुत अच्छा रहा था क्योंकि इस गोल्फ कोर्स में हमेशा अच्छा खेलता हूँ। बस ये है कि मैं यहाँ जीता नहीं था, तो मेरा एक ड्रीम था कि मुझे यहाँ जीतना है और वो चीज़ पूरी हो गई।
Viewers, that brings us to the end of this edition of Profit 360, but do stay tuned to NDTV Profit to stay ahead of all the news and updates. This is Malika Mishra. Thanks so much for watching.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. I've got a very interesting company. It's been buzzing in trade also, but I won't give you the name before that. I'll give you some hints. Try to guess it. It'll be easier for you. The company manufactures heat exchange and HVACs. It's an interesting full form. I'll give you that option, but this is a hint. The second hint is it's based out of Neemrana, Rajasthan. It's coming from RICO. It's like an SEZ with a lot of benefits. Also, the stock, it has been listed in 2024 and it's up 313%. When it comes to the IPO price, that means it's been a multi-bag up. So now you must be understanding what this company is all about, and largely in this sector itself, if I talk about it, there's only one proper play. Of course, there are some larger MNCs also who are having some kind of a product portfolio, but specific is KRN Heat Exchangers. This is the company I'm talking about. Everybody is talking about it. But why are we calling this company right now? Earning season is over, data center theme is also playing out, stock is also buzzing in trade. So let's list down the key reasons why KRN Heat Exchanger is important. The growth plans for 2027. This becomes very much important. Anything you see, any cooling solution you see, there needs a lot of structures behind it, and that is where this company comes in. What will be the margin outlook of fourth quarter, and will there be more inventory gains? We already saw that in Q3, and that's why the EBITDA margins were up. That is one question to be asked, and of course this is the second question. Both of them are correlated. And also, apart from these numbers, we'll be asking about the new bus AC segment. They have acquired an interesting name, so we will be asking the management what's the outlook going ahead, what's the incremental benefit coming like. And if you look at it, the international expansion plans, global heat is also there, global warming is there. It's less than 20% of exports, but nevertheless, Middle East and US, that's where we'll be focusing. And on the show, we'll have Santosh Kumar Yadav. He's the CMD of KRN Heat Exchangers, and everybody's talking about this stock. So that's something which we'll be watching out for. But let me give you some more details about the company, what everything is all about, and then we'll get our doubts clarified also by Santosh. The first thing is it's based out of Neemrana in Rajasthan, and company designs, manufactures, supplies tube type heat exchanger. This is something which you do not see. It's inside the ACs, inside the compressors. So you might see the cold, but the entire machinery is something which the company makes inside. This is used for heat ventilation, AV and registration industry. So I'm talking about HVAC. So that is where these formula start coming in. Now this company was listed on both the exchanges on 3rd October 2024. Remember, the financial history, the shareholding history will be very limited because it was recently listed, it's just been 1 year. The company has acquired bus AC division of Spear Refrigeration System. That is where the incremental question starts coming in. Company makes 5 mm to 15.88 mm heat exchanger tubes. These are those smaller tubes which are combined together in different AC and ventilation setups. Now the company is having 2 manufacturing facilities, and both of them are in Rajasthan. And looking at that production, that is around 10 lakh or 1 million units is something which the company is producing. In terms of components, 84% sales are being done domestically as well. That means the remaining 16% is for your exports. HVAC full form means heating, ventilation and air cooling. This is something which you should know. But to whom do they give their business to? To the OEMs also. That's why we call them original equipment manufacturers. These are the small alerts which is very important when you analyze a company like KRN Heat Exchangers. There are key triggers for it which is very much important. Management has reiterated 20 or 50% capacity utilization for the next 2 financial years. This is very much important. You should note that down. The second trigger is the data center order growth. That is where the interest is coming in the markets, and expected that the medium term growth would be very strong. The tariff overhang that has actually gone, and the company might be increasing their penetration strategies, at least for European Union and America also. Remember, Middle East also, they are having a good proportion of revenue coming in the exports. The data centers business, they're capturing 15% of market share over the next 3 to 4 years. That is why the street is very bullish on this counter, and a very significant up move has come in. I'll give you all those details in the street cred. But the export revenue breakup, how things are looking like, the real action, of course, Middle East and America, that is where the entire setup is looking like. And this industry itself is growing, and it's a sustainable growing coming in. Also, let's look at the other key numbers also apart from this. The marquee clients are there. Whichever AC you want, major of them, the key components are there from KRN Heat Exchangers. We check Daikin AC, Schneider, all of them,